Frankly, if you just look at yesterday's conversation that we had with KRBL, they mentioned the same thing, that their profitability, despite the uptick in prices, is barely going to be higher in FY27 or FY26. And they are worried about what will happen to paddy prices in the course of the year. If you look at what's happened, for example, in dairy, raw milk prices have risen week on week for the last many weeks. This is as per one of the corporates that I spoke to on condition of anonymity who told this to me. And therefore, if we believe that just the end product prices moving up is a condition for higher margins, may not necessarily be so. These guys are doing this to protect the impact on margins that has already come in because of the input cost prices rising for many weeks at a stretch. So just a caveat there, because a lot of those stocks have been active for the last few days, especially yesterday. It may not be all hunky-dory. In fact, the situation may quite be the opposite of what hunky-dory sounds
Important
like.
that you point out, because KRBL started rising during the conversation that they had with us and ended the day, I think, with gains of 8% or thereabouts, 7.6%.
Yeah,
so
but the point he's making is that KRBL
Exactly
is not going to be making profits.
And the management has said it itself.
Yeah.
So I'm saying be careful is what I'm saying.
Yeah. No, so just a couple of points I want to come in on. And Neeraj, you made the point about CAS. And I wonder if this system, even though the intentions may have been noble, is a bit of a self-inflicted beating right now for the markets. Did we really need an additional uncertainty of CAS right now for investors in India at a time when Indian markets are becoming some of the worst performing in the world? That is just one question that comes to mind. And of course, viewers are free to come in and give their thoughts on this. And the other one on commodity prices, just a note about how India has okayed imports of certain wheat products as well. I mean, we're one of the granaries of the world. So this space is one to watch out for. Of course, one narrow prism would be the profitability of companies that are in this trading space. But if you have that level of food inflation, if you have weather disruptions really impacting food resources, then the ripple effect is going to be much wider than what X, Y, and Z company is doing. So just watch out for a couple of things there. In terms of other factors, it's likely to be a range-bound but volatile session with monthly F&O expiry adding to the noise. The broader setup remains cautious, but the downside is supported around 24,000. Neutral to mildly bearish below 24,300. Immediate supports at 24,150 to 24,100. Strong support at 24,050 to 24,000. Immediate resistance at 24,300 to 24,400. And the next upside target after a decisive breakout will be at 24,500. For the Bank Nifty, neutral to mildly bearish below 58,000. Immediate supports at 57,300 to 57,100. Major support at 57,000 and below 57,000. The levels you need to look out for is 56,600 followed by 56,200. Resistance at 57,900 to 58,000. A stronger one at 58,135 to 58,175. Options positioning also supports the 58,000 mark as the major ceiling and 57,000 as the major floor. So look out for that range as far as the Bank Nifty is concerned. But let me go across to Puneet for the F&O setup on the monthly expiry day.
Well, most certainly, thank you for that. But largely what we have seen, in the month of August and lastly the weekly and the monthly expiry coming to an end, we continue to be trading in the range bound, 24,000 to 24,400 and 500 odd levels. Now, we're stuck bang in the middle at this point of time. So hopefully what you have seen, and if you had a one-line summary of the index, range bound would be that. You've also seen surprisingly for the cash markets though that depending on the last 3 to 4 days, August could actually be the first month in the cash markets that there has been some form of buying by foreign investors. Now, it's minuscule right now, very lower amount of almost just 3 to 4,000 odd crores, but compared to the rate that we've seen consistently over the last few months, this could be at least something to watch out for. as we go into the month of September, and hopefully the festive cheer gets some of that back to the markets as well. Because while quarter one earnings have gone through, you've not seen any kind of triggers visible. The index long also for foreign investors very depressed at the 9 to 10% range, put call ratio at that neutral range as well, and open interest distribution also continues to be similar trajectory that we've seen. That 24,000 continues to see active interest from the put sides. On the other call side, you've seen actually some deceleration about 24,200 all the way up to 24,600. So as we wrap up the month, been largely languishing in that sense with no key triggers in mind right now. But hopefully a better performance in the cash market that we've seen in this month around, hopefully that could be something to watch out for in the month of September as we go into the next expiry.
Okay, thank you so much for that, Puneet. Let's start with the watch list, and the big one to watch out for is TCS. They will be acquiring Porsche AG's ARM MHP management for 320 million euros. They've signed a 5-year strategic pact worth 1.25 billion euros with both Porsche AG and MHP. What's the deal all about? What are brokerages saying? Morgan Stanley has maintained an equal weight on the stock with a target price of 2,200. The MHP acquisition strengthens TCS's capabilities is what they say. That's their assessment. Porsche's engagement provides a long-term strategic relationship. They see the acquisition to be complementary to TCS. Think the financial impact of the acquisition would be limited. It would add 3% to revenue growth and less than 1% to PAT, assuming mid-single digit margins. See TCS intensifying its strategy to use the M&A route to plug in white spaces. Should be a medium-term positive. See investors' key concerns are slowdown in the auto vertical in the near term and also a declining revenue profile of the acquired entity, and this part is important. I'm actually going to go over it again. They're seeing key concerns for investors on the TCS deal, so watch out for that, whatever the stock reaction is, as a slowdown in the auto vertical in the near term and a declining revenue profile of the acquired entity. Pace Digitech is the other one I'm looking at. The subsidiary has won about 92 crores order from BESS. It's a BESS order from Kalpa Powers. The order is for supply and commissioning support for BESS, that's battery storage systems, and that's the battery energy storage system, and the order will be completed by December 31st. The manufacturing capacity for this company is doubled from 2.5 gigawatts to 5 gigawatts, and the company is targeting a phased expansion to 10 gigawatts by FY27 end. Meesho's is the third one because one big seller came in and there was a horde of buyers, so which is why I've picked Meesho, just because any kind of movement of this nature is an indication of appetite for the company and the vintage and caliber of those who are coming in to buy. So Y Combinator backed entities sold about 1.05% to be precise, equity stake via block deals at 200.01 per share. The stake valued was about 969 crores. The shares were bought by 20 domestic and global investors. It's a marquee list. Nippon India Mutual Fund was the largest buyer. HDFC Standard Life Insurance was there. Others included Goldman Sachs, HSBC Mutual Fund, BNP Paribas, Societe Generale, the Kuwait Investment Authority, etc., etc. So that's really what was interesting. By the way, earlier this month, Elevation Capital and Peak also sold about 2.27% stake. So it's on the face of it a block deal, but just the caliber of people buying, it makes you think a bit about Meesho and what that stock is about.
Certainly. Quite a few big deals taking place, and certainly something to track. Not the biggest updates for you. Afcon's infrastructure is, they've gotten an arbitral award in their favor, 335 crore rupees, pretty substantial. The award is a result of arbitration proceedings between the company and the Uttar Pradesh Expressways Industrial Development Authority. It will positively impact their financial position according to the company, but that is if the counterparty does not challenge that award. So there's a caveat there. Bear in mind that if the stock reacts, this is probably the reason why. GPT Infra Projects, the company's arm has been declared L1 bidder. That's the lowest bidder for an order for the provision of electronic interlocking systems at multiple railway stations, and this is for close to 100 crore rupees, and so therefore it is close to winning that order. Jefferies on Indian hotels was actually an interesting update. We will talk about the stock in more detail. We'll get your conversation with the management as well. Jefferies has maintained a buy with a target price of 875. They say that simplification continues. The growth outlook is strong. The all-stock deal values Oriental Hotels, and of course they're speaking about that deal to acquire Oriental Hotels at a 50% discount to Indian hotels. The deal is EPS accretive from year one itself, and Oriental adds non-LFL like-for-like growth with scope for margin and revenue improvement. Operationally, Q2 trends remain strong, and FY27 revenue per available room growth could stay in double digits. So all positive for this particular stock. Of course, we'll speak to the management and analysts about it.
Yeah, looking forward to that conversation. 9:25, 9:30 on India Market Open on NDTV Profit. Three stocks from my end, and this was a break by our colleague Shrimi yesterday. First, before anybody else, Hindustan Copper OFS, 2.9 crore shares.
That was Hindustan Zinc.
Hindustan Zinc. Excuse me for that. Okay, thank you so much for that. Well, man, this a lot of news flow these days. I tend to get confused sometimes.
No,
so excuse me for that.
as well.
And thank you for correcting me. But Hindustan Copper, there's an OFS of 2.9 crore shares today. Floor price at 514 rupees per share. Keep an eye out for this one. It's a largish one. Let's see if there is a bit of an element of downtick to this. And by the way, metals are in news for more reasons than one. I'll just come to that in a bit. And that's my last stock, which is Hindalco. But before Hindalco, the second stock on my list is KSB. They came out with an investor presentation yesterday, post-market hours. They've said in a very long presentation from an investor's perspective, 2 or 3 things that stood out. One, that they are targeting a 15% revenue growth, compounded annual growth rate till 2030. So that is laid it out that they are targeting 15%. Not much on the margin front, but I presume that with the growth, margins may come also with the fact that they said that they have, and carefully highlighted, that they have a product for every nuclear application. Since nuclear energy is going big and strong across the world and in India, KSB is highlighting that, and I wonder if that is better margin products for them as well. So keep an eye out for KSB in case there is a reaction. It's kind of a sleepy stock generally, but there's a strongish guidance that they've given. Last but not the least, Hindalco. And the jury is out there. I believe that this could be construed negatively for Hindalco because Donald Trump has raised tariffs on all Canadian cars, trucks, auto parts and steel to 50% starting 2027. It's some time away, of course, but I think it could disrupt the auto production lines across North America, which could even dent aluminum sheet demand, which could impact Hindalco negatively. Won't be surprised if there is a bit of a negative reaction on Hindalco in particular, because that's got the global exposure. I mean, Hindalco may not react so much. Let's wait and watch. Like I said, the jury is out there. It might not do this as well. I personally thought that this would be negative. I don't know how you guys think about it, but I would suspect that this could cause disruptions and therefore should be construed negatively for Hindalco.
Yeah, I mean it could, but you know the opposite aspect of that is the fact that base metal prices have been going up, and so and that earlier conversation that we had on alumina a couple of weeks back, all of those positives might outweigh the negative.
In the price or no, remains to be seen. Yeah, but today, maybe just today, at least I believe, and it might be completely the opposite, frankly. So wait and watch.
Okay, we'll take a very short break, but we've been on top of the US-Iran situation, and we told you what Scott Besson said. Let's listen in to what Pete Hegseth said. He's a Secretary of War, and he's not he's not ruled out use of force against Iran despite economic sanctions. Listen in.
Is it fair to say kinetic strikes are on a pause right now, or do you?
No. If we need to use kinetic strikes, we'll use them. If Iran is foolish enough to overplay their hand or mess with the American military, we'll do what we need to do. But economic pressure, we know, hurts them the most right now. But by no means are we foreclosing using kinetic strikes anywhere in the Strait of Hormuz or around Iran.
All right, time for a very short break. We're coming back with Kush Bora, Parag Thakkar for all your top stocks of the morning. Stay tuned.
outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. For trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anviksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And
All right, welcome back. You're watching India Market Open. 49 points down on the Nifty implied, but fear not. We have Parag Thakkar and Kush Bora here to tell you what your plan should be for the day. Kush, let's start with you and what the indices are looking like.
First up, a very good morning. And I think you've got a special guest slotted at 11 a.m. today. I'm very excited about that.
Yeah, he's referring to the town hall with Nilesh Shah. Yes, of course, that's the big one.
What an opportune time to get him, right, with all the perspectives that he brings to the table. So I'm actually quite excited and looking forward to that whole conversation as to what matters now and where are we headed from here. So something that I will look out for. Speaking of looking out for, markets not really all that great. And to be very honest, I don't like the setup that I'm seeing right now. Remember, a couple of days ago, we spoke of how the Nifty, in fact, the entire markets are right now very delicately placed because the heavyweights are very close to supports and the traction is missing. Of course, we take heart from the fact that, we rebounded from the lows of the day. That's what consolidation means, right? For now, Nifty is bang on in the middle of the 24,000 to 24,400 range with no clear directions emerging. So if you have a position, you could continue to hold. Bank Nifty, I said, is something that I prefer as a long trade. Yesterday, it saw deeper cuts compared to the Nifty, but even there, the rebound was, still heartening. So I still remain constructive on Bank Nifty relatively. My concern is what is happening under the hood. Remember, we spoke of, the small and the mid space actually basically not doing all that well. Let me just give some data in terms of market breadth. The Nifty mid cap, right, 100 and the Nifty small cap 100, we spoke of stocks below the 20-day moving average. Now, in July peak, the number of stocks below the 20-day moving average were just 21. Yesterday, there were 53 for Nifty mid cap 100. And for Nifty small cap 100, in July peak, the number of stocks below the 20-day moving average was 24. Yesterday for small cap 100, that was 55. So your portfolios might start to hurt a little. You might be seeing slightly deeper rates. So be a little cautious, and hence the stock updates and hence the reinforcement of the idea that whenever you have profits, take them off the table, and whenever you hit stop losses, book them out. So cautious view, mild positive from the Bank Nifty perspective, and stock specific action continues even though it's getting narrower.
Got it. Okay. And speaking of that stock-specific action, there's quite a bit to talk about on the fundamentals. But before we get to that, individual stocks that you're liking this morning?
Yeah, 3 of them on the long side, and not a surprise that 2 of them are from the auto ang space, because this has been doing well along with select pharma names. So SPR Auto, erstwhile Shriram Pistons, very good volume action, very good price action, has given a breakout above that 4550, 4600 mark. So this is something that you can consider for a long trade for targets of 5050 and 4525. That's your stop loss. Wheels India is the other one. Had a massive run in the last few years. For the last few months, it's been consolidating. It's now starting to move up. So I'll actually be looking for much bigger targets on this. But from a near-term perspective, 1610, 1670. These are your targets. Keep your stop losses at 1500. And Glenmark Pharma, not a surprise, had a good move yesterday, volume back. So for targets of 2440, 2510 with a stop loss at 2325.
Okay, so you have stocks that are on your radar. Parag, I'm going to start by asking you about TCS, and we'll get Puneet up in a bit to just tell you what's the brokerage view on it. Are you seeing it as a big move? Are you seeing it as a significant move? Or beyond a point, it's a good step in the right direction, but not a game changer?
So, good step in the right direction, not a game changer. I would go with that. Because see, it gives you a 5-year revenue of 13,900 crores. And it will be margin dilutive in near term by 50-60 bips, but still management has not changed their margin guidance, which is a positive, and it gives them entry into Europe automotive AI transformation industry through a very good partner. So I would say that in medium to long run, it is a very good deal. In short term, people might say that it will be margin dilutive for 1 or 2 quarters, and they have said that ramp up will begin from Q4. And there will be some margin dilution in the beginning. So I would say that in near term, I don't see any big spike due to this particular thing, but company is moving in right direction. And that is what all these good companies do, right? When you write them off, they suddenly come up with something good.
I mean, frankly, going out and buying what you need is a good move, but I don't know if it, filling up your cart covers up investor concerns. I'm actually going to get Puneet in, or just hold that thought, because he's got a collection of what top brokerages are saying. What is the verdict, Puneet?
Well, thank you for that. Well, CLSA continues to look at this deal very positively. They've actually gone out and said that this will, TCS will actually try to increase the profitability of this particular transaction by offshoring some of those works as well. So that's one of the key things that's been a play for in the Indian IT makers over the last 2 decades, and the benefit of that will flow through into the next year as well. They've also said that this will fill TCS's white space that they have in the auto space, especially for the European clients as well. So they have a target price of 2,326 rupees per share. Morgan Stanley maintaining an equal weight. They mentioned that this will strengthen TCS's capabilities and feels that this will add a 3% in terms of revenue growth for the company, or 1% in terms of profitability, given the assumption that currently this entity is in the high single digits in terms of profitability, but feels that they see actually TCS intensifying its strategy to use M&A as a particular one to fill out these white spaces as well. And Citi also has a similar view. They feel that the run rate of roughly 600 to 700 million euros for this particular transaction for FY28 and a margin of roughly 7 to 9% is the kind of profile that they are working with. They feel that such deals across the sector could support the growth in the near term, but there is a risk of the existing book declining on a YY basis. So some concerns in the near term, as Parag also highlighted, on margins amongst others, but overall this will give some foothold to TCS in the European auto side of things. How big is that market will be something to watch, because we've seen the existing players actually see pressure on growth for their respective entities like KPIT amongst others, and hence while a step in the right direction, there will be a lot of monitorables in the near term.
Important point, Puneet, specifically because just yesterday I was reading a headline about Volkswagen, Parag Bhai, and the fact that the head is pointing to tough times ahead, the possibility of the requirement for retrenchment and firing of people, and so therefore European auto is not in the best health.
Absolutely.
Is this a headwind that they will have to contend with?
No, but see, I'll tell you, it might be a problem for somebody who is supplying there, right? Okay. TCS, for them, with this partnership, will explore a new market which TCS was not present. So it is an incremental opportunity for TCS. right? So I am not saying that, see, whether the market is declining or expanding, but from this partnership perspective, it is a new market. They are entering into this automotive European market with AI transformation deals along with the European partner itself.
No, but if they're paying a certain amount of money with a certain base assumption, and that assumption then becomes bleaker, then the revenue potential and the profitability potential goes...
No, I would say that this is, first of all, this particular contract is for 5 years and around 13,900 crore revenue, right? So it will add 3% to TCS annual revenues, right? So this is there, and they have already called it out that there will be a 50-60 bips margin dilution in the beginning as they ramp up the deal. So I think, and plus, as he highlighted, there can be offshoring opportunity, which can then cover up the margins.
Is this a reason to buy TCS, Parag bhai?
So I would say it's a great company in bad times, like TCS and ITCs of the world are great company during bad times. Investor with a long-term perspective should add. Both companies are giving you 5% dividend yields, and I would say that worse is behind.
What about on charts, Kush?
Not at all exciting.
No?
Look, no, not not at all exciting.
No, that's fine.
See, it was a compelling buy. In fact, the whole IT pack was a compelling buy. Somewhere end of June, early July, when the index was at oversold levels and you were seeing positive, RSI divergences. Since then, the index ran up, about 20, 24, 25% in a little over a month. So I think you can avoid this as a momentum trade for sure. TCS, Infosys, even HCL Tech. If at all there is any excitement, it's with Persistent and Coforge. Very different setups there.
I just have a follow-up to Parag bhai though on this one. Parag bhai, so let's assume you are a portfolio manager. You may have also want to keep various sectors. Not every retail investor is compelled to buy into IT, for example, right? Why buy an IT name right now when there is no clear evidence of the cycle turning versus other sectors where the cycle seems to be turning, like for example chemicals, like for example some other sectors where there is proof of delivery, for example pharmaceuticals, etc. Why bother? You are separate. For an average investor or an average viewer, why get into TCS at all?
No, so I'm saying that, see, for an average investor who has a time horizon of 3 months or 4 months.
Or 1 year.
No, I think for 1 year and above, I think TCS and ITC both make a great cut. If you are a very small short-term investor, 3 to 4 months, then of course you have.
But why TCS? Is the cycle turning?
No, I'm saying, see, you will never get a good valuation and good news together. Never.
So effectively,
if there is a good news, the price will be already high, like it happens in many other companies right now or many other IPOs, and that is, for me, it is a clear avoid.
So effectively, Parag, we're just trying to drive home the point. You are buying this with the valuation comfort, not with the belief that there is evidence of a cycle.
I'll tell you, valuation, balance sheet, cash flows, dividend yield, and management.
But not cycle.
And contra.
Not cycle.
Basically, it's contra.
This is contra.
Okay, I want to get Gurmeet Chadda in on this. He's very kindly agreed to join us this morning. He's managing partner and CIO, Complete Circle. Gurmeet, good morning to you. First take on TCS. I mean, I think no one will deny it's good to buy a company to fill in white spaces that you have. But is it enough to move the needle, is the debate here.
Good morning. Always a pleasure. I think it's a good acquisition. And Porsche also, they are getting the non-Porsche businesses is almost 60-65%. You're paying roughly 3,500 crores, and I think revenue which will accrue over 4-5 years would be 13,000-14,000 crores. And what they are paying also valuation-wise is pretty reasonable. In fact, positive from and it is accretive. So maybe I think initially there could be some positive reaction, but I think, as I said, the bigger question is, can the revenues quarter on quarter in constant currency come back to at least mid single digit? Because right now what we are seeing is 1% growth here and there, and for that I think what you're seeing in prices is what it would be, which is you get about 15, 16, 18 times, and it trades at between, let's say, 2,000 to 2,400 kind of a band now, and there's been a lot of underperformance of large cap IT services. So I think good use, so directionally good usage of cash, adding more revenues, and this is more an AI deal. So there's some concern that Indian IT services will become irrelevant. But whether it is a sustainable re-rating trigger, that's a function of how good the earnings and outlook would be for the rest of the year.
Just to follow up to that, and good morning, Alex here. The interesting conversation we were having just before you joined was, is there a reason to jump into TCS at this point? Because the chips are down. The argument that Parag Bhai on the table was making is that you won't get a time when the chips are back on the table or things are going well and the price is decent. So if you have to make a contra investment, now is the time. The only question is there a better opportunity out there right now?
No, I agree with Parag that if you have a slightly longer term view, can take some more pain in the interim. Maybe yes, you can have a slightly contra view, but only thing is, as I said, the large cap IT services are still struggling. Largely and just the absence of FI buying, or you can call it short positions or selling in few counters. I think the action more has been in mid-cap IT, whether it is Persistent or Coforge, just some of the better names. So I think it's good to be contrarian on IT valuation-wise. We have a very small contra play. So we have HCL Tech, and we recently started, I think, KPIT a little bit, but that's like 3-4% of the portfolio. In fact, lesser. So, but the market is rewarding more the mid-cap IT names, and it's got to do more with the positioning. I think once the flows start returning to India, why not IT? Even banks and so many good names are struggling despite good numbers, good news, good earnings. So I think IT probably will do better once flows return because it's beaten down. But I still think it still remains a stock pickers market, and I think it's thrown on a more sustainable basis. It would still reward better earnings growth, which probably, in my view, are more in mid-cap IT.
Waited you to come on this morning, Gurmeet, and you've talked about a stock pickers market. We have to ask you what you're liking right now before we let you go.
So, I think right now banks look very juicy. I think second quarter would be very good, Tamanna. Whatever updates I'm getting from my colleagues, I think the FCNR deposit could actually be closer to 100. It's a huge last minute rush. A lot of clients are calling us now. I mean, can we move some money from debt funds? Can we move some money from hybrid funds? So, especially in our NR base. So, there's a lot of traction there. And I think the credit growth is very strong. So, won't be surprised if, on quarter you get some very strong earnings from, ICICI, Federals, HDFCs of the world, especially with clients with large NR base. So, I think that's one pocket. I think auto numbers are very strong. I'm very surprised with what Q1 updates have come, but I think that auto loans at 7.5%, coupled with overall robust demand, I think it's something. I think auto ancillaries haven't really picked up the way some of the auto OEMs have, and I think there's a lot of scope there as well. So these are two names we are adding, and I think any weakness in defense and energy stocks we continue to add, because for us this is a very, very structural theme. In fact, more the correction, the better for long-term investors like us. We built on more to the likes of solar, despite prices being high. We are adding more defense names. We are adding some more power equipment names. So this is the space we are concentrating the core of the portfolio and trying to take some contrarian bets in chemicals, in textiles.
That's great. Thank you so much, Gurmeet, for all of those great ideas. Banks look juicy. Defense and energy are long-term ideas. And buy on dips, and chemicals, etc., contrarian bets. Let me talk a bit about Cummins India. They've seen growth extending beyond data centers with power gen demand remaining robust. Varsha joining in with more details. Varsha, what's the trigger here? They've had an analyst meet, is it?
Yes, so there was a CFO meet, and a company is very bullish when it comes to data center opportunity. But of course, growth is also growth will also see beyond data center, which is showing green shoots, and hence management is expecting 10 to 15% growth there also. Capacity utilization has been improved to 70% from 65%, and there's no capacity constraints currently. Talking about data center opportunity, well, over here revenue recognition take time, so you might see some kind of lumpiness when it comes to data center revenue, but no margin dilution is expected from data center project as per management. Talking about pricing discipline, well, Q2 price hikes were taken wherever pricing was not locked. Further price hike depends on inflation and market acceptance. Onto the export opportunity, inventory normalization remains near term headwind for the company, but Europe remains particularly strong, and LATAM, APAC and Africa continues to remain healthy. Onto the power gen demand, where realty demand, if you see, is expected to be strong, and demand is emerging from dark stores, smart cities and metro projects. Lastly, on the service business, well, growth will be supported by rising install base, new offerings and retrofits will aid growth, but overall company is expecting strong growth when it comes to data center, and beyond data center is expecting almost 10 to 15% growth.
All right, thanks a lot for that, Varsha. And I wonder if this is good enough, Parag Thakkar, to try and bring about enthusiasm in Cummins.
No, I would say data center opportunities for real for Cummins, and it is the biggest beneficiary of that opportunity. Trades at 51 times trailing, so it doesn't excite me too much for 15-20% growth to pay. But I think it is one of the better names. Some of the names are very, very expensive. This is one of the big beneficiary with relatively inexpensive valuation compared to
good enough for Parag Thakkar
right? I'm not bad. Because I have my hands full with various things.
Okay, I know I have to go to Sumit, but very quickly, Kushpura, a quick chart check here.
Yeah, avoid from a momentum perspective.
Also.
Positionally, 49.50 stop loss and a positional trade 6 months and out you can still consider, but not a momentum.
But ऐसे तो और भी stock होंगे.
Exactly.
So then we'll talk about those, right? Simple. Okay. और कौन से stock हैं, right? What is there on the minds of the dealing rooms? I think that is also something important, and something that we do every day is get in Sumit Sarkar with his pitara of khabars that he has. Sumit, good morning. What are you hearing from your sources over the last 24 hours?
Good morning, Neeraj. Firstly, it was actually Cummins that we did indicate yesterday as well. There were buy flows on the institutional desk. Both foreign and domestic institutions were accumulating this counter, maybe probably because of the positive commentary that had come in the call that they had, or in the meet that they had with select set of analysts. Second on the list is Vishal Mega Mart. The stock was up as much as around 10% in trade yesterday on the back of the CEO announcement, but the buzz now in the street is that post this there could be the block deal that is expected to come in very soon. The promoter might look to sell part of its stake in Vishal Mega Mart. For Ultratech, dealers expect some announcement related to wires and cable segment that was announced a couple of quarters back by Ultratech. So most likely dealers are indicating that they have already sent out notice and invites to their dealers and agents, and most likely there will be some announcement that could come in on the cable and wire segment next week. For Persistent System, there are buy flows on the DI desk. Delivery volumes are seen on the higher side. For Molbio Diagnostic, the stock was up around 5 to 6% yesterday, and dealers are indicating that a large prominent HNI, in fact 10% by the closing, and dealers are indicating that a large prominent HNI was active buyer in trade yesterday in Molbio Diagnostic. It's a recently listed counter. Good Luck India, that stock was down in trade, but there's a buzz of some order win announcement that could come in here. So keep an eye out for Good Luck India as well. And lastly, Piramal Finance was part of a segment on 21st of August where we did say that there will be a fundraise via QIP, and yesterday night the company has launched its QIP, and what I'm picking up so far from dealer is that the demand is quite strong for this QIP. More than 6 times the amount that they're looking to raise is the demand that they have garnered so far.
Okay, all right. Thank you for that, Sumit. So a lot to unpack this morning. We've talked about TCS. Parag, there's a buyback announced by PVR, and that's a stock that I know you track closely. What's your take there? You look pleased.
When we discussed PVR first time, it was 10,000 crore market cap. People wrote it off because Dhurandhar is one-off. Okay, now Spider-Man was one-off. Doomsday would be one-off. Okay, so how many one-offs? So management has said that it is not one-off, right, by declaring buyback, right? So, and just to be on record, from last 2 calls, I have been requesting management to do buyback. Vocal, I have been very vocal about it. I have been requesting them to do buyback because company was net cash now, and market cap at that time was only 10,000 crore. In last quarter, when Dhurandhar was just a little bit of spillover, they did a 228 crore pre-Ind AS EBITDA. This quarter, I think pre-Ind AS EBITDA should be about 350-400 crores because of Spider-Man and various other things, right? So I think they should cross 1,000 crore pre-Ind AS EBITDA this year, and still market cap is only 12,000 crores. Now for a 1,000 crore EBITDA loss, there are some companies getting 90,000 crore market cap. It is a 12,000 crore market cap. Okay, and I will repeat saying, and I think you are going to interview Mr. Puneet Chetwal also. You can ask him. I think out-of-home entertainment itself is picking up. PVR is just one proxy to that. Hotels are there. There are many other things, right? So I think this theme has a long way to go, and people want different experiences. People are getting bored sitting at home and looking at their mobiles. So I would say that this is a... so
I don't know about that. But
I don't know about that, but yeah, I agree on both things.
I hope so. I think it'll be a good thing if people now want IRL experiences, as they call them.
But speaking of Spider-Man and PVR, is there and swinging, is there a trade?
No, I think doomsday is the trade for me. But I'll tell you what, last time when Parag Bhai mentioned, it was a while ago, about PVR, I said rather than buying PVR stock, I would actually go and watch a movie for that money. अभी वो थोड़ा change हो गया है, ठीक है? I would rather buy the PVR stock, make profits and fund my other few movies out of it. I'll tell you why, because 1150, 1200 was a strong technical resistance zone. There's a long-term falling trend line resistance that's been broken out of. There is a major hangover in terms of the 1300, 1330 level. There's a falling channel resistance. You can track it on your charts as well. Beyond that, serious momentum will kick in. But then if you don't want to be the last one to buy, I think this is a good enough, reversal kind of a move that you're seeing, rebound kind of a move that you're seeing on PVR. I think this momentum could continue, and 1330 and perhaps higher levels are very much on the cards. I would still keep my stop losses around 1175, 1180 for a positional trade.
People in my group are also trying to book the calendar for a December Marvel movie
18th.
Where
Doomsday.
For Dr.
is that
Doom.
Doomsday?
Yeah,
no,
Dr. Doom.
But the one where
Dune 3.
No.
अरे बहुत अलग ही universe है.
Where Wolverine is coming in. Is that Doomsday or is there something else? Because there's one more that is happening where Wolverine is coming in.
I can hear all these superhero fans gasping.
Yeah, exactly.
right now.
Not Wolverine. This is Robert Downey Jr. coming in as...
so there is one more Marvel movie coming up where Wolverine is also joining forces.
I think they're all in the same universe now, isn't it?
Exactly, they are already.
Yeah.
The Deadpool Wolverine combo happened.
It's like a star cast, like this table.
Oh,
all of the superheroes here.
I have kind of wondered, if this would be the Avengers table, what would it look like, the originals?
Things that cross Kush's mind in his free time should be a separate piece altogether. But meanwhile, okay, we'll take a break from all the fun and games and come back to a host of other stocks that should be on your radar. I'm going to quickly go through them. Watch out for Misho, we talked about it. Block buyers include Kuwait Investment Authority, Associate General, but also watch out for Lenskart. They also have big block deals coming in, whether it's Kuwait Investment Authority, Vanguard, etc. Vedanta is the other one you should look at. They have deployed rigs at 2 projects, and their exploration projects in Chhattisgarh. Allied Blenders has started local production in Malaysia. Just quickly going through stocks that should be on your radar. Cupid has seen promoter buying continuing. There's a company called Ismo, which has added 170 new clients globally in Q1. CSM Technologies has a pact with Mosip Shivalik. Bimetal, meanwhile, controls new approval for Pune unit. There are some which are not that positive, Swiggy and Eternal in them. Karnataka has suspended some food licenses, the health department has, and IIFL Finance, home finance, look out for that. There's a tax demand of 963 crore rupees that has come in, and we'll get you a word on that very, very quickly. But IIFL Home Finance, we keep seeing these tax notices. They usually they get challenged in the legal process, but do you think a bit of a downtick on the stock for this today?
Stock has rallied too much. That is the only thing.
So bahana
thoda sa it can cool off due to this. Stock has rallied too much. So.
Kush, is this something that you're looking at on the chart?
Yeah, in fact, yesterday we did speak, right? Muthoot, Manappuram, you can still consider IIFL Finance as something that you should book profits now, massively overheated. Maybe consider a re-entry around 635, 640 zones.
Okay, so I'll tell you why it's looking like it might be a little worrying, because this 963 tax demand, 963 crore rupee tax demand is equal to 126% of the FY26 consolidated profits. It's just the size of the demand. This seems to be in continuation of the search and seizure action conducted in the IIFL group last year. And a tax demand of 480 crores was earlier raised on the IIFL Finance standalone entity, which this order is dated May 12th. And on this, IIFL had secured a stay of recovery until December 31st, 2026. So this is why this was really a big deal right now. I don't know. So one is that the stock has run up, but as the group is looked at and the worries that continues, I wonder how you look at it. Tushar Kotecha, CFO at IIFL Home Finance, joining in right now. Tushar, very good morning, and we appreciate the time you've taken to speak with us. Tell us a bit about this tax demand and how you're looking at it. Is this going to now be something that you will challenge in the court of law?
Yeah, hi, good morning. Yeah, definitely, Nadia. We have received this tax order yesterday. And the tax demand, we have filed our letter with the Stock Exchange Authority under the SEBI regulation. And of course, all these points are, we feel there is a lot of merit in our case, and we will definitely go for an appeal against this order.
What are the details of the case? If you can just take us through that, because we have some information from your exchange filing. Is this in continuation to all of the action that took place last year? Just can you give us some sense?
So this order is an outcome of the block assessment which we are going through, and we have already filed details with the stock exchanges. So the department has concluded the order, and they have made some disallowances, or they have taxed the income already offered for a tax in the previous year. And all these points are duly discussed and covered in our regular assessment. However, this point got disallowed in our block assessment, so we'll go for appeal on those points.
Just a quick clarification out of this entire demand, how much is penalty and how much is the original tax that they say had to be paid?
So generally in block assessment, what they do, tax rate is higher than the regular tax rate. So the entire demand is just in tax plus surcharge plus cess. There is no penalty or interest in this demand.
Tushar, Neeraj here. What are the timelines for this? You make an appeal, but do you have to provide for it right now in the July, August, September quarter numbers? And is there a timeline by which you believe your appeal, if successful, could be in your favor within a particular time?
No, not required, because we will file the appeal within the stipulated period of time. And like I mentioned, the department has not appreciated that certain income are already offered for a tax in our regular time period, and there are certain expense which they have disallowed, which was already allowed in our regular assessment.
Okay, fair call. But Tushar, just because you know this well and I'm just trying to understand this, is there a cash flow requirement in the near term until this is decided, hopefully in your favor?
So there might be, when we file for a stay of appeal, stay of demand, department might ask us to pay certain amount under protest, which will pay whatever may be the instruction come.
Usually it is not necessary that it is the whole amount or a particular percentage of the amount.
No, definitely not. That's why the entire appellate mechanism is given in the law.
Got it.
And there are certain amount which the appellate authority will direct us to pay under protest till the outcome of the appeal. We will deposit that amount.
Okay, and usually it's what, 20-25% of the overall amount? Is there a norm?
20% is higher. They might give us the direction to pay a lower also, which has happened in our parent company case also. And we are expecting the similar favorable view from the appellate authority now.
Okay.
Okay, Tushar, if I can just get some clarification on a previous order on which you've secured stay of recovery until December 31st, 2026. So that is something that you need to now look at and face in December as well, isn't it? That's the tax demand of 480 crores, even as you work on the next process in this current 963 crore tax demand? Okay. We seem to have lost that line. Let's try and get him back. Tushar Kotecha there. While he's saying that this is going to be processed, I think the question on investors' minds is going to be why this happening again and again and back-to-back tax demands. That will be one of the questions. But watch out for IIFL Finance. All right. Let's talk a bit about what else is on Parag Thakkar's radar. Parag bhai, anything that you are spotting and you want to highlight today?
So yesterday this thing has come for Mineral Act, where Lok Sabha and Rajya Sabha has cleared that a state cannot impose levy, and that is very helpful for a company like Remco, because last year they have paid 172 crore as a rupees 160 per ton levy on limestone what they mine. And so this is going to go away now. So straight away saving of 170 to 175 crores from here on, from 22nd August onwards. This year also they have paid 80 crores. On other hand, my channel checks are also telling me there are going to be some price hikes also in Kerala, Tamil Nadu states. Because now that oil has again gone up, the energy prices have again gone up. So it is inevitable for them to take price hikes. And I think third most important thing is that within Remco Cement, I am saying that they have developed a construction chemical business, which is comparable to Pidilite. And there's a good brand which is gaining traction, already doing 700 crore sales, and target is to cross 2,000 crore sales with a materially good high margins.
Okay.
And this is a stock which has not done anything.
Okay. I believe we have Tushar Kotecha back because that line got cut off. Tushar, can you hear me?
Yeah, hi. I can hear you. I'm sorry, phone got disconnected.
No, we appreciate you taking the call again. And I think it's important. I was asking about the 480 crore tax demand, which you have a stay on, and that stay is till December 31st. So is that something that now you have to deal with again in December, even as you start the process of perhaps getting a stay against this 936 crore tax demand?
So I'll just, the demand which you have referred just now, that is in IIFL Finance, which is our parent company, and my counterpart CFO there is, along with his team and the tax consultant, are dealing with those subjects. They have got demand little early than us, so they have a different timeline to pursue. We have received order yesterday, so we have a different timeline to pursue, and we will file the first appeal within the stipulated period of time.
I'm going to ask you one last question, Tushar, and this is completely from the perspective of investors right now, and this is a question in their mind, that why these back-to-back tax demands on the group? Is there something to worry about? What is the reason that is happening?
So this is not anything specific, but the income tax search has happened on the IIFL group in January 2025. So once there is a regular process when department conduct any investigation or a search, they generally cover all the group company. And that's how all the group company got covered, whether it's IIFL Finance or IIFL Home Finance. And as a normal process, once the investigation process is over, they give the order under the block assessment. And this demand is the outcome of that block assessment. Of course, the time period is different. IIFL Finance got in the month of May, we got yesterday. So it's an outcome of only one initiation which department has done on the search.
Okay, so all right. Thank you for that, Tushar. And thank you for coming back on this as well.
Thank you.
Tushar Kotecha, and we appreciate it. Honestly, we appreciate it when management comes and they answer questions, and his line got cut off. He came back to answer that last question as well. Of course, you're going to see a bit of a dip in the stock, but he's coming and explaining what's happening. I think transparency is very, very important. Ruchit Jain of Motilal Oswal Financial Services joining in this morning. Ruchit, very good morning to you. It's been quite an eventful morning. Let's get your index calls.
Yeah, hi, very good morning. Well, the index still seems to be in time-wise correction. Last week we spoke about this. Then there has been no momentum on the either side for the index. 24,000 is the support which is holding on, but we are not witnessing that kind of follow-up move on the buying side as well. So we believe that that sideways consolidation is likely to continue, and whenever index stays sideways, the more you buy towards the support, the risk-reward ratio is more favorable. So I think if we get dip around 24,100, then one can go long over there, keep stop loss below 24,000 level. On the high side, 24,250, 300 is the higher end of the range. So 24,000, 24,300, one just needs to play this range, when markets dips towards that support end.
By the way, Afcon's Infra, talk about arbitral awards. They've gotten an arbitral award of over 300 crore rupees. It's one of the stocks that is buzzing in trade. It's up about 3.4%. What else is moving? PVR Inox, which we spoke about this morning on account of the board meeting at the end of the month to contemplate a buyback, is up about 1.5% or thereabouts. Fertilizers and chemicals, Travancore as well, up 2.7, 2.8%. But let's talk about Policy Bazaar. In fact, Policy Bazaar's parent company, which is PB Fintech, it is in focus as Bernstein remains bullish on the company. This is the big brokerage call of the day, and Sharad joining in to tell you about what they're saying. Sharad?
Yes, Alex, the Bernstein has reported on PB Fintech. They have maintained an outperform rating, and looking at the target price, it's at around 2,310 rupees per share. Bullishness definitely coming on the business model, and a renewed sales engine is there. Of course, this has higher renewals and lower claims. This is what the brokerage has stated. This is because of that high take rates start coming in. While the industry is struggling for growth, PP Fintech is growing its top line between 30 to 35% at a scale. Near-term regulatory cloud do exist, but channel checks suggest that the price action has already been taken care of. Delay in regulations partly remain overhang in the overall segment, and remember the take rates are a high for a reason right now, and the growth is still there as a regulatory priority, and that is why bullishness is coming in for this counter for PB Fintech.
Okay. All right. So that's the big brokerage call of the day. PB Fintech is a stock in focus, up about 0.8% in the pre-open session. Ruchit, we still haven't talked about the individual stocks that you're liking this morning. What are they?
A couple of names that we think can do better in such consolidation market also. One is Siemens, where we have consistently seen a high top, high bottom structure. The stock has pretty gone through a time-wise corrective phase over last few months, and the 20-day MA is acting as a good support for the stock. Yesterday's volume, if you see, much higher than the daily average volume. So one can go long on Siemens here with stop loss below 4,000 for potential up move towards 4,300. And Muthoot Finance is looking quite interesting. And both Muthoot as well as Manappuram, this gold finance space has been buzzing over last couple of sessions because of the rise in the gold prices. But we can see that the volumes are returning back in Muthoot Finance after this price-wise corrective phase over there. So I think this stock can do well further from current levels, even if it retraces the entire corrective move. So one can go long Muthoot here, stop loss below 3,080 for potential targets around 3,430.
Okay. Well, not surprised out there that gold finance keeps on coming in the thick of things. IFL might be a different kettle of fish, but some of the others might be okay. Not too many, how do I say, decent news flow. Nothing dramatic, but I wonder if Great Eastern Shipping, for example, because of the buyback is reacting at all to the news flow, or Entero because Prashant Jain of 3P has logged in there with a 2.5% stake. That one is certainly up 4.26%. So keep an eye out for both of these. Okay, Parag, sorry, you were finishing that point before IFL Finance CFO came back, but you were talking about Ramco Cements, is it?
Yes. So I am saying that three positives. One is this 175 crore relief. So from 22nd August, they are not going to pay this 175 crore which they were paying. Till now, this year also they have paid 79 crores. That limestone royalty. So that will not go. And plus, my channel checks are suggesting me that in South, at least in Kerala, Tamil Nadu kind of markets, which are Ramco's key markets, there are talks of price hikes. And thirdly, I would say, which is a structural thing, that they are building a construction chemical business, which is comparable to Pidilite. It's a lot smaller than Pidilite, but they have built it up in just 2-3 years. And it is likely to cross 700 crore revenue. And the target is to cross 2,000 crore by FY30 with materially good margins. And this is a structural thing because this is not as cyclical as cement.
Okay. On the technicals though, Ruchit, I want to come to you on some of these cement players, not just Ramco Cement, but the rest of the pack as well. What would you be buying, if at all?
I think last 3-4 months, we have not seen any kind of trended move in majority of the cement stocks. So I think we may see a one day of up move, but the follow-up move would be very important. Ultratech, from a bit mid to long-term perspective, is trading at good levels over here. But again, I won't jump in for a very short-term trading. So if we see a good price volume action and a follow-up move, then traders can look to chip in. Otherwise, it's only a long-term bet or mid-term, at least from a next 6 months perspective, not for the near term.
For the near term, all right. In any case, what we've been speaking about is more of a fundamental conversation on cement and the reason why they might benefit going forward. Very quickly, Kush, on metals as a pack, because we've spoken about it on an ongoing basis in the last couple of weeks, right? Underlying commodities doing well. What about the stocks?
There is traction, but there isn't enough follow-through.
Okay.
So you'll have to, again, like the rest of the market, be extremely selective. So for example, SAIL was a call that we gave on Thursday or Friday for the first target of 180. That was hit. Volumes also very healthy on this one yesterday. So I will continue, with that SAIL call. Again, there was that resistance at 175 odd, which has been taken out. So you could continue, with SAIL for targets of 185, 189 also. Stop loss is now at 176. JSW still is picking up momentum, but beyond 1330, I think there'll be further traction. So again, be very selective because there are a handful of stocks only that are showing a follow-through move.
Okay, fertilizers looking exciting this morning. Look at FACT, look at RCF. So you're seeing some action there. I also want to look at MFSL, Max Financial Services Limited. Ruchit, I want a view on this. Now, here's what's happened. Actually, huge relief coming in from SEBI. SEBI has dropped its cases against a group of entities, including MFSL, in the Axis case, right? So, proceedings against Max Financial Services, Max Life Insurance, Axis Bank and Axis Capital and Axis Securities have been dropped. You of course have to watch out for that stock fundamentally, but is it something that you're looking at on the charts?
A short-term reaction is possible on the positive side. We have already seen a correction from the highs in last 3 months, and the stock is trading around that range of 1500, 1550, which is a strong support. So on the higher side, 1700 is possible. So possibly a short-term positive reaction on the stock may be there.
Okay, and if IFL Finance has a dip on opening, would you look at potentially buying?
No, I would wait for the follow-up move in the stock. The 20-day support is around 630, 640, which is still far from the opening prices. So I think if I have to go with something in the gold financing or in the entire NBFC space, then stocks like Muthoot should be preferred.
Finance should be on your list as well because the NDTV Profit exclusive, the QIP subscribed 10 times. That could mean that the stock could actually do well. I know Parag Thakkar has an eagle-eye view on this. We'll get to him post-market open. We'll take in Kush Bora's top call as well post-market open because the markets are about to start. So keep this one in mind on the back of the NDTV Profit exclusive, but also the markets, and let's just see what happens at open and then what happens during the course of the day. Two specific pockets of strength or weakness. The breadth looks okay, the market looks skittish because banks are pulling it lower, about 0.4% lower for the Nifty Bank, as a result of which, a third of a percent, as a result of which the Nifty and the Sensex lower about 0.25%. No alarm bells, but sluggish start, if you will. Nifty IT should come up on your screen. TCS has news to it. Some of the others too, it's flattish, but at least a tinge of green, if you will. More is welcome, but be that as it may. And small cap should come up on your screen next. Mid caps are down about 0.25%. Small cap index 0.12% lower. So very, very flat for the small cap index at least. Let's get the heat map up on the screen and show you what is moving and what is not. Very little in the green, a lot of red. So what's in the green? TCS up about 1% on the Porsche deal. Eternal about 0.5%. Adani Ports, Tata Steel, Infosys. What's not doing well? HDFC Life 1% yet again. Max Health 0.8%. Seems like insurance companies are taking a bit of a stick. There is weakness in Cipla yet again. There's weakness in ITC, Tata Consumer, HUL. So FMCG is down. Adani Enterprises and Reliance, both those names are down as well in the session today. But nothing to write home about, but for the fact that there is more weakness now on the Nifty, and I presume that would possibly be because FMCG and Reliance, in addition to some of the banking names, are attacking and not too many stocks gaining. In fact, even TCS has given up some of those very early 1% gains, just about 0.5%, but early days as yet. Very sluggish start though.
Yeah, extremely muted response to the TCS deal, I must say. Much less than one had expected. Adani Ports now top gainer with less than 0.5% up. Cipla down about 1% right now. Let's pull up Nifty contributors very quickly, shall we, before we get to the broader indices and see what's happening there. HDFC Bank weighing on the Nifty, so is SBI and ICICI Bank. Just word to the wise, Gurmeet Chadda came on the show and said banks are looking juicy ahead of the next quarter results, but take a look at whether it's looking like that to you right now or when you want to come in. I want to look at the broader markets if I can, mid cap and small cap indices, advance decline ratio also is not that bearish, to be fair. 1023 advances to 1316 declines. The small cap and the mid cap is fairly muted. The VIX is, also not showing too much sign of action, 4% down. So nothing really to worry the market, except the momentum seems to have fizzled out somewhere. Like we said this morning, I don't know if it's cash or whether, I don't know if it's a couple of years of muted returns, but something needs to happen to bring interest back in the market. That's what you're seeing right now on your screen. 11 on the India VIX. Let's pull up the sectoral heat map, if you can, and look at what's happening there. I mean, Nifty Media possibly is a PVR there, Nifty IT possibly is a TCS there, everything else down in the red, but it's no sell-off that you're seeing here. This is just a muted market. Nifty Energy about 0.5% down. Let's look at individual stocks and what the newsmakers are doing today. I'm going to start with IIFL Finance. We spoke to the CFO of the company, IIFL Home Finance. We talked about a 936 crore tax demand and what that means. That stock is wait, I don't think we have the right script, frankly. IIFL Finance is one we should look at. Let's look at Hindustan Copper. They have announced an OFS. No, I think we have something wrong with the scripts that we're showing. We can either show them there or let me go across to Alex and see what he has. Okay, great. We've managed to get IIFL Finance. That's great. Okay, 5% down on IIFL Finance. Let's look at Hind Copper. OFS is announced, and that also is looking at a bit of a downtick. NetWeb Technologies is raising. NetWeb Technologies is raising money. That's about 2% down right now. Afcons has seen a 335 crore award by the court. That's 2.5% down. Let me look at PVR. And what's happening with PVR Inox. They've announced a buyback, 2.5% up. And Max Financial, SEBI has dropped a whole clutch of cases. It's up positive for this company. Alex, I hope you have better luck.
Yeah, in fact, the entire fertilizer pack, Tamanna, is doing incredibly well. If you look at FACT, for example, fertilizer and chemicals, Travancore is the name of the company. It's by far and away the biggest gainer, 8% plus at this moment. But it's not the only one. RCF is doing well. Rashtriya Chemical Fertilizers is up as much as 4.5-5% at this moment. You also have Chambal Fertilizer that's up and about. And pull that one as well. Chambal Fertilizer is up about 1.9%. So the question arises, what really is a driver behind the move today? And is it that perhaps the sowing is not as bad as was previously forecast, and that is boding well really for the agri players? And of course, remember what Neeraj pointed out earlier today, and for the likes of KRBL, etc. Those are stocks that gained quite considerably yesterday, but don't necessarily bet on them doing incredibly well. The management themselves had highlighted a little bit of caution. It's not just the price move that you should watch in the commodities that they sell. But there's also, by the way, the other stock that I've been looking at, Great Eastern Shipping, because remember, freight rates have been elevated and the stock has been on the up and up. The question is, how much further can it go? So on those two packs, what's your view, Kush, on the charts?
So I think the fertilizer pack is making a rebound. If you see the last month or so, there has been steady selling in this entire pack, came very close to oversold territories. In fact, FACT and RCF both were at oversold levels if you track the RSI. Then what you're seeing in the last two sessions, including today, especially today, is more of a rebound move. But what's happened is that, the key resistance level, so for example, 850 to 855 was a key resistance for FACT. That's been taken out. So if we close above this, I think momentum could build, and this rebound rally could have further steam to about 895 and 935, 940 odd levels. So this is more of a hold. I wouldn't buy into it right now. GE Shipping also very similar structure. It is also seeing a bit of a rebound, but again resistances. So more of a hold. There is a stock called Shriji Shipping. Again, relatively less discussed. This one has, a bit of momentum. A bit is an understatement. But yeah, I mean, if you want to consider a positional trade, then with a stop loss at about 595, 600. That is something that you can still consider in this pack.
Okay. Now, before I take it to Ruchit, Parag Thakkar, we had this exclusive report just at 9:14 that Piramal Finance QIP is subscribed very, very heavily. You track this very closely, I presume, right?
Yeah.
What's your view?
So basically, by God's grace, we have discussed this at around 1100.
That was pre-split also, I think.
No. So 1100 has become 2200.
Okay.
2100, whatever. Because that time,
2181.
so that time the journey just started of profits coming in. Now I think it's a good mature story. Good CEO leading it, Mr. Jairam, and I think that it has good days ahead also. But because I had bought it at such a low price, I am not buying at this price. But I would say that the story continues. But from here on, my view is, frankly speaking, that you should be buying banks more than NBFCs, because I am expecting rate hike thing to start, rate hike cycle to start. So which will be beneficial for banks, their margins will improve.
So I'm going to ask you a difficult question, Parag Thakkar. If somebody has the highest quality, one of the highest quality NBFCs, let's say Bajaj Finance.
Yes.
As a tactical call, is it better to sell some of that Bajaj Finance to buy some of a high quality bank?
Like ICICI Bank and SBI.
You think that is a good call to do?
I also hold Bajaj Finance, by the way, but I feel that from here on, these are better days for banks generally, because rate hikes will start and then margins will turn.
I hear you.
And asset quality for the entire system is good.
It's good, yes. And credit growth will also be strong per se. So all of those factors could work in the favor of banks. Ruchit, opening thoughts and any stock that stands out for you?
For the markets, still it remains range bound only, but one stock that stands out is AU Small Finance Bank. I'm just comparing the momentum of Bank Nifty over last few days with AU Small Finance Bank. So if we look at the stock is trading around its 52-week highs, while the Bank Nifty is still into consolidation or in a corrective phase. I think that relative outperformance should lead to further up moves in case of any positivity in the Bank Nifty. So AU Small, I think it's a good buy at current levels, keeping stop loss below 1075 for trading perspective. You expect levels around 1160, 1170 on the higher side.
Okay, thank you so much, Ruchit, for speaking with us today. Parag Bhai, Kush, thank you so much for coming in on the show. But time for our special story of the morning, where we give you the for your profit angle as well. FMCG stocks remain under pressure, with the Nifty FMCG index down over 14% this year, marking its weakest run since 2004. Sharad joining in with a lowdown on the reasons and also what can pull the sector back into the green.
Well, yes, and it's definitely freezing in here. And just let's get the Nifty FMCG. This entire month has been really bad for Nifty index. Let's just do a segmental analysis of how things have panned out over the last 4 years. If you could show, look at this. In 2023, there was 29% returns, and now it's 14%. It's still down. We still have some trading sessions left for the month of August. This is the weakest performance since 2004. Also, let's look at the stock-specific moves. What has happened here? Largely, Patanjali Foods has fallen the most. ITC also down 33%. And we have other names as well, such as GCPL, Imami and Dabur as well. But some stocks have actually done well also. We have Radico Khaitan. That has been, you could say, a clear winner of almost 39% gains coming in. Also, Nestle and Marico are there in the green as well. Interestingly, because of this fall, the valuations have become cheaper. Let's get in all the stocks, especially to talk about the 5-year averages, how things are panning out. And over here itself, there seems to be a little bit of valuation comfort also. If you could show the other stocks also in the FMCG space as well. Kush, just a small query on the technicals. I just want to understand from the FMCG portions, before we head to the reasons why is there any good risk-reward ratio on the technicals here?
The risk-reward ratio is extremely favorable. The only concern is that there isn't momentum, and as you rightly pointed out, they've been seeing selling pressure at every rise. So doesn't really make for a very compelling trade from a near-term perspective.
Well, yes, but let's talk about the fundamental reasons also why there is a focus coming in of these stocks as well. Of course, the negative returns are coming despite the improving performance. The raw material price inflation comes in due to the West Asia crisis, and also other reasons include the price hikes that's impacting the volume growth as well. Couple of more stress points, especially El Nino has been below the estimates, and the normal monsoon has impacted the rural demand as well. But there can be a recovery, right? So recovery, the urban demand and volumes are seeing stabilization. Any kind of ease in inflation comes, there's a good data point coming in, and the premiumization is leading to a structural growth as well. The stocks with the highest return potentials are on screen, especially GCPL and Varun Beverages you should be focusing on. Others are also there with more than 20% return potential coming in, and analysts are viewing the input costs are the biggest near-term risk to the margins. Also, a couple of points is there's a clear improvement coming in the rural demand. that is where a little bit of bullishness lies, and urban consumption is gradually improving as well. So there might be a silver lining to the declining FMCG pack.
Right, thank you for that, Sharad. Now let's talk a bit about IT. UBS believes investors are beginning to reassess the bearish case on IT services. Puneet joining in with highlights of this report.
Well, thank you for that. It's largely what they are taking on as a global theme that we are currently seeing, that the AI as well as the semiconductor stocks are seeing a sell-off, and that rotation is going back into the software-related names. And part of that move that we've seen in the Indian IT stocks is defined by this same theme, according to UBS as well. They mentioned that investors are increasingly now questioning the complete bearish stance on the sector, and hence you've seen some moves already, especially in the large cap IT names. They mentioned that there are several structural concerns, of course, which needs to be answered at this point of time, that are also being challenged with these new deal wins, as we've seen, like TCS amongst others, but they still need an evidence for a broader bullish stance, and that continues to be limited at this point of time within select names. They finally mentioned that they continue to remain very selective and preferring companies that continue to score well on execution, and hence their preference is very maintained in terms of the mid-cap IT space as well. They've upgraded Coforge actually to a buy from a neutral earlier. Target price now 2,400 versus 1,505 earlier. They've also downgraded Persistent to a neutral from a buy earlier as well at this point of time, mentioning that a target that and mentioned that they feel that a lot of that move is already done for Persistent. Emphasis also has been upgraded in this particular note, while Tech Mahindra has been the other upgrade to a buy from a neutral earlier with a target price of 1,865. There have been downgrades in the large cap IT space for the companies in this particular note, but overall a broader sectoral note essentially, which with linking to what we've seen globally in terms of the software stocks as well.
Puneet, thanks so much for that. And in fact, keep an eye on the IT pack as a whole. Remember, in trade yesterday, it gave up quite a bit of gains intraday and ended with gains of just about 2%, 0.2% or thereabouts. Let's talk about Indian hotels. And it's in focus on account of the fact that it is merging with Oriental Hotels in an all-stock transaction. No cash outflow for either company. The merger will add 7 hotels and 825 keys to IHCL's portfolio, strengthening its presence in South India. We're set to speak to Puneet Chhatwal, who's the Managing Director and Chief Executive Officer of the company, of course, and we're very excited for that. But before we get to that, let's just set the context a little bit and some of the contours of the deal before we get to Puneet. Varsha?
Well, thank you for that. It's an all-stock deal, no cash involved or outflow for either company. Currently, if you see, IHCL and subsidiaries hold almost 37.1% stake in Oriental. It's OHL, which is an associate company of IHCL and has 7 hotels with 825 rooms. If you see, IHCL has a portfolio of 650 hotels, including 268 in pipeline. Management guides EPS accretion for IHCL from year 1, and cross-holding between IHCL and OHL will reduce sharply. Onto the deal structure, well, Oriental shareholders will get 25 IHCL shares per 117 OHL shares. Onto the outlook, why this is being done, of course, this will lead to a simplified structure which is expected to streamline governance and cut overheads, and post-merger, if you see, EBITDA margin is guided about 30%.
Thank you for that, Varsha. Mr. Puneet Chhatwal with us. Mr. Chhatwal, very good morning. Tamanna here. I want to start by reminding you that I asked you this question when we spoke last. I think you were expecting me to say this. And I asked you, are you looking at Oriental Hotels? You said if we have the opportunity to increase stake in Oriental Hotels, we would do it, but it's a board decision. And you said, I don't know why this keeps coming again and again. So finally, the decision has been taken.
Yeah, good morning, Tamanna. You are right. But the constant, which we call change, did not happen. I got this question for 8 years, different news channels. And once it even came on a ticker on one of the other channels, not yours, that it actually happened. So, I was like kind of getting bored, but I thought now this time it is getting a bit serious, and I'm glad it's done.
Yeah. No, so you said, "Chalo, khareed hi leta hu." Let's close it then. Tell us the advantage, what it means, what it means for the group, why this is a strategic tie-up, and how does it add to you, especially in terms of your revenues?
The things have changed in India. Things have changed for Indian hotels. A 7-hotel portfolio listed entity, from our point of view, takes a lot of management bandwidth, and consolidating it or merging it made a lot of sense. From the OHL point of view, the promoters are in the third or the fourth generation. And it's not the same as when it started almost 5 decades ago. So I think at that point, the business was done that way. And we have been on the journey of simplification. One of the group's initiative on one of the S of the 6S strategy, and simplifying the structure helps us a lot. It helps us to also consolidate 2 other entities, that is Taj Madurai and Taj Karnataka. It increases our shareholding in London. It gets us 3 freehold assets, and all 3 are very iconic. That's Taj Coromandel in Chennai, Fisherman's Cove, as well as the Gateway in Kunur. It helps us to not have a large corporate overhead of a listed entity, especially when the revenue level is around 500 CR. So it goes up to maybe 550, but the cost associated of being listed is disproportionate. So that's one. Then also we can spend a lot more money on asset management because IHCL is having a lot of cash, it's not having any debt. So we could eliminate the debt in OHL, invest in the freehold assets, make a turnaround like we have done, or enhance the profitability like we've been able to do in our other iconic assets in Delhi and Mumbai.
So a lot of notes this morning, and I'm glad, Mr. Chhatwal, we got a chance to speak after some of that analysis is out, so we can ask you about those views. I'm sure you've seen them. They're looking at the deal as EPS accretive. They're saying that you could see a scope of margin and revenue improvement in year 1 itself. Is there anything that you have quantified or have a ballpark figure in mind on what kind of improvement you could see in revenues or margins thanks to this deal?
I think anything close to 300 basis point as EBITDA margin growth would be a fair assumption, and that would be as of next financial year, assuming that we are able to have a firm date of 1st April. If we were consolidating as of 1st April, then 300 basis point margin expansion within the current portfolio is a safe bet to make as we stand today. It could even be higher going forward. That will be driven mainly by the asset management initiatives, as I have mentioned to you.
Puneet, good morning. Neeraj here. Sorry, did I just hear you say 300 basis points? And did I not hear you say by what timeline? Because 300 basis points and the nature of business that you have is very, very strong. By when does this happen?
Well, let's say if the base is around 26%, we could easily get to 29-30% in the very first financial year because of the elimination of a large amount of cost, but also certain initiatives that we can take to eliminate the debt. This is not some kind of a very big science out there. It's just a consequence of not being listed and also not having debt.
Yeah. No, my mistake. I got confused because I thought you were talking about the console EBITDA margins moving up. You're talking about Oriental margins moving up 300 basis points. Yeah, okay.
At 35, we've been reporting around 35, Neeraj.
Which is why I thought on that base, 300 basis points would have been quite something. But okay.
Well, it could be an aspiration, part of Acceleration 2030 strategy, but we are very pleased with 35, given the amount of money we are spending on our new businesses. As we had no upfront costs, so we have to market, we have to push our select service business, and that cost comes with the marketing part of it.
Puneet, you should be careful about using the term aspiration. More often than not, you turn it into reality. People might start believing 300 basis points for Indian hotels is a possibility. So, but just a follow-up that I have is on this cash reserve that you sit on, and you now kind of shown your hand by doing multiple things in terms of acquisitions or creating sub-brands within IHCL, which was traditionally known as Taj, but now Taj Plus, multiple other things, right? How much more willingness to deploy that war chest to acquire one more sub-brand, create one more sub-brand by acquiring some assets? Anything that you can share?
I think as far as the brandscape is concerned, we are in the process of absorbing the new brands and in the process of stabilizing, as I just mentioned. But in terms of acquisitions, anything which is a good fit will keep coming, and we are very well positioned, as you mentioned, with the cash reserves that we have, without any obligation of debt that we have to make that happen. But it has to be a right fit, and it has to be value accretive, it has to be EPS accretive, and it should not dilute our margins. So we'll wait for the right opportunity. And if, like last year we did Ank Pride, which added to the footprint of Ginger. So that takes Ginger now almost to 150 operational hotels in a total portfolio of 250. So in another year or 2 years, if we have 250 operational Ginger hotels, by making an acquisition, yes, that made sense then. That makes sense in hindsight a year later. And I'll be very happy to report on your channel in another year from now that all has been rebranded. All obligations have been met on fire life safety. All the gingerization of those assets has happened. So I think it's a good example of how things work. Or if we did Atmantan, it was entering into integrated wellness concept, which I think is going to become very strong in 3, 5, 7, 10 years from now. So any of those opportunities that make sense, we'll go for it.
Puneet, hi, Alex here. So you spoke about the cost levers that you will be able to move for Oriental next year, which would yield that 300 basis points. I'm just wondering about the rates, because from what I can see, the average room rate at a 75% occupancy for Oriental hotels is about 11,600 or thereabouts in FY26. And now that it joins the IHCL family, I'm wondering if you can sweat them more, if you can charge more, and if that's a lever that you can use.
Alex, a great question. I should have thought of mentioning that. See, we are managing the assets. It's not that we are not doing everything possible to get a higher rate. But the question is a great question because there are a couple of markets in India that are lagging behind Delhi, Mumbai, and Bengaluru. And Chennai definitely, or the greater Chennai market is one of those where the rate uptick is yet to come as a market itself. And I think from the timing point of view, it's a very good timing because my firm belief is that the rates in Chennai market will also increase also due to the fact that there is very limited supply coming into that market. So with two key iconic assets like Fish Cove in business, leisure market, as well as Coromandel being the iconic asset in Chennai, they will definitely benefit from it.
And I just want to be absolutely clear with regard to the fact that these assets that you will acquire through the Oriental deal, the brands will remain the same, and will there be a bid down the road, Puneet, to add more keys in that leg of the business?
Yes, that is what I called asset management. Okay. The brand obviously remains the same. Taj is Taj, Gateway is Gateway. 3 very iconic Taj properties in there. Malabar in Kochi also adds to the list of Chennai, and the asset management initiatives definitely could help us drive more value in Coromandel as well as in Fish Cove is 35 acres of land. There is FSI available, so we could add some villas, some keys. Make it, a destination with a larger banquet facility. And the ability of Oriental to do that on its own was not there.
Understood. Just a last point with regard to some of the initiatives that you have. You run some of the largest hotels, Puneet, and at the same time you've moved smaller and yet more boutique, more premium. There are some offerings that you have there, right? So is that going to be a major driver in FY28, or is it too early for that to take place on the bottom line side?
May I use, I think the first time, let me use the opportunity on your channel to say something. India has changed. and is changing faster than we can think. So what we have from the past, we are preserving that, slowly progressing that, but not leaving behind the rest on the table for others to take, true to the name of Indian Hotels Company. So we need to address the needs and wants of all Indian customers. That's why we have been consolidating our established businesses, adding new businesses like in homestay, like in integrated wellness, driving the growth of Ginger, which had I said 8 years ago that we will have 1,000 Ginger hotels, nobody would have believed it. But now we are right upfront in that journey, leading ahead. I think in 15 years or 20 years at the most, you'll have 1,000 Ginger hotels in India, Ginger in every district capital. So it's not a question of small or big. I think our backbone, our iconic brand was, is, and will be for maybe another century the Taj. But Taj's aspiration or ambition has to be to become the largest and the most acknowledged luxury hotel brand in the world with hospitality made in India. We have a portfolio of Taj of 150 hotels now.
Got it. Puneet, absolute pleasure speaking with you, and exciting times ahead, certainly. Wish you all the best.
Thank you, Alex. Thank you.
All right, sticking with conversations with companies, and we've got Seagull India joining in. They've been winning orders, quite a few of them, and interesting ones at that. They're in focus, of course, after securing fresh orders worth over 2,900 crore rupees, and that includes major projects on the Arunachal Frontier Highway. We're going to discuss that in more detail, and we've got Ramnik Sehgal, who is the Chairman and Managing Director of Seagull India. Ramnik, thanks so much for taking the time as always, and good morning to you. Alex here. Can you tell us a little bit about some of these orders, because this is the first HAM order that has been successfully monetized as one of them. The question is, how much capital is likely to be unlocked from the remaining HAM portfolio?
Good morning, first of all, and thank you for having me over. So we've been completing our HAM assets and been selling. We've already done that in the past. In first quarter, we've already sold it to NEO. We've already tied up for 3 assets with NEO. This quarter also, we're trying to sell the second one, and third quarter again, the third one. So we have a target to close all the 3 deals before this 31st March. Talking about Arunachal, we have secured 3,128 crores of the order book. This has added one more state to our portfolio. And going forward, if you ask me, with Seagull, order book has never been a challenge. We already have an order book more than 18,000 crore. This year, we guided our investors to get 6,000 crore, out of which we already touched 1,000 crore. 704 is already allotted.
Okay. Let me ask you also about the timeline for the monetization of the Bathinda, Dabwali and the Jalbera Shabad assets. Can you give us an update on that?
So, Bathinda, Dabwali, we're targeting to close it by September 30th. It might push to 15 because, you know, there are some permissions we need to take it from NHI. The rest, everything is lined. And for Jalbera, we are targeting to close it before 31st March.
Ramnik, the ordering activity per se seems to be very strong, because I've seen your name come up on a number of order wins in the recent past, but it also extends to, let's say, Larsen & Toubro and some of the others as well, both on the road side as well as on the construction side. I would love to know what's your sense of the overall ordering activity right now, and what is your current order book size, of course, and where do you expect to end with whatever visibility you have, let's say in the next 1 quarter or for FY27?
So, good question. First of all, we are not an EPC player. 70% of order book is from a developer side.
Okay.
We have 11 verticals. We almost touched upon 16 states. So we are not waiting for road tenders only. You know, if we are not getting a road, we're getting into renewable. If not renewable, we're getting into T&D. So if you see 70% of our order book, which is about 19,000 crore right now, is from 11 different verticals. And, you know, we started our company from Ludhiana, Punjab. We hardly have 18-20% of the stake in Punjab now. You know, we have more work in UP, Bihar. So every year it's a target to expand at least to 1 or 2 states or to add 1 or 2 verticals. That's the growth story of Seagull. And that I always say after IPO, the Seagull 2.0 is this where we are adding more verticals. It's not required that we have to be into this road business. We need to bid at 25% project IRR. And if you see the project which we have sold, which is of Malotapur Sadhuwali, we have made much more than what we have guided our investors, which is 25% IRR. And going forward, we have already quoted more than 25,000 crore of the projects, and we have guided 6,000 crore to our investors. Last year we guided 5,000, we got 11,000 plus.
You talk about 6,000 crores order inflow.
Yeah, we have guided 6,000 crore order inflow. We've already touched upon 1,000. And last year we guided 5,000, we got more than 11,000 crore.
Super.
And our revenue has grown about 30% from since we got listed.
Right.
So this year we are giving a guidance of minimum 15% growth in the revenue as well.
15%?
Yes.
Okay. This is despite a strong ordering activity. So is it because of the high base?
So, we always give a conservative numbers. I really want to give lesser number, achieve more.
That way that you can give 5% and then deliver 20% as well.
No, that's there. But, if you see, last 2 years, I always used to say we would do between 10 to 15%. Okay. And this year, I'm saying I'll do minimum 15%. And we have delivered 30% over 2 years,
Okay. Tamanna, here's a management which is saying that I'll give 15%, but I know that I'll do more, which is very good.
Which is great. It's confident.
It's confident. The question though, Ramnik, I have one final question really from my end, which is there you mentioned Seagull 2.0, right? Is there a target, blue sky, or a target that you set for, let's say, a 5-year target, 2028 or 2030, wherein you will reach conservatively?
So, as I said before, we always wanted to achieve between 10 to 15% conservatively, and we have achieved 15%. And if you say by that 15% growth, we have already a roadmap for next 5 years. And, order book has never been a challenge. As I said before, we already have a 19,000, almost 5x of our turnover. We did about 4,000 crore last year. So, God has been kind. Our management, our teams are so well equipped, and we are always looking forward to adding more verticals. As I said, we are not a EPC company, we're a developer now. 70% of our order book is from a developer side. I'm happy to add here our renewable side, which we started last year. We are already about to commission about 30 megawatt. First 5 megawatt power plant we are going to apply in this month end. And by next month, we're targeting that the tariff should start.
Actually, Ramnik, I wanted to ask you about the renewables and the BESS business as well. What is that total order pipeline looking like? You said we're no longer an EPC company. Are you going to become a large renewables player?
So, we have really liked this line of business, and we are about 21% of our order book from this vertical right now. And we really want to grow this. And as I said, our target is to complete 300 megawatt this year. Again, a conservative target. And 30 megawatt is almost installed. And month on month, we want to install at least 30 megawatt. And going forward, we want to increase in this vertical both. We are doing wind, we are doing solar, we are doing solar plus battery, we're doing battery and TND. TND, we're doing a Welgaon substation, which we are targeting to complete in the next 15 months. And we have quoted for large transmission line contracts also, again on a developer side.
Okay, Ramnik Sehgal, thank you so much for speaking with us today. That's the management of Seagull, talking about Seagull 2.0. I just want to quickly pull up the stock before we wrap up that conversation, and about 1% up right now. But, a lot of the action nowadays in the primary market, and Augment Enterprises 825 crore IPO is in its last day of subscription. So if this is an IPO that you're looking at, today is really the last day to come in before the list. We're going to be speaking to the management. They're in our studios, in fact. Very good morning to you.
Good morning.
Yeah, but before we start that conversation, Puneet joining in to quickly set up and tell you a bit about the company. Puneet.
Well, thank you for that. It's, when was the last time we spoke to a company which recorded revenues of 94,000 crores and coming in for an IPO? And I think hence that conversation that you to watch for Augment Enterprises specifically, they operate, they are an integrating precious metals company essentially, and in the gold as well as the silver value chain. including both bullion trading as well as refining, digital gold, jewelry manufacturing. Those are some of the other key verticals, and hence because trading is a big part, hence you see that massive revenue base for the company of almost 94,000 crores in this year for FY26. But there is essentially a lot of questions to ask for. One is how the company records its revenues, because post when you remove the value of the product, what is the actual revenue for the company? That'll be the first question to watch out for. Apart from that as well, bullion trading has been the enterprise bullion sales is one of the bigger, 92% for the company as well. So where does the company and the management expects this number to go will be the other key factor, as well as looking at the moat of the company post listing. What can investors expect? These will be some of the key questions to ask for, but definitely a big size in terms of revenue, as well as the fresh issue largely going to working capital. So what's the plan post IPO will be some of the key questions to ask the management today.
Puneet has set it all up for us. Thank you for that, Puneet. We'll come to some of those questions, but welcome to both of you. We have Ketan Kothari, promoter and whole-time director in our studios, and Sachin Kothari, non-executive director at Augment Enterprises. Forgive me for not knowing, but brothers or?
No, we're actually school friends, and
both happen to be Kothari.
Yeah, both happen to be Kotharis.
Okay, so you're school friends, and then when did you decide to start off Augment?
So Augment started in 2012. So I've been in this business for 23 years. I realized that there are too many challenges, and without technology, you can't solve that. For example, we have had the derivatives exchange for gold and silver since 2003, but for the spot platform, for the spot market, it's always phone-based. Even these derivatives exchanges tried their hands with the spot business, but the very nature of this business, not only in India, but globally, always requires you to have a counterparty. Unlike an exchange technology where the buyers and sellers are matched, that particular technology did not work in the spot market for these derivatives exchange when they tried this. So then we realized that, we can't continue with the phone-based trading. We need to solve this. So then I decided to start Augment, and we started with the idea of using technology to solve gold-related problems.
Okay.
We started with the spot platform. The idea was that Augment will be the counterparty on the platform directly to the buyers as well as sellers, because that's the ideal way the gold market works globally.
So Ketan, like Puneet mentioned, 94,000 crore rupees in revenue. Why are you raising money? Some 800 odd crores that too?
If you go to see, we have firstly out of the 94,000 crores, obviously the larger there is a cost of gold and silver. If you remove the net cost of gold and silver, then you have net revenues of around 580 crores.
Oh, okay. So that's how much gets compressed.
Yes, and of that we have made 348 crores of PAT in FY26, which is around
of the 540. 580.
So that is around 60%. Now, what has happened is, obviously, as in this particular trade, you're not allowed to raise debt as per the RBI rules. So we fall short of capital. It's not that, so we have 20 delivery centers. We have 5,223 jewelers. But we have not been able to onboard more jewelers. We want to onboard more jewelers. We want to have more delivery centers. There is demand from jewelers. Our tonnage has gone down last year, despite the fact that revenues have gone up. We're just not able to cater because the value of gold has gone up. So obviously we need capital, and majority of the capital that we are raising is going in working capital requirements.
And the 205 crores of OFS is the Kotharis cashing out?
Yeah, so the thing is, there is a particular modeling that you have to do, and if you go to see our businesses, that either you have gold or money at the end of the year. So if there is too much of cash also, you can't really raise a particular amount beyond a particular model or whatever is the model suggesting. So it's all more like a forced dilution in terms of an OFS, because you need to meet the minimum dilution requirements as well. But the original idea was to raise the company only in the money only in the company.
However, the same investors are still invested in the company, and it's a partial liquidity event.
Yeah.
But sorry, why forced dilution?
No, in the sense that you need to have dilution of minimum of 10%, right? So say, for example, the original idea was to raise 800 crores directly in the company, but the model was not, it was showing too much of cash. And, normally IPOs for working capital requirements are very limited. So we had to be so the BRLMs obviously suggested a particular way to go forward on this.
Fair call. Okay. How does business move? I mean, you made a telling point that yes, gold prices would have gone up, but your tonnage came up, and Sachin, you can feel free to come into this as well. But how does business move ahead? I presume that with this working capital requirement and the expansion, etc., that you do, you would envisage a particular growth in business. Your ROIs have been super strong thus far. I would presume you want to keep them or strengthen them even as you expand. Give us a roadmap. Your viewers are listening in. want to know if they should subscribe, what's the kind of growth that you guys will deliver? Either of you.
So just to throw some more light on the requirement of working capital, our working capital cycle is 1.76 days.
Wow.
So the way this business works is a jeweler is actually buying on the platform, for example, and he has 2 days to make the payment and then take the delivery. But on the supply side, I have to make the entire 100% payment, make sure that the gold is in transit and reaches the delivery center. Hence the requirement of working capital, which is approximately 1.76 days, let's say 2 days, for example. And because of this 2 days working capital, we rotate our capital much more often in a year. And that's why you see that that's a very good capital efficiency and ROE business. Going forward, our strategy is to actually increase the number of delivery centers from the current 20 to increasing to 35. So we want to reach even tier 3.
With this capital? With this capital alone? You won't need more capital for this? Okay, fine. Huh.
And we intend to grow in tier 3 and tier 4 centers, because these are the centers where we have not reached because of the limitation of capital again. And we have been kind of restricted to around 20 delivery centers for a longer duration now. Again, because we didn't want to open up a new center, onboard a new jeweler, and then say no to them for delivery because of lack of capital.
So I just want to make this absolutely clear so that everybody and me understand how the business operates. You refine precious metals and you provide this to jewelers. You've onboarded a certain number and you intend with the addition of this working capital to add more to the network. That's how it works?
So, our primary business is the platform business.
Yeah.
The refinery is a backward integration, because obviously also there is a benefit of making India where the import duty is slightly lower on the Dore bar.
Yeah.
But overall, we see the entire cycle. If the Dore bar cycle, say for example, with the Dore getting shipped from, say, for Latin America, is much longer, but is it making sense in terms of utilizing the capital efficiently, or is it making more sense to procure it locally and recycle? So all those parameters keeping in mind, we have all the sources possible. So we have sources of international mines, we have sources of local markets, local scrap, ETFs, IIBX, and the banks as well. So on the basis of which the system identifies which is the best source to take the supply from.
And what is the mix of gold versus silver and maybe any other precious metals currently?
So it is mostly gold and silver. Platinum is a very, very small percentage, but 80% roughly in terms of revenue is gold, and 20% roughly is silver. So 19.79% to be precise.
Do you anticipate that shift will take place more, and does that have any implications for revenue generation or margins?
So in terms of margins or revenue generation, doesn't really make a change, but obviously silver has been growing on the platform. If you go to see, we did 1,049 tons of silver FY26. Before that, we did 1,033 tons. Before that, it was much lower. So we have we've been recognized as India's #1 silver platform also last year.
Okay.
Because of the growth in the silver business as well.
So my research team points out that you've got significant business dealings with the promoter group, which is Riddhi Siddhi Bullions.
Yeah.
Can you describe what that entails?
Sure.
And it's currently at what, 27% odd?
So two things. One is obviously Augmont has always been an authorized participant on gold and silver ETFs. But in March 2023, there was a circular which required you to have the delivery of gold and silver that you have for the gold ETFs and silver ETFs to be delivered through an exchange member. And we were not an exchange member. And as a refinery business, as a platform business, having an exchange membership meant that there is a lot of compliance added to it. And that time, obviously, there was no intention to go public. So that's when we decided that we'll use the membership of Riddhi Siddhi and deliver the gold. All the transactions are done at arm's length. Riddhi Siddhi also buys from the spot platform. It's been approved by the audit committee and the board of directors. However, the day we decided that we are going public, we realized that we should have our own membership. We floated a subsidiary called Augmont Trading Limited. We took the membership. We have started getting onboarded on these gold and silver AMCs. However, it's a slightly longer drawn process. So as and when more and more AMCs, the larger ones, get onboarded, it should come down.
But Riddhi Siddhi right now is 27% of your revenue.
Yeah.
As a customer. So now what happens when you onboard your own and
so we can deliver directly. We can deliver directly on the gold and silver ETFs. There are 22 schemes of gold and silver ETFs. So all those schemes combined, if you go to see, even the larger customers are all these institutions who are the gold and silver ETFs.
No. So does this transition have any temporary impact in your accounting? Once Riddhi Siddhi moves out and your own, holding comes in?
Yeah, so not really. The customer actually changes. In this case, the end customer will be the AMCs. We will still sell the same quantity of gold that we've been doing in the past with the same margins.
Okay.
So there will be no impact or any difference to the business that we are doing.
Okay, just want to understand about the refining bit.
Sure.
What proportion of what you're selling is something that you're refining yourself, and does that really make sense to get into the refining side of it, or how do you describe that really?
So if you go to see our business model is such that we complete the entire life cycle of gold. The whole idea is that customers should be able to manage their gold just the way you manage money through the various applications you have for managing money. For managing gold, there were no applications or no this thing. So the refining business is an extension to the entire life cycle of gold, because you have customers wanting to sell old gold. You have jewelers also wanting to sell their old gold. You have international doré supplies as well. So that's why it becomes a very important part of the back-end integration. Plus we have all the accreditations of NABL, BIS, international accreditation like RJC and India Good Delivery, with which we can deliver on the exchange. So as part of the whole life cycle approach, we can deliver on the exchanges as well as and these ETFs as well. So that's the whole idea behind having an accreditation, backward integration in terms of the refinery. Okay. In terms of the retail customers, or if you go to see, we have one more platform called the Augment Gold for All. We have 4.9 crore customers as of March 26, as per mentioned in the RHP. We have 218 fintech partnerships where these fintech players are able to cross-sell gold as part of the digital gold. And then we have 4,691 touch points through which we reach out to these customers, including our own touch points called Gold for All stores, which are 106. So there the customers are able to do loan against gold. They're able to sell their old gold jewelry, because you have to have an omni-channel approach to anything related to physical metal.
Very interesting. I have one question which I asked earlier. I'm not talking about the revenue from operations, because there is a skew there, right? Yeah. But I look at your bottom line number, which is not skewed. It's been a phenomenal growth rate the last 3 years, right? From 75 or 76 to 350 currently. What's the road ahead over the next 3 years?
So the idea is to scale both the B2B business as well as the B2C business. If you look at the B2C Gold for All business, the consumer facing business, it has increased from a revenue contribution of around 3% in FY24 to 7% in FY26.
Okay.
The margins are better in the retail business, and retail is something that we have started only around during the COVID times. So it is a very recent phenomenon for us, and we believe that we have not even scratched the surface for the retail business. So on the B2B side, as I mentioned, more jewelers and also increasing the number of delivery centers. On the B2C side, increasing the Gold for All stores and also increasing the fintech partnerships that we have with API integrations for distributing all our retail focused products. So that is what the strategy is. One more thing that we have started now on the B2B side is cross-selling other products and services to the same set of jewelers. For that initiative, we started the lab-grown diamond platform, where again it's a platform business. The growers have listed the inventory on the platform, and we are selling lab-grown diamonds to the same jewelers to whom we sell gold and silver. We also, as you mentioned in the RHP, as a part of strategy, we are going to sell chemicals, alloys, etc. to the jewelers to cross-sell more products and generating more revenue from the same jeweler.
So what do the numbers become? 350 crores FY26. What does the number become? The third time I'm asking this to you now.
So, okay, unfortunately, I can't give any forward-looking statement, but we've shown...
Broadly, would you show the continue the same growth rate?
So, we've shown what we have done in the last few years, and we're working towards whatever strategy has been discussed, we'll implement that.
So I'll give you one statistic. India imports around 711 tons of gold. Even at such high prices last year, India imported 711 tons of gold. And then if you triangulate with the hallmarking data, India is a 1,100 tons market because of the recycling and all. And we did 53 tons of gold. So, and as per the report also, it mentions that the unorganized market is still around 60%. So, there is a market to capture. There are a number of jewelers to capture. We just have like 5,200 jewelers today.
So you'll have more ability, I think, once the IPO is over to talk post the quarterly results. Maybe
Absolutely.
we can have a more detailed conversation.
We welcome you back.
100%.
Good luck with everything and great to have you here.
But I'm curious, since you went to school together, you said,
Yes,
right?
yes.
Which one of you was the front bencher and which one of you?
Both of us. I was the first ranker, he was the second ranker.
Wow. We'll have to cross-check with the teachers for that. All right, that's the team of Augment here. But the focus stays on the primary market. Sunshine Pictures and Sankesh Jewellers have listed on the exchanges. Let's pull up their current rates and the kind of listing pop that we have seen. Okay, it would be great to see some rates right now. Sunshine Pictures over there coming in, and I can see that there is 7%, 8% up on a Sankesh Jewellers right now, 5% up on a Sunshine Pictures right now coming in. So decent enough listings. And this is a good period for those who are going to list shortly, because the mood seems to have tilted in favor of primary markets once again. But we're also reporting from Tokyo. Commerce and Industry Minister Piyush Goyal is leading India's largest ever business delegation in Japan, with more than 200 industry representatives traveling to the country for a 4-day visit. Rishabh, joining in from Tokyo, and what's on the agenda today?
Absolutely, we're here in the very posh district of Tokyo called Ginza. Not too far away from here is where the Commerce Minister is holding a bunch of B2B meetings. A lot of financial interest that we're seeing from financial services firms. You already have the likes of Nippon Life and Sumitomo and MUFG that have actually come out and invested in India, and the urge from the Commerce Minister is now to double down on that. What he also said yesterday was that there are roughly about 1,500 companies, Japanese companies, that are present in India, and the aim is to double that in the next 5 or 6 years. What we have on the cards here for today is a bunch of very important meetings with Japanese steel makers as well. Remember, yesterday what the minister said here in Tokyo was that he may not be able to support individual companies because, and he continuously backed Indian safeguard duties, because he said that there is a need to protect various companies from the sort of steel inflow that comes in from our neighboring countries. So that's what he said on the steel makers as well. He's meeting steel giants such as Nippon Steel as well as JFE today. What is also on the line is meetings with Kawasaki Heavy Industries. You also have the likes of Mitsui & Co. and Mitsubishi also meeting the Commerce Minister. So the effort is to constantly double down more and more on this, on private investments coming in from Japan to India. There is a target of about 10 trillion yen for the next decade, and that's what the Commerce Minister has come here to sort of really urge and boost the Japanese sentiment back home in India.
Yeah, thank you for that, Rishabh. Unfortunately, in all your lives yesterday, we have exhausted the amount of Japanese we know, including konnichiwa and arigato. But is there anything new that you have picked up?
Ohayo gozaimasu is one of them that I have picked up. There's a bunch of other words that I'm forgetting at the moment, but the key here, the trick here is to simply bow down as a symbol of respect and meeting any Japanese folks here. So that's been the major takeaway for me.
Okay, no, that's fine. That was a pop quiz, and we hope to glean more when you're back. All right, all the latest there from Tokyo. But another important story, because it's 10 years of UPI, from splitting a dinner bill to paying for just about anything with a scan. UPI has truly changed the way India pays. 10 years ago, UPI began its journey with just 2 crore transactions in a year, jumped to 2026, and that number has now exploded to over 24,000 crores annually. What could the next decade look like? Piyush here with a special report.
Absolutely correct. What a journey UPI has seen over the last 10 years. Just in terms of sheer volume, sheer value, you mentioned how 24,000 crore annually transactions have risen from just 2 crore. Annually, if we look at the value of transaction, more importantly, from just 7 crore in 2016 to now 314 crore in 2026. So we can see the sort of a sharp jump that UPI has seen over the last few years. More importantly, UPI is now available in 11 countries, and NPCI is working on making UPI active in more countries going ahead. Overall, in July itself, we saw UPI transaction amounting to nearly 30 lakh crore in just 1 month. Now, we have seen how evolution has happened, right? NPCI has come out with repeated innovative products to further the usage of UPI in hinterlands. For example, UPI first was launched on a pilot basis in 2016 in April and went live in August 2016. After that, NPCI launched its in-house app called Beam, which is used for for UPI payments. It gives handsome rewards even today. Then QR based, now that we scan, this tech was launched in 2017. UPI mandates were allowed in 2018. In 2019, SEBI allowed UPI to be used for applying for IPOs. Then NPCI came out with a host of modification of UPI products such as UPI Lite for small value transaction, UPI Circle for trusted transaction. You can authorize certain people to do transaction on your behalf. Credit line on UPI was introduced. 123 Pay was introduced for feature phones. So a lot of modifications have come over the years. And going ahead, the main things to watch out now with regard to UPI is NPCI has thrice extended the deadline for 30% ceiling. NPCI had initially proposed that no UPI player should have more than 30% market share, but because PhonePe and Google Pay alone dominate more than 80% market share, it has been hard to enforce. Hence, NPCI has thrice extended the deadline, which ends in December 2026. So it's important to see whether NPCI this time puts ahead the ceiling, the 30% ceiling. And further, the MDR talks that are back in the vogue. You know, if there is a MDR on even small value or large value transaction, it may drive some people away from UPI. So it's an interesting space to watch going ahead.
Certainly. Piyush, thanks so much for getting us those details. Let us know how you transact. Are you using UPI? Do you love it as much as we do? Stay tuned. We've got more lined up on the other side of this break, and we'll be back before you know it.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ।
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Welcome to India's biggest grassroots innovation movement. Vande Bharatam.
Back with India Market Open right here on NDTV Profit. Pull up the markets for you, and not that it's doing a lot, precious little if you will, and especially some of the larger weights like TCS etc. have cooled off, and which brings the Nifty to the low point of the day, but it's 1/3%, just a bit listless really. So pull up TCS for you and you will see what I'm talking about. That stock has come off from the highs of the day, about 1/3% currently. Also should pull up some of the other IT majors, because Nifty IT, while it started off flattish, has possibly given up some of the gains. Banks were anyways under a bit of stress. It's not just TCS alone, as I said. HCL Tech, Infosys and some of the others too are certainly a bit lower in trade. So keep some of these in mind as well.
Specifically on IT, this happened yesterday as well. It was one of the top gainers at one point of time, Neeraj, up over 1% and gave up quite a bit of that, ended with gains of just about 0.2%. So I guess the signs were there.
Yeah, possibly. No key triggers. Almost all of them except for Coforge in the red. Okay, let's go across to a big piece of news, Tamanna.
Yeah, we have this big interview coming up. Now, from the mega LIC OFS to the latest Hindustan Copper stake sale, the government has hit the ground running on disinvestment with 52,000 crore rupees already mobilized. We're talking about it now with Mr. Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. Mr. Chawla, thank you so much for your time. And I must say that the year has already started with a bang. Tell us a bit about Hindustan Copper, because the biggest being LIC, of course. How do you see the momentum from here? And what's your reading on the expectations around the Hindustan Copper OFS?
Thank you very much. Team DPUM has hit the ground running, and everyone has worked very hard to make market operations a success. And this is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. And we are making sure that they get a good deal, and they also make reasonable profits. And the public enterprises stand ground as beacons of fairness in the markets in terms of their sustained investment plans, sustained growth, and fair dividends to the investors. In light of that, government has announced an offer for sale for Hindustan Copper today. The offer will be on the markets today and tomorrow. We will be offering 5.8 crore shares under this offer. And as you can see, the market prices have held up. And response has started. People have started coming in. Today, the institutional investors will bid. And tomorrow, we will allow the retail investors to bid. We have kept aside 10% exclusively for retail. And we would encourage small investors that this is an opportunity for you, and you must make the most of it. Hindustan Copper is a prized stock. It's a valuable stock. And this may be the last OFS, because we will now bring it down to 60% and then hold it there for its capital requirements.
Okay.
But this is a great opportunity for investors, and particularly the retail investors should not miss this opportunity. Sorry.
Please complete your point, sir, and then I'll come in.
Okay. And Hindustan Copper, has good futuristic investment plans. It produces copper, which is valuable for our economy, for our supply chains. And we should not be driven by short-term quarterly profits, but we should look at what their medium-term performance is and what their long-term vision is. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards. I will leave the viewers with that information and encourage everyone to make the best of this opportunity. Over to you.
Yes, Mr. Chawla. No, I wanted to underline that you're saying this could be the last OFS for a while in Hindustan Copper. Just want to understand that bit a little more. And also, what are the kind of expectations that you have penciled in? Having said that, the pitch that you've talked about is very apt. This is a stock and this is a company that the street is very interested in.
Yes. For those who know the market and who track market history, we've already had 6 OFS in Hindustan Copper over the last 10 years since 2015. And this is the big one because we are offering 6% on block. And with this, we would have completed the journey. We started, we listed it initially, when it was 100% government owned. And now over the last 10 years, we've now come down to 66, and this will come down to 60. And we're leaving a little margin for the company to mobilize capital on the markets, to be able to invest it in mining that is modern and technology intensive, and be able to use that margin for its capital investment and its sustained growth future. That is what I mean. And this essentially then is the 7th offer for sale as far as Hindustan Copper is concerned. But this one is for the investors. This is for the small investors. This is on the market and it is on the money, so don't miss it.
Okay, that's great. Just wanted to understand which are the other large OFS transactions that you have in the pipeline, whatever you can share, sir, with us. Is it, for example, BHEL, one of those which could come in? Because 9 have been done. How many more?
Good question. Good habits once built up last. I would never even inadvertently reveal which one next. But yes, good habits last. And investors have reposed their faith in us. You saw what LIC OFS, the response it got. It was overwhelming, unbelievable. And we will continue to be with the investors. And we will continue to keep coming with market offers. And we would, we believe, and we have evidence to show this, that public stocks in portfolios, whether it's a mutual fund or a growth option or you build a portfolio yourself, public stocks are useful. They act as a hedge. All the recent turbulence we've had in the market, the public stocks have relatively held, and they promise fair dividends because they're backed by a very fair public policy. I will leave it at that.
I think we take the hint from good habits once built will continue, but I can't help but asking which one next, and it's fair that you won't answer. But I do want to ask you that 80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard, and we will achieve the target, and we will continue to work hard. More than targets, we believe in outcomes. The outcome of this exercise is good because we are sharing public health with small investors. And I think that is the big statement.
Okay. When we speak to analysts, one commentary that often comes about, and I'm tempted to ask you about this, is does the government miss timing on when really to come in with these offers for sale or when to really monetize some very, very valuable assets? Does the timing get missed, or does the government get the timing wrong? Just wanted to get your view on that and this debate. Because there have been headwinds, there's been the question that is this the right time? Do you look at what the atmospherics in the market is when you make these decisions?
Yes, we do. We now have a market research unit within the department. We do research independent of market players and the merchant bankers. We have an operations room which we call Kurukshetra. All I can tell you is we don't miss it anymore, and we ensure the markets also and the market players also miss it reasonably, so that the surprise is there for us to make market operations succeed.
That's fantastic. So what is the sense you're getting from Operation Kurukshetra on whether the timing is right in the remainder of this financial year?
Well, take today's example. throughout the market hours yesterday, everyone expected a different metal, but end of the market yesterday, a different metal came on the block.
So
the prices held up, and everyone mobilized liquidity, and now they are pleasantly surprised because they have a good offer they can make money on.
So is this the only metal on the block then?
You will not be able to get any transaction-specific information from me, but let's celebrate what is on the table today.
Okay, let me ask you one more question, sir, if you will allow me. What is the dividend picture looking like for CPSEs after what has been a stellar FY26?
You see, the first half, the dividends come in the second half. The first half is only the residuals of the previous year, and maybe a bit of special dividends here and there. Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
Okay. Thank you, Mr. Chawla. I'm tempted to ask you a lot more, but I know that specifics is not something which you will be able to answer, and I appreciate that. We also want to talk about how stellar this whole process has been and how the government has been handling the OFS regime so well. We also take the point of giving retail investors an opportunity to participate in the growth of some of these very valuable national assets. Thank you for your time, Mr. Chawla, this morning.
Thank you very much. Take care and good luck.
Good luck, sir. So that was an exclusive conversation with the DPUM secretary, and some important points coming in there, including that, a very clear hint that more OFSs are on the anvil, with that statement that a good habit once developed should continue. They also expect to comfortably meet the disinvestment target. There was no clarity, though I asked that question, whether they will exceed it or not, but it will be comfortably met. That's pretty much all the time we have on India Market Open. We'll take a very quick break. We'll come right back with Ask Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. और trust, पूरी दुनिया का. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज, हमेशा आपके साथ।
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम, भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, Foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTP World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin hits $80,000 mark for the first time since May. Banks regulators join quantum crypto transfer pilot. Bitmain buys in $81 million in Ethereum, reports $14.9 billion in crypto. And US Treasury proposes stable coin licensing rules under the Genius Act. Well, it's a red letter day for Bitcoin. It has hit $80,000 mark for the first time since May. This is driven by, of course, institutional accumulation and rising ETF flows, which signals long-term conviction. Strong bullish technical momentum continues, but remember the levels are overbought right now. Currently, Bitcoin is up 24% and Ethereum is up 31% over the last 7 trading sessions. Well, the banks and financial regulators across the Europe, the Middle East and Asia have joined up pilot testing quantum resistance infra for digital asset wallets and on-chain transfers. The banks will test wallet generation and transfers in a shared application environment, while the regulators will observe the first phase and contribute to a governance workstream later on, with the participation levels differing between the institutions. Well, the crypto treasury company Bitmain has bought $81 million worth of Ethereum amidst the crypto rally. Now the company has reported $14.9 billion in crypto and cash holdings. Remember, Bitmain is the largest treasury company for Ethereum. Chairperson Tom Lee stated that Ethereum's 30% rally last week could signal a larger technical move ahead. Bitmain owns roughly 4.8% of Ethereum's total supply. Lastly, the US Treasury Department has proposed new licensing rules for payment stablecoin issuers under the Guiding and Establishing National Innovation for US Stablecoins Act, or else we call it the Genius Act. This is opening another major comment period for the digital asset regulation. Under the proposal, payment stablecoin issuers would need to obtain a federal or state license starting January 18, 2027. This, of course, gives regulatory push to the stablecoin ecosystem
and more retail flows are expected. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely, we have seen up moves continuing for both Bitcoin and Ethereum. Even the smaller coins such as XRP, Solana and Tron doing well in trade. The support resistance levels are being pushed for all the major coins. Well, time now to take a look at the crypto strategy for the day. Here's what's there to keep in mind. Remember, the bullish momentum continues in the market, and now we can see tangible institutional accumulation happening. The flows are actually outweighing the short-term overbought risks, the technical levels concerns which is there. But nevertheless, remember, the risk-on environment is favoring the altcoins as well. But remember, you cannot rule out short-term profit booking. A big up move has already happened. So that's an important point to talk about if you are into trading. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Good morning, you're watching Ask Profit morning edition with me, Somit Sarkar. In the next 1 hour, about half an hour, 1 hour so, we'll take through all the queries that you have, be it fundamental or technical, with our guest today on the show. Before that, if you look at the markets, the Nifty, again a downtick of nearly 90 odd points, holding around the 24,100 levels in trade. Nifty Bank, similar kind of downtick, around 100 odd points, 0.19% down in trade. If you look at the sectoral indices here, but do remember that today is the expiry day, so most likely either it could be a very volatile trade or a muted trade. When it comes to sectoral indices, other than Nifty Media, none of the sectoral indices are trading in green. Nifty Media is the only index to trade up around 0.2 odd percent. On the losing side, we have Nifty Metal down around 1%, followed by Nifty Auto and Nifty IT, which are down nearly 0.6 to 0.7% in trade. Among the FNO stocks, if you look at, is GE Vernova, Hindustan Zinc, Nalco, which are down more than 2%, followed by Hitachi Energy and Samvardhana Motherson, which are also down around 2 odd percent in trade. On the gaining side, we have Vodafone Idea up around 5%, followed by Kane Stake and Angel One, gaining more than 2% in trade. Similarly, Steel Authority of India, Motilal Oswal, AU Small Finance Bank up anywhere between 1.8 to 2 odd percent in trade today. But let's start. Firstly, let's welcome in our fundamental and technical guest on the show, Swati Hotkar, AVP Technical Research. Nirmal Bang is a technical guest joining us. And on the fundamental side, we have Avinash Gorakshakar, founder and head research, Avinash Mentor Research Services. Welcome to both of you. Firstly, we'll start off with the stock or with the query on Hindustan Copper. The government of India has opened their OFS, but Padma from Bangalore is already holding around 75 shares of Hindustan Copper, bought at a price of 475. She wants to know whether should she add more at the current levels or any other, or should she exit. Any view on this, Avinash?
Yeah, good morning, Sumit. My sense is, today the OFS is happening, and I think the shareholder has actually purchased this share at a reasonably lower level. Copper prices continue to remain firm, and I think broadly, the copper cycle is going to play out in a big way because, with lot of data centers, with lot of power generation capacity coming in, I think copper is going to be a metal which is going to be in high demand. A large part of copper still continues to be imported. So my suggestion is that, the investor can hold on for the next 12 to 15 months. We expect a stronger FY27 number. And the government, as per reports, has stated that this will be the last OFS. The government holding in this company will now be 60% after the OFS. So I think, that takes away the fear that there could be some further sell-off here, largely because of the OFS possibility. So my suggestion is hold on. You could expect a better price maybe in the next 12 to 15 months. So it's better to hold and wait.
Got that view, Avinash, and very good morning and welcome to the show. The next one is coming from Uma, who's from Bengaluru. Her question is on Vedanta, holding almost 200 shares, bought at 286, asking what she should do with this counter in the short to near term. Swati, very good morning to you as well. What would be your recommendation for Vedanta now?
Good morning to you and to all the panelists. The review is definitely positive because the counter is trading important moving averages, and just as of now it is just consolidating within the range of 260 to 280 levels. I believe once the stock manages to give the breakout of 280 levels, which is also the resistance provided by the 100 DMA, so once it's clear out that levels, then definitely a more positive mood likely to be witnessed, which will take a stock towards to 300 rupees. So I will suggest at the current levels you can definitely hold on the long position, place a stop loss of 260 and carry your long positions for immediate target of 300 rupees on the upside.
Got it. The next one coming through, and this one's on Cyient. Our viewer Venkat, who's from Hyderabad, holding shares at almost 1264 odd rupees, so he's currently sitting on a loss. The stock is, finally starting to see some moves, now about 900 rupees, but he's still in the loss. Avinash, what would you recommend him to do? Because he's starting to see some moves on IT as well. Maybe the global, what we're seeing globally as well, rotation back into these software-led stocks. Would you recommend him to average down, or maybe he should just continue to hold? What's your opinion?
No, I think Puneet, if he has got a 12 to 18 month time frame, I think he should definitely average, because what is happening in the IT sector is very clearly a lot of Indian IT companies are now either buying out AI startups, or they are planning a joint venture with these companies. So I think Cyient is also definitely well managed. It's got a very strong business vertical in segments like aerospace, railways, and typically I think if you see the numbers have been pretty steady. So my sense is, I think if the investor can hold on for the next 12 to 18 months, he could average a little and stay invested here rather than booking a loss at this point of time.
Right. The next query is on PFC and Bharat Electronics. Jerry from Pune wants to know whether is it the right time to invest in both these counters for the next 2 years. Avinash, your view on this?
Yeah, I think we are more positive, Somit, on Bharat Electronics. I think the company's stock price corrected, after the tepid Q1 number, but the management commentary was very strong. They have clearly indicated that execution will get ramped up in the Q2, Q3. And they are sitting on a very large order book. The company is completely debt-free, and avionics and electronics, BEL is considered to be a market leader. So my sense is, if the investor can hold on for the next 2 years, Bharat Electronics at the current level, or maybe you could buy it in a staggered manner. Which was the other stock you mentioned?
PFC.
No, I think PFC, I think one can hold on, wait for some time, because I believe PFC and REC, there has been some merger announced. I think let the stock stabilize and settle down. I think maybe PFC can be put on hold for the time being, but definitely I think maybe, if it corrects by say 5-6%, then one could gradually accumulate, but that too with a 18 to 24 month view.
Got it. We also had a Morgan Stanley note on PFC largely being bearish that they are losing on to some market share, especially in that power space, to other banks. So that could be a story that's something that you have to watch out for how that plays out. But the next question is from E. Venkatraman from Bengaluru. So he's holding on to HDFC Bank as well as HDB Financial. Now, both those counters you had a lot of queries on. He wants to know if he wants to exit one and continue to just hold either of them. Avinash, is this an easier choice than none? We've seen some good earnings come through from HDB Financial, but what would your advice be? Which is the bigger play that he should hold on to on his portfolio?
I think both these stocks have disappointed investors, Puneet, and my sense is that unless the investor has got a 2 to 3 year kind of time frame, a reasonable alpha from these stocks looks very difficult. But nevertheless, I think HDFC Bank has come to a very attractive level, and I think the bank is making all-round efforts to ensure that it gets back on track. So my sense is, if we can hold on for the next 2 to 3 years, HDFC Bank, which is the parent, can definitely be held on. But again, with a long-term perspective, in the short term, there are not going to be many earnings triggers which could, make the stock get into momentum in the short term.
Right. The next one is on Transformers and Rectifiers of India Limited. Mahesh from Hyderabad is holding few shares, bought at a price of 355. He's currently sitting on a loss. What should he do from short to medium term? Swati, any view on Transformers and Rectifiers?
View is little bit cautious as of now because the counter is trading in a low bottom, low top formation. So I believe that the selling pressure is likely to be seen in the near-term futures. A positive move can be witnessed only if the stock manages to give the breakout of 315 levels, which is acting as a crucial resistance levels. If it manages to those levels, then only we can witness some buying position. But at the current level, I will suggest to hold on. Sell on rise strategy should be implemented. 290 can be kept as a stop loss. Any rise towards to 315, 320 can be utilized to exit the loss position.
Got it. The other one also, Swati, sticking with you on Premier Explosives. A viewer bought these shares at 792. Let's pull up that counter now. Trading at around 665. Swati wants to know what he should do with the next 2 to 3 months. So very short term. We've seen a corporate action here play through as well. Any view on the counter?
See, the long-term view is definitely positive because already we have seen a very sharp rally from almost 350 to 850 levels, and from there onwards we are witnessing a profit booking which cannot be denied after such kind of a rally. As of now, the stock is stuck got between the 50 and the 100 DMA. I believe we are likely to witness some sort of a consolidation phase in this particular stock. But for longer-term horizon, my view is positive. We might witness some sort of a depth towards to 630 levels, which is the support provided by the 100 DMA. So probably a short downfall can be witnessed, but definitely there will be a rebound rally which can be witnessed, which will take a stock back towards to 750 to 770 levels. So I will suggest to hold on for some more period of time. Any uprise stick towards to 750 levels, you can book your profits.
The next query is on Jio Finance. Bharat from Porbandar, Gujarat is holding 543 shares, bought at a price of 258. He wants to know whether should he continue to hold on to this counter. Avinash, your view on Jio Finance?
No, I think, Somit, in case of Jio Finance, my sense is Q1 numbers were pretty decent. I think unless the investor has got at least a 2-year plus kind of horizon, a large risk reward is not likely. In the short term, the stock may remain in a very close range. But my sense is longer term, a good reasonable risk reward can be expected. So continue to hold, but I think keep a time frame of at least 18 to 24 months.
Got it. Well, the next question coming through, it's on Godrej Industries. Our viewer Ravi is holding these shares at almost 1240 odd. So he's currently sitting on a slight loss, Avinash. He wants to know if he should still continue to hold. Does get access to a lot of other companies, Avinash, but is that the way to hold stakes in multiple companies? Would that be your recommendation?
No, I think, Puneet, this is a holding company, as you rightly mentioned. They have stakes in Godrej Consumer, as well as one of the other companies, that is Godrej Agrovet. But I think clearly in terms of the risk reward, these kind of holding companies normally trade at a discount. So I think unless the investor has a very long term horizon and wants to actually get both the dividend as well as the capital appreciation part, he needs to stay invested for the next 2 years. So unless he's got a long term horizon, he should hold. But otherwise, if he's got a short term horizon, it's better to exit. He could probably look at some of the good PSU stocks or maybe the banking stocks where I think the risk reward could be better. Something like an ICICI Bank or maybe a Canara Bank could definitely be a switch if he decides to do so.
The next query is on Marksans Pharma. It's for you, Swati. Prashant is holding 150 shares, bought at a price of 241. He wants to add more. Should he do that based on charts?
Based on the charts, I will suggest to wait for some more time. No wonder the view is positive, the trend is still positive, and on the weekly charts, we have witnessed a cup and handle formations breakout. But from the last 2 to 3 weeks, we are continuously seeing a very strong pullback rally from almost 240 to 340 levels, 100 points momentums. Any dips towards to 270, 260 levels can be utilized to build up the average short positions or the fresh long positions. So wait for some more time because the counter has shown a negative crossovers from the overbought zone. So we might witness some sort of a profit booking, which will take us counter towards to 250 to 270 levels. So wait for some more time. Then on any dips towards to 270 to 50 levels can be utilized to build up the long positions.
Got it. Well, let's go across to Bengaluru now. Ganesh is dialing in for a stock-related query. Ganesh, very good morning. Welcome to the show. What's your query? Hi, Ganesh. Can you hear me?
Hello.
Yeah, hi, Ganesh. I can hear you. Go ahead.
Good morning. I have got 70 shares of HR Motor at an average price of 4,500.
Okay.
Can you please tell me how long its prospects for the next 5 years?
For the next 5 years, got it. Well, Ganesh, firstly, many congratulations. Bought it at a very attractive price, Avinash, of 4,500 rupees. What would you recommend Ganesh to do? Should he continue to ride that wave, hold on for the next 5 years?
No, I think, Puneet, very difficult to say what can happen in the next 5 years, but at least for the next 2 years, I think visibility seems to be very strong. Eicher Motors is the manufacturer of commercial vehicles, and they also have the Royal Enfield product, embedded in their product bouquet. So I think, considering both these factors, the CV cycle has started looking up. I think for the next 12 to 18 months, business from the CV business will continue to grow rapidly. And most importantly, Royal Enfield operates in a very niche area. So I would say that continue to hold. If the investor does not require any funding requirement in the short term, I think he should ride the momentum. Our expectation is FY27 should be significantly better compared to FY26. So continue to hold.
Correct. Well, let's now start the rapid fire round in this edition of Ask Profit, and this one will be the only one. You did see the flashes that Nilesh Shah of Kotak will be joining in today at 11 o'clock. So let's start taking those stock related queries. Sanjeev Jain, holding on to Sagility, bought at 48 rupees per share. Avinash wants to hold on for the next 2 years. Should he continue to do so?
Yeah, I think Puneet, he should hold on. The good long-term prospects.
The next query is on MCX. It's for you, Swati. Sabita from Hyderabad is holding few shares. What's the short-term target on this counter?
The view is positive. The short-term target is around 3340 to 3400 levels. You can hold on by maintaining a stop loss of 3200 rupees on the downside.
Also, Swati, on Cupid as well. Nand Gopal, who's a regular viewer of the show, holding shares at 250 odd. He wants to know if he should still continue to hold or book out right now.
I will suggest to hold on, but maintain the strict stop loss of 275 rupees on downside. You can hold on for an immediate target of 300 rupees.
The next query is on data patterns. It's for you, Avinash. Asma from Bangalore has bought 10 shares at a price of 4,896. Should she continue to hold or sell?
I think the investor should hold on for the next 2 years. Very good company, but I think the risk reward will play off over the next 18 to 24 months.
On Sona, BLW is the next counter, Swati. Our viewer holding shares at 656, so currently in good profits. Wants to know the next 3 months time frame. What's the view?
The view is positive on this particular counter. I believe the stock has the potential to reach up to 840 to 850 levels, so you can hold on the longs.
The next query is on Gujarat Energy, which was earlier known as Gujarat Gas. Ajay Kapoor is holding few shares, bought at a price of 275. Avinash, should he continue to hold?
Yeah, I think continue to hold. Gujarat Gas is a very old player in the piping gas space, and I think good long-term prospects. So continue to hold.
Sharath, who's from Bengaluru, is holding on to Bellrise at 200 rupees. Avinash wants to know if it's a good time to accumulate more, or should he actually book out the profit and then come back in?
No, I think these levels the stock is unlikely to correct because Q1 has also been reasonably good, and I think now they are entering into aerospace defense. So continue to hold.
The next query is on Beerless International. It's for you, Avinash. Savita Jadhav from Nashik is holding 100 shares, bought at a price of 264. Should she continue to hold or exit?
No, I think she should continue to hold. Yesterday there was some news, Somit, about some compliance issue related development, and the stock corrected sharply. I think management has clarified that nothing negative is on the card, so continue to hold.
Jigar, who's from Mumbai itself, wants to know about JSW Steel, Swati. He's holding shares at 1017, asking if it's a good time to add more now.
No, wait for some more time. I believe the view is definitely positive, but any dips towards to 1250 can be utilized to add up the long position. The immediate target will be 1400.
The next query is on Marico. It's for you, Swati. Asta Sabarwal is holding few shares, bought at a price of 730. Should she sell or hold?
I will suggest to book the profits at the current market price, and if you can add on the fresh longs and dips towards to 810 to 800.
Murthy, who's from Navi Mumbai, wants to know about Tenneco Clean Air. Avinash holding shares at 575. We've seen some steam actually, Avinash, go off on this counter, but is it still a good hold now?
Yeah, I think Puneet, if you look at the next couple of years, the kind of technology and the kind of product monopoly they have, this is definitely a stock to hold on, but I think you need to have a little bit of patience here. Definitely long-term investors will be rewarded. So continue as a hold.
Got it. Well, the stock's been rising since the listing at I think 397 odd, but that was the last question of the rapid fire. Avinash as well as Swati, thanks so much as always for giving us your inputs and views across a whole bunch of stocks and spaces. But viewers, we'll take a very short break. Because you know what, the big town hall with Nilesh Shah of Kotak on the other side, and it'll be an interesting one. You can send in your queries as well for the same, but at this point of time, with the markets in consolidation over the last 2.5 years, what's next will be the key question that we'll be posing in on markets, mutual funds and wealth creation. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anviksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every...
Hello and welcome to the NDTV Town Hall, and we are going to be in conversation with a very special guest, Mr. Nilesh Shah of Kotak AMC, known to call a spade, known to mix cricket with investing, I would say sport with investing, and one of the foremost figures in the Indian mutual fund, finance and investing ecosystem. Nilesh bhai, so good having you. Thank you so much for taking the time out and being with us.
Thank you, Neeraj bhai, for having me here.
No, the pleasure is ours. And the town hall format, Nilesh bhai, is that I'm going to ask you maybe 2 or 3 questions. I want to get the audience out here who is sitting to ask you a few questions as well. There will be some hard-hitting ones, and we'll get some hard-hitting answers from you, I'm sure. So we'll have to duck for cover. But we'll also get in the audience to ask in a few questions to you.
Perfect.
Okay, great. So can I start off, Nilesh bhai, by asking you, the common refrain that after 2 years of flattish performance, the Indian markets have done away the excesses and might give good returns when the anti-AI trade starts happening out. We don't quite know when that is happening. We still are at crude levels northwards of $90 a barrel, and we don't know for sure if they will come off. And while the P multiples of the valuations have cooled off, but they are nowhere cheap relative to a lot of other markets. Why should the Indian markets deliver returns from here on?
So, everything will depend upon what is your definition of good return. If you are looking for 30% return, this is not the market where you should invest. A stock can deliver, but not the market. But if you are comfortable with high single digit to low double digit return, then this market is good enough to invest. As you correctly mentioned, we are at fair value, not cheap, neither expensive. You also mentioned that our takeoff will happen when other people's anti-AI trade reverses.
Possibly.
And that's the fact of the life. We can't argue against it. India doesn't have AI play as much as other countries have, and hence we'll have to wait for anti-AI trade. But the reason why I will recommend investors to invest in this market, because there are some incredible entrepreneurs who are doing incredible work, whether it's in deep tech, manufacturing, financial services. These companies are creating value. Now markets can recognize it today, it can recognize it tomorrow, but it will one day surely recognize. So you are investing in this market to back Indian companies and Indian entrepreneurs of incredible quality.
Okay, and you believe there is a case for that right now, as has always been the case. You've always had incredible promoters.
That's always been the case.
Okay, perfect. There is also an added element, Nilesh bhai, of trading coming in, and while it's always been the case, I think the last 3 or 4 years or 5 years, there have been enough instances of the regulator showing that retail investors are making huge losses when it comes to trading in the derivative segment. You've been at the forefront of this as well. Now my question to you is this: does the regulator need to do something from a regulatory or a stricture perspective to curb these losses, or will it be an overreach if there are regulatory measures introduced to curb retail speculation in the derivative market?
We are a democratic country. Regulator does not have power to stop anyone. Regulators' work is like that famous story of old man, a boy and a donkey. When the old man sat on the donkey, the world said, "Arey, you are keeping boy walking." When boy sat, the world said, "Arey, old man is walking." When both of them said, world said, "Oh, donkey is overloaded." And finally, when they started carrying donkey, the world said, "Look who idiots are. They are carrying donkey instead of riding on it." So regulators' job, whatever they do, people will find a fault. And hence, the best thing they can do is to give transparency. A mirror has been put in front of Indian speculators. You are losing money. If I ask any of retail speculator, will you go and fight with Muhammad Ali in boxing? Answer is no. But they are going and fighting with Muhammad Ali every day. The high frequency traders have better connectivity, better algo, more money power, and better computing power. There's no way you can win against them. But still, greed drives rationality out. The regulator is doing their job. They are advising investors, they are cautioning investors, they are bringing transparency in terms of the losses they are making. Now it is up to individual to take the call.
Okay. You know, I had a question on the closing auction session as well, but I know Alex has that question too. So what I'm going to do is I'm going to mix and match, Nilesh bhai. I'm going to get our colleagues out here to ask you the questions, and I'm going to chime in with some questions of my own while that is on. Alex, I want to bring in the CAS question here, but I know you had one. Maybe we start with yours.
So I will actually remind Nilesh bhai that we had spoken, I think, barely a couple of days after the introduction of the CAS. And first of all, thank you so much for joining us, and always a pleasure speaking with you. You had said that it will take a 10 days or a fortnight for things to settle. Based on what you've seen, and in the interim, there's been regulatory action as well, where the regulators come out with a notice against a couple of entities playing in the market. Do you think that it has settled? Do you think more needs to be done to create a little bit of transparency? Do you think it's having a bearing on volumes?
So, undoubtedly, there will be some impact on volume, partly driven by the fact that regulator is punishing wrongdoers. So that volume will definitely go out of the market. Second, closing auction has settled, but can it be improved further? Answer is undoubtedly yes. The regulator will have to remain vigilante, because there will be always temptation of someone to play around and influence the closing price. As mutual fund, we have given our suggestion to ensure that closing auction session becomes even more meaningful. This is how globally exchanges operate. This is how passive funds ensure that the tracking error is limited. I think water will settle down, but regulator will have to remain vigilante so that no one takes the advantage.
Just for the benefit of our viewers, Nilesh bhai, can you take us through some of the recommendations that the mutual fund industry has given?
So essentially, one recommendation is coming from arbitrage fund point of view. The NAVs there fluctuate wildly and the spreads go up and down because the future prices closes at 340, whereas the cash prices settle at 330 on closing auction. So we are saying that could we have a mechanism whereby we can arrive at a theoretical future prices based on the actual spread traded between 245 to 315 or 3 to 315. That theoretical price of future will reflect the market spread, and that can be applied on closing auction prices. That will take care of the anxiety of arbitrage fund investors. The second is about participation of mutual fund in the closing auction. We have been participating both from active as well as passive, and there are some leeways necessary to ensure that our participation can be meaningful. Hopefully, we are in dialogue with regulator. They are always open to hear suggestion, and that will make closing auction even more meaningful.
Okay, Nilesh bhai, just a follow-up here. I mean, a lot of debate around the introduction of CAS, the timing at which it has been introduced as well, and maybe some misinformation too. But I reckon that one of the things is that this is the mechanism that is used at various markets in various jurisdictions across the world. Are you happy with the timing and the way it has been introduced, or do you think that there could have been a different format for the closing auction session, or a different timing might have been more suitable for the closing auction session?
Neeraj bhai, change is always going to be difficult. And as a regulator, they will whatever they do, there will be always some criticism. So I don't think so timing-wise. In fact, it is better late than never applicable here. We could have launched closing auction earlier also. So we are bringing our market at parity with the global standards. In many cases, we are setting the standard like T+0 settlement. Change obviously has its own impact, but I think closing auction is now behind us and our markets will move forward.
Okay, guys, so if anybody had doubts around that, that is sorted. Sorry, you had a question on the closing auction session?
No, I have a different question.
Okay, so then before we get to your question, I have one follow-up, Sharad, and which is one more thing that Nilesh Bhai has been at the forefront of talking about, and which is gold, right? All of us invest in gold. Indians invest in gold in a big fashion, and I believe, Nilesh Bhai, you pitched SEBI for gold-linked products and REIT funds. I've written it down, and which is why I'm reading from there, right, to channelize those savings. Now, how would you... Let's say to all of us here who are sitting out here investing into mutual funds, investing into gold, what would you tell us? Would it be prudent to channelize all of our savings or majority of our savings into mutual funds because equity creates great wealth? Or would you say bifurcate it between mutual funds and gold, finalization assets, etc.? How do you kind of advise us?
So one is the advice from asset allocation point of view.
Okay.
We have always recommended investors that you need to invest across debt, equity, real estate, commodities, including gold, silver, and global assets. This we were saying yesterday, this we are saying today, this we will see tomorrow. There will be no change in it. Second, when you are investing in gold, there are options available in mutual fund like gold ETF, gold fund of fund, or gold silver fund of fund. These are all convenient way of investing. The product which I had proposed for SEBI is to allow us to use gold options. Today when you invest in my gold fund of fund or gold ETF, I will deliver return in link with the gold prices. Gold prices go down, I will go down. But if I'm buying options on gold, it's possible for me to create principal protected gold fund. If gold prices go up, you get full participation. If gold prices go down, I will let my option expire and there will be principal protection. We need to be innovative on gold. When you are buying physical gold, you will import $100 worth of gold. When you are buying options, maybe you will buy 5, 7, 10% in options. So all my request is that let's be innovative on gold, so that we can leverage our frozen savings for the growth of the economy.
So you're saying you are pitching for products which would bring down the overall import of gold, but still give people the returns mirroring gold price movement.
Absolutely. And that's just one dart thrown, one arrow thrown. You need to have multiple other things. Like in El Salvador, someone launched Ether, a crypto backed by gold. They had to keep gold in Switzerland to attract investors. Indians are the largest owner of gold in the world. Why can't our startup launch crypto backed by gold or a stable coin backed by gold? If you launch stable coin backed by gold, the price movement of gold will be with issuer, not with investor. Can we have gold monetization scheme? We are sitting on 35,000 ton plus of gold. Can we recycle it? Can we launch gold bonds like the sovereign gold bond, but backed by the physical gold? Today, when physical gold sits in Neeraj Bhai's Tijori, it doesn't reflect in RBI's balance sheet, even though money has gone out of India.
That's true.
I can give you gold bond backed by physical gold sitting in RBI's balance sheet. Reserves will at least go up. So there are multiple options available to monetize gold. My favorite dialogue I have repeated often, इतिहास कहता है भारत सोने की चिड़िया था, but आज हम कस्तूरी मृग है जो FDI के लिए, FPI के लिए दर दर भटक रहा है. But in our own Tijori, we have 125% of our GDP. Let innovation monetize that gold in a manner that we become Kasturi Mruk to Sone ki Chidiya again.
Okay. Well, one way that I think we can do this, and I'm going to save this for the end of the show, is Nilesh Bhai usually has a complete know of the regulatory framework as well. He may not have it this time around, but at the end of the show, the last thing that we do on the show today is request Nilesh Bhai to give our very capable startup entrepreneurs an idea for a gold-backed startup, right? A tech-based, gold-based startup, which they can do, which will save the country Forex and at the same time get investors to invest in gold. So Nilesh Bhai, that's at your door. We'll do this as the last thing on the show today.
Sure.
Right. Before we move on to the next thing at my end, questions. Sharad, you have a mic. You have a question. Please go ahead.
Yeah. Hi Nilesh, bhai, welcome to NDTV Profit. One interesting query, you spoke about Rishabh Pant. Now he has hit 100 sixes in the test matches, right? But it seems like small caps and mid caps are also hitting sixes and fours. Of course, we are concerned about Nifty, the large caps. So what do you see? Which sectors are hitting sixes and fours here in the mid caps?
So Sharad, clearly small and mid caps earning growth is running at double the pace of large cap. If you don't put enough power in the stroke, you are not going to go to 6. The small and mid caps are hitting 4s and 6 because their earning growth is 30% plus for last 2 quarters. Sectorally, if we see, metals have done very well. Metal converters have also done very well. Then industrials have done very well. Then some of the NBFC and PSU banks have done well. In fact, bearing oil marketing companies and energy, every other sector we have seen either in line with expectation results or ahead of expectation. It's almost unbelievable how corporate India has delivered this kind of earnings growth in a falling rupee, rising crude prices, supply chain disruption, and monsoon worries. On a bowling pitch, clearly India Inc. has batted like Rishabh Pant batted yesterday or in the first test.
So is there any kind of, turning pitch or some sectors which you should avoid,
So my feeling is that in today's market, I don't think so people are investing at least at institutional level in badly governed company. 1 or 2 of our calls can go wrong, but by and large we are investing in right businesses. And sometimes, there are campaigns, like we invested in one of the startup companies IPO, and everyone on social media was jumping us, and accusing us. Today that stock is up, one of the best performing. So, remove the motivated campaigns. We don't know why people, do that. But overall, I think badly governed company, institutional investors will not be there. So effectively, you have to focus is on valuation.
Was that investment under the lens, Nilesh bhai?
Absolutely. It was under the lens of the market. And all those guys who, wrote nasty things, they are not apologizing. They'll move to next script.
Yeah, I think that's the nature of the times that we are living in.
Yeah.
But can I ask a follow-up to Sharad's question? Will investors be well served if they have 11 Rishabh Pants in their team right now at the current juncture? Or is there a dire need, looking at the pitches, to also have a Rahul Dravid and a Cheteshwar Pujara in the team?
So it all depends upon your risk profile. If you are playing gully cricket, where once you have taken the betting, you can go out, then might as well have 11 Rishabh Pants. Anyway, you are not going to bowl. But if you are playing a real test match, then you need to have Cheteshwar Pujara and Rahul Dravid. You need to have your Bumrah and Prasidh Krishna as well. My recommendation, figure out what game you are playing. If you are in test match, have a balanced team. If you are gully cricket where your rules are my way or highway, then you can do whatever you want to do.
I have a disclaimer. I was a cheat. All the kids in my society were younger than me, and I had the bat. And my dad gave me a little bit of money to take the bat, also purchase it. So I used to go down and I used to be like, पहला batting मेरा है क्योंकि bat मेरे पास है.
Absolutely.
आपने भी किया है?
No, I never had the bat with me. So I was always fielding. I am a victim of your kind of player.
Okay. Nilesh bhai, just a follow-up there for one more to what Sharad was trying to ask you, and probably asked you very well. I'm trying to make an attempt to. Is that one is that you can have an ideal mix of 4s and 6s, etc. But who are the Rishabh Pants currently? Because when one look at quarter 4 and quarter 1 put together, healthcare in general, but CDMO or diagnostics, hospital chains, etc. have done very well. Some of the chemical companies, both in quarter 4 and quarter 1, the results were good and the commentary is also looking solid, etc. And if the rate hikes are going to come, then everybody is saying banks will be the next Rishabh Pants because they will have everything in their favor. Balance sheet is looking okay, etc. Where are the Rishabh Pants for the next 6 to 9 to 12 months?
So one, you don't pick up Rishabh Pant with 6, 9, 12 month horizon.
Okay.
it's quite likely that he may be driving in a fast lane and end up meeting with injury.
Okay. So do it for 3 months.
So do it for 5 years, 7 years, 10 years.
5-7 years. Okay.
Don't
sorry.
do it for
I
3 months,
misunderstood.
6 months. Number two, there are contradicting trends which you'll have to keep in mind while finding out Rishabh Pant. For example, on consumption, you have 8th pay commission coming into play. It's effective 1st Jan 26. It's not been incorporated in the budget of FY27, but chances are that it could come in revised estimates of FY27. If not, it will certainly come in FY28 budget. From 1st Jan 26 to 31st March 2028, there will be payout of about 7 lakh crore. Now, it could be paid part here, part there, but there will be that kind of income. Where will this money be spent? That will boost the consumption. On the other hand, there is higher consumer debt to GDP ratio. It's increasing, and it can't keep on increasing forever. At some point of time, it will be flattening out. So people who are consuming by borrowing debt will get impacted. Now, when you're trying to find Rishabh Pant in consumption, please ensure that you are in those products and companies which are going to benefit from 8th pay commission, but at the same time, which are not relying upon consumer debt for their sales. Same way in industrials. So you'll have to find out your Rishabh Pant in the niches in which top-down things are playing out, and bottom-up you have to pick up the right stock.
Okay, leave the cricket analogy aside, but are chemical companies, pharma companies looking good, Nilesh bhai, because they are cyclical? And I know you look at these very closely while you look at the AMC by and large, but there are some themes that you've...
In chemicals, we believe specialty chemical companies should do well.
The cycle is turning.
The cycle has turned around. They had huge competition from China. They had expanded capacity and suddenly they got hit with lower prices. So they all have cut cost. They have debottlenecked their plant. Now today they are as competitive. And fortunately for them, rupee depreciation has come handy. So combination of cost cutting, debottlenecking and rupee depreciation has turned around the chemical sector. Will there be good opportunities there? Answer is undoubtedly yes.
Okay. Well, we'll talk about more of the sectors as well. And I know some of my fellow colleagues have some questions too. But just before I do that, I'm told that there is a viewer query. Should we pull up the viewer query? I'm asking my producers and ask Nilesh bhai, what is it that one of our viewers want to say? So this is the query from Sushri from Delhi. I hope I'm getting your pronunciation right, Sushri. But the question is, the view that you have on the pharmaceutical sector, Nilesh bhai, any new entrant that you think is doing well as a theme, if not a specific stock?
So in pharma, a lot of new entrants are doing great work. Some of them are obviously in the themes of CDMO. Some of them are in the process of APIs and generic. If we expand the pharma sector to cover hospitals and healthcare, again, there is a consolidation happening with insurance penetration and people spending more on healthcare. Hospitals are benefiting. So overall, we remain fairly positive on healthcare sector. Our view is that as income level goes above, let's say $2,800 per capita, spending will shift from food, clothing and shelter to probably education, healthcare, entertainment, travel, tourism. So now probably from staple to discretionary, including healthcare, is the theme to focus upon.
Okay, Sushri, well, I'm guessing you got your answer, and in the way that Nilesh can give it best with the limitations that he has, right? He will never comment on specific stocks. Remember that. What we need to do is slip into a quick break. When we come back, Piyush has a question, I'm sure, as do a lot of others. We'll slip into a break, come back with more. Stay tuned. You don't want to miss this town hall with Nilesh bhai.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया
सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज, हमेशा आपके साथ।
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit।
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our capitalism, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTP World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show.
Back to the NDTV Profit Town Hall with Nilesh Shah of Kotak AMC, and we've had a fabulous set of themes discussed thus far, including a startup idea, which we're going to ask him at the end of the show to repeat with all the regulatory caveats. Remember that. But we're taking questions from viewers, so please send in your queries if you have. And one of the queries that has come in, Nilesh Bhai, and pertinent, we start off the second segment as well with a market query. Bharat from Hyderabad is asking, will we see March lows again? Nilesh Bhai, are you bullish and therefore do you believe the markets will rally from here, or is there a higher probability of touching the lows before touching the highs?
So Bharat Bhai, one should never say never in the market, but based on today's news, March lows looks difficult. Earnings have recovered well, valuations have corrected. On today's news, I don't foresee March lows coming into play.
Which is very good. And by today, you mean the recency, Nilesh Bhai, or is there something specific that's happened?
The current macro scenario at $90 of oil, that's already priced in. US Treasury at 470, that's priced in. Rupee at 96, that's priced in. Earnings growth, that's priced in. Political uncertainty, if any, that's priced in. So unless until there is some news, like US Treasury going to 5.5%, then can March lows come? Probably yes.
Okay, but you're saying the three big things that we talk about every day on the channel, which is the treasury yields, which is crude. You're saying at least the two of them are priced in the current Nifty levels?
Yes.
Okay, very good. Good to know that. Piyush, your question, please.
Good morning, Nilesh Bhai. Two queries. One is on the banking sector. The net NPAs are at historic low, less than 1%, first time ever. Do you see banking sector continue having such good credit cycle, or there could be certain pockets of stress? We have seen one of the largest, even the largest private bank, it has seen a spate of developments over the last couple of months. How do investors look at it? Because from the bank end as well, we have not seen much communication per se, except for what is going on the exchanges, and informally or formally, we have not seen much communication there. This is one on the banking sector. Second is on the RBI's proposed guidelines on for NBFCs on revolving credit. One important product that has been talked about is flexi loan, also loan against shares. Our understanding is that NBFCs are, representing that a few adjustments be made in this particular draft. What is your view on this guideline, sir?
Sure. So banking business and market could move at a different pace. In some sense, in banking sector, we have seen FPI selling along with IT sector selling. And when there is a aggressive selling going on, the stock prices are unlikely to recover, even if the businesses are doing well. And that's exactly what happened in banking. Businesses kept on doing well, selling continued, the valuation got derated. Now our banks are trading either in line or below global banking averages. From a business point of view, I see no signs today, including in small and medium enterprises, large cap sectors, sensitive sectors like real estate, where NPA pressure is building up. There is some pressure on the unsecured consumer loan, but it's all within the expected range. So unless until something changes fundamentally, I don't see NPA level building up. The credit quality standards are good. The scoring system like CIBIL is working well. Corporate India is deleveraged. Put together, NPA level should continue to remain around current level. The problem with the bottom is that you can't go further down. You are already near the rock bottom. From an NBFC point of view, undoubtedly revolving credit facility circular is putting them under pressure. There is a need for refinancing, and there should be a differentiation between refinancing versus revolving credit. NBFCs have made their point with the Reserve Bank of India. I'm sure regulator will evaluate the same and try to create a balance where revolving credit does not result into kind of evergreening of loans and go back to the old NPA cycle. At the same time, legitimate needs of the economy can be met.
Thank you.
ये बहुत ज़्यादा इंटेलिजेंट क्वेश्चन था. मैं थोड़ा कम इंटेलिजेंट क्वेश्चन पूछता हूँ नीलेश भाई. सुबह सुबह हम लोग जब बात करते हैं तभी ये सोचते हैं कि बैंकिंग स्टॉक्स लेने चाहिए या नहीं, सिंपली बिकॉज अगर क्रेडिट ग्रोथ 17-18% है, बैलेंस शीट्स क्लीन है, और अगर रेट हाइक्स होने वाले हैं तो इट शुड ऑल बी फेवरेबल फॉर बैंक्स. क्या ये आर्ग्यूमेंट सही है?
Undoubtedly, the only missing link is up to what price FPIs will sell. When there is a selling, no one is going to give easy exit to FPI. And they have been selling in Indian IT and banking sector, especially large cap IT, large cap banks. Moment their selling gets over, we will see price recovery.
Okay.
And obviously it is based on all the fundamentals which you have mentioned.
But I have a follow-up to this, Nilesh bhai, which is that traditionally we used to look at the extent of under ownership or over ownership that a particular class of investors have, and that also determines what the next leg of action might be. Currently the FIs must be the most under on the ownership chart, the most under-owned of Indian equities in a really long time. Does that play into the minds when foreign investors come out to sell or buy? Because you must be speaking to a lot of them. Is this argument faulty or is this real?
So in some sense, we have to always look at relative valuation rather than absolute valuation. वो अकबर बिरबल की कहानी थी. अकबर ने लाइन ड्रॉ कर दी और इसे बोला, बिरबल को बोला कि इसे छोटी कर दो, without touching it. The only way that was possible by drawing a bigger line down below. If other markets are doing better than India in terms of past performance or future expectation, quite likely that FPI's allocation will go over there. In fact, if we see FPI selling over last 10 years, whatever they have sold in secondary market, they have bought equivalent amount in primary market. So effectively they are selling secondary, buying primary. There's not even a single IPO, including the one under the lens, where we didn't compete with the foreigners to get our anchor allotment or our quota. Second thing, within the overall universe, FIIs have sold mostly banking and IT sector, some of the energy companies, but they have been continuously buyer of small and mid-cap companies. Today, 100 plus small mid-cap companies have all-time high FPI holding. So there are nuances within FPI activity, but ultimately it's whether my line is looking smaller or bigger compared to my peers.
Okay. So difficult to judge that, but just one thing on the DII strength, and a common friend of Nilesh bhai and mine, who is a premier banker in the country, told me recently that FPI is now telling him कि यार ये block आ रहा था, अच्छा block था, हमारे तक बात ही नहीं आई, because the entire block was taken by DIIs only, because now domestic mutual funds are so powerful as institutional investors, much more powerful than what they have ever been in the past, which is such a great thing, by the way, because it's all Indian investors' money, right, Nilesh bhai?
So with great power comes greater responsibility. And while many of us wants to portray DII as big guys, bulky guys, that's not the case. We are very clear in our mind. Our job is to make money for our unit holders.
Of course.
And we will do whatever is appropriate for our unit holders. Can some of our calls go wrong? Undoubtedly, yes. But today, as we speak, majority of our funds are outperforming their benchmark indices. They are adding value to investors. And while 2 years returns are nothing noteworthy, the 3-year returns are still in high single digit to low double digit, which is not bad. When inflation is low single digit to mid single digit, this real return is as good as what was there earlier.
Yeah, I think, and just before we take the next question, I think the argument that comes in is that at times when there are no returns or low returns or flatline returns, people bring in the argument, oh, but FD में वैसा होता तो 6% मिलता, तो FD में ही पैसा better था. They don't bring this argument out when the returns are 9, 10, 11, 12% CAGR, right? That is the problem.
I have always answered that question with a simple thing. Please show me a rich person who has become rich by investing in FD, And I'll show you as many rich people who have become rich by investing in equity. Choice is yours.
Yeah, well, that's such a powerful line. Okay, great. Okay, more questions. And Shivam, you had a question. Maybe we go to you first. Yes, please.
Yeah, hello, sir. Sir, Indian markets have seen a stronger support from the domestic inflows and also from the increasing retail participation. But on the other side, we also have the geopolitical uncertainty. So, if an investor have to start a fresh portfolio, so where do you see the most compelling opportunities over the next 5 to 10 years, and any bigger risks that are underestimated and should be kept in mind for the investors?
So the only risk which a young investor should be aware of is the risk of not investing. If you keep money, let's say in currency notes, it's termite eating currency notes courtesy inflation. If you invest in equities, of course it will go up and down, but probability of making money over 5-10 year period is infinitely higher compared to keeping it in cash. So the only risk as a young person you should be worried about is inflation and real return. You will miss out by not investing. Now, where you should invest? First, start with a diversified equity fund, a large cap, mid cap, small cap, multi cap, flexi cap, whatever you are comfortable with. Start via SIP. Do SIP top up as your income increases. Get comfortable with how markets operate. When negative return comes, how is your feeling? Can you conquer that? Once you get that into play, then you can think of going into direct stocks and so on and so forth. Many people start their car in the 5th gear by doing F&O trading. That's disastrous. That's not going to help you make money. If you are lucky and God is with you, then maybe you will incur losses and get the experience. But if you are not so lucky, then you will make initially some money, you will end up taking a bigger risk and you will have to pay a bigger price.
Okay, I hope that answers your question. Alex, over to you. And then we'll get a couple of viewer queries.
Yes, for sure. So, Lagta hai, Nilesh bhai, you watched the Spider-Man movie recently because you are quoting the dialogues. But having said that, let me ask you about valuations, because we've spoken, I think, on the periphery about relatively new age companies and the way that they do business is very different. And a lot of mutual fund and institutional participation at the primary level as well, right? So, what is the way that mutual funds are now looking at these companies? Because obviously the framework and the measurement of valuation that you would use traditionally is not appropriate. I mean, you look at an FMCG company, you can justify a 70-80 times PE, but you can't look at PE for a startup or a new company. So how do you look at it?
So undoubtedly, Alex, it's an evolving subject. Not all of us have experience in valuing startup. We are also learning, and some people can say also that we are learning at other people's money, but that's my job. What we have understood at this point of time, in the new age industry or sector, winner takes it all. If you are market leader, you will have 60% market share, highest margin, you will take all the profit. The number 3, number 4 guy in that space doesn't make money. So you have to always try to identify winner. To remain winner or to become winner, you need capital. So either you have access to capital through your sponsor, or you have enough cash on balance sheet that you'll be able to fight it out. Third, despite having money, you need a path to profitability. Based on your targeted market share, based on your volume, you will have to create a path to profitability. Now, whenever your quarterly results come and it is bringing path to profitability earlier, then we are buyer in that stock. Sometimes we get shock also and the path to profitability gets deferred. We are seller in that stock. Is this the best way to invest in startup? Answer is undoubtedly no. Will we add more variables into it? Undoubtedly yes. But we have to deal with what we have in hand today, and this model seems to be working.
Okay, I guess that does give an answer to your query. We have 10 minutes and I think we've got 2 or 3 more queries, but just before I take the queries, and there is one more that has come in, I have a follow-up, Nilesh bhai. What are the risks to the returns for the Indian markets? could it be, to your mind, and it could go wrong of course, but to your mind as things stand right now, from this Ganesh Chaturthi to the next Ganesh Chaturthi, is the maximum risk that of flatline returns, or could there be 15, 20% downside? I know you answered in a previous question that never say never and March lows may or may not come, but I'm giving you a 1 year time frame to try and tell me this.
So there are risks which are there on the horizon. The first is obviously the geopolitical. As of today, it looks like that crude will remain in double digit and not in triple digit, and supply of crude gas will be available. If those things change, then obviously outcome will change. The second thing to watch out for is US Treasury, especially the long end. If that continues to rise, investors will shift allocation to equity, allocation to fixed income rather than equity. But those are external shocks. There's no control of ours on them. The domestic side is essentially the earnings growth. If that earnings growth is coming, I don't foresee any other risk. All other risk will be able to manage. And why am I only focused on earnings growth? Because if you had asked me in April 26, will India Inc. deliver this kind of earnings growth? My answer would have been empathetically no.
No, yeah.
With oil, monsoon, rupee and geopolitical, I would have said, Neeraj bhai, impossible. But it happened. So as long as earnings growth come, everything else can be managed.
How does India Inc. do this? When the backs are pushed to the wall, we saw this in COVID as well, Nilesh, by the COVID quarter. Somehow, magic happened, right? Tighten the belts, deliver margins, deliver earnings. It's happened this time as well. How does India Inc. do it?
So partly they have benefited from inventory gains because metal prices went up and your stocks delivered you extra return. Partly it has happened because of cost cutting. Back to the wall, might as well go and start hitting. The third probably is also deft management by regulator. RBI managed liquidity quite well. The government managed supply chain quite well. The prices were up, but the commodity was always available. So I think it's a combination of a nation coming together in a crisis situation, be it government, regulator and private India Inc. together.
Okay, and we saw that performance in your quarter one numbers and the quarter one commentary as well, viewers, because a lot of sectors, a lot of managements which have come on NDTV Profit and of course other platforms as well have spoken very strongly about what has happened in quarter one not being a one-off necessarily, at least where they have a control on. So, and therefore that's a very important thing. Okay, a query, Nilesh bhai, from Pranay from Mumbai, and Pranay is asking, which sectors fit the no debt bracket? I think this must be in reference to the point that you made earlier that you have to be careful of companies which will suffer from having debt or benefit from companies which have a no debt. So which sectors fit that bill?
So Pranab, my focus was more on consumer debt. For example, 2/3 of mobile phones sold in India are sold on consumer debt. So clearly those sectors could get impacted. Whereas people who are buying, let's say, perfumes or watches, they are not necessarily going for consumer debt. But debt is a necessary evil. If you have zero debt, your ROEs do get depressed as long as your return on equity is more than the cost of debt. And if you have too much debt, then it creates benefit while leverage works in your favor and cuts you when leverage is against you. So my recommendation is to always go for those companies which have appropriate level of debt, not too high, not too low.
Okay, but Nilesh bhai, isn't buying of these durables almost become how do I say, a non-negotiable factor? I mean, even if it's being bought on debt, how do people go about not buying a mobile phone? It's for some people it is more important than the left arm as well, right? So how would this consumption suffer?
So, debt excessively will result into multiple ways of break. One, companies will stop giving because your score would have deteriorated.
Sure.
Second, you will have to pay higher interest rates and hence you will calibrate your purchase. Today, let's say, if you are changing your mobile every 3 years, could you change it every 4 years? If that happens, straight away, 1/3 of demand gets deferred.
I hear you. Okay. Well, and you sense something like that is happening in retail credit?
It should happen.
We are getting over-leveraged?
It should happen. Consumer debts are becoming elevated. Now, bulk of the personal unsecured loan is constituting part of the retail loan. So my feeling is that at some point of time, we are going to see some brakes being applied, either by virtue of denial of credit or by virtue of higher rates.
Can I tie it in with what Piyush was asking then, Nilesh bhai? I heard Piyush say, and I may have not got it completely correct, but loan against shares is being spoken about. And we know that loan against mutual funds, for example, which is being already a product existing, comes in at 9%, 10%. Personal loans come in at 16%. A lot of Indians now have mutual fund portfolios. They just don't know that such a mechanism exists wherein you can borrow at 9-10% against a steady product versus a personal loan. Isn't that the most obvious thing to do then?
So that's where financial literacy matters, financial awareness matters. Many a time people don't understand basics of finance. They end up borrowing at a much higher rate and they don't leverage what is there in their portfolio.
Okay. We end with two key things. Nilesh bhai, one most simple financial advice that you can give to all of our colleagues out here. Some are at the start of their earning journey. Some like me have spent 3-4 years and are not quite old. And then some like Alex who've been in this industry for 15-20 years, so are old. So can you give us some advice, please?
So I think there's only one advice. More people have lost money waiting for correction than in the correction. Stay invested.
Alex, that's for you. Profound advice. Okay, Nilesh bhai, now final question, and then of course we'll love to know whether you indeed did see Spider-Man or no. But before that, like I said midway through the show, a lot of startup entrepreneurs actually see financial shows, right? And you gave an inkling of an idea. Maybe it is not a full idea in your mind as well. Maybe there are some chinks in the armor, but you don't say it without having adequate knowledge per se. I would love for you to tell us, what is this whole gold product idea that you were speaking about?
So I just hope and pray someday Indian startup launch a product like Ether. It's a crypto launched out of El Salvador, backed by gold kept in Switzerland. Indians are the largest owner of gold in the world. Everyone knows that. So if we keep gold in India, people will accept it probably. Second, by launching crypto, you will transfer the gains and price movement of gold to the investor. But if you can launch by way of stable coin, then the price appreciation, depreciation can be kept with you. Like today, there are stable coins backed by US Treasury, where the returns of US Treasury accrues to the issuer, not to the investor. We can copy the same concept on gold. A lot of our savings is frozen in Tijori. By giving this crypto or stable coin, we'll be able to monetize the same. Gold will still remain in India with price movement maybe shared with investor or maybe not. But you will be able to monetize that gold. You'll bring FX into India. We have 125% of our GDP lying in gold, silver, diamond, pearl. There's no other nation which will have so much of wealth locked in unproductive manner. Gold prices have gone up. There is appetite among investors. Why can't our startup leverage it by launching a crypto or a stable coin?
Okay, this will, of course, viewers, so anybody who's listening to this is the start or the germination of an idea. You will have to do your own homework, look at the regulatory framework, consult lawyers, do everything. But when Nilesh Shah is giving you an idea, free of cost on NDTV Profit, you got to take advantage of it. So thank you so much for that, Nilesh bhai. We have to end with a fun element, right? So Alex was saying that you quoting some Spider-Man dialogue. So did you see that movie?
Of course.
Oh, you did? Okay.
You have to ask how many times.
Oh, is that so? How many times then?
I guess probably 7-8 times.
More than Dhurandhar? Or
More
did you
than-
not see Dhurandhar so much?
Dhurandhar I saw, but I haven't repeated it yet.
Aha.
But Spider-Man, like as kids, as grown-up kids, that's all-time favorite.
Okay, interesting. The debate on the show today in the morning, Nilesh Bhai, was that now people are waiting for Avengers Doomsday, which is coming in December. I was not completely clued into that argument, but apparently Wolverine is going to make an appearance there too. I don't know if you follow Marvel, but if you do or if you don't, are you looking forward to all of those releases, and therefore should the PVR owner be happy?
I think his announcing that he is doing buyback of shares shows that he believes his company is undervalued at this point of time. And post buyback, if there is a super hit movie which brings customers into Forte, I'm sure he'll be super happy.
No, his social media team will be recording if Nilesh Shah is walking into a PVR or an Inox. I'm trying to understand that. Are you going to do that through the year?
Oh, they should just put someone at Juhu PVR. I regularly visit there.
See, we're giving so many ideas to people across, including Ajay Bijli. I hope he's listening into this as well. But Nilesh Bhai, so good talking to you today. Thank you so much for being with us. Thank you for taking the time out and giving some amazing pieces of advice to our viewers, my colleagues and me here, and everybody who is watching this live.
Thank you.
Right, and viewers, thanks for tuning into this very special edition of the Town Hall at NDTV Profit with Mr. Nilesh Shah of Kotak Mahindra AMC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and former treaties lies the true heart of our capitalist, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions.
Weakness persists. Global cues and expiry weigh on Dalal Street today as Nifty trades below 24,200 level. Broader markets move in tandem with the benchmarks. Sectorally, PSBs and pharma stay resilient while all others trade under pressure. Hindustan Copper shares are under pressure after the government announced an OFS to sell up to 6% stake. The floor price is set at 514 rupees a share at a discount to the previous close. The offer is open for non-retail investors today with retail bidding starting 26th of August. DIPAM Secretary tells NDTV Profit the government is focused on ensuring investors make reasonable returns. He says that the Hindustan Copper OFS could be the last one, but more OFS deals are likely in the future. DIPAM also remains confident of achieving the 80,000 crore rupees FY27 divestment target. IFL Finance is under pressure after its subsidiary IFL Home Finance received a 963 crore rupees income tax demand. The demand covers assessments from 2018 to 2025. Management tells NDTV Profit the demands are part of the regular process, says they will appeal the demand. Fertilizer stocks are in focus after Russia assured India of uninterrupted energy and fertilizer supplies amid West Asia disruptions. The assurance came after Jaishankar's meeting with Putin, easing concerns over India's fertilizer availability and supporting sentiment across the sector. Sunshine Pictures and Sankesh Jewelers made a modest market debut today, listings at premium to their IPO prices. Both stocks, however, later slipped below their listing prices, tempering the initial gains. Hello and welcome. You've tuned into Markets at 12 and I'm Nisha Poddar. And yes, their worry really continues for the Indian markets. And today as well, if you really take a look at the chart, giving up on the 24,200 level is a worry for the Indian market. But let's take a look at where is the maximum damage really coming in from. Well, it's a sea of red when we look at the charts today across the board. Pressure really visible, but not a visible sell-off momentum. So mid-cap 100 index, that's also marginally in the red. When we talk about the banking sector as well, that's also marginally in the red. So there is a persistence of some bit of pressure, but not an accentuated sell-off. That's what the market is looking like as of today. Now, ICICI Bank, Eternal, Adani Enterprises, Bajaj Finance, SBI, some of the top gainers, adding a few points to Nifty 50, but Nifty 50 at this particular point is losing over 50 points in trade, and a large part of that is really coming in. And if you take a look at the contribution chart from across the board, pressure that is seen in minor capacity from all the heavyweights that are on the downward trajectory today. So may it be Reliance Industries, HDFC Bank, Grasim, HCL Tech, Tata Steel. So across the board, there is a little bit of pressure, which is eroding about 50 points coming in for Nifty 50 in terms of the downward momentum. In the sectoral play also, hardly a few sectors like PSU banks, financial services, pharma in the green, rest all seem to be under pressure at the current moment. Let's get chatting about this particular market, pressure points and how to really assess this market and still make money. Anirudh Sarkar, who is the co-founder and CIO of Equinova Investment Manager, joins in now. Anirudh, always a pleasure to get chatting with you on NDTV Profit. How would you play a market like this, which has been, listless, tentative, as well as open to the vagaries of various global cues?
Afternoon, Nisha. I think, you have put it very aptly that, market is completely kind of the listless market. And, when we talk to investors, I think a sense of absolute, you can say the kind of the frustration is built up among investors, wherein, whatever they buy, it doesn't move, portfolios don't go anywhere. But, you keep seeing that, there are individual companies which are doing very well. So it's a bit of kind of a lackluster market wherein I would say that animal spirit is missing in a big way. But having said that, if I look at where the confidence is building up, I think if I look at the earnings which came around in this quarter, the first quarter of FY27, I think it was a decent set of numbers. And if I look at earnings across various industries, various sectors, I think it was one of the best numbers we have seen after a long time. Whether it is large caps, mid caps, and small caps. But obviously, the small caps have continued to do the best. So I think the ingredients are there in place, which can bring the markets up. But I think the confidence among investors is lacking.
Right. And in fact, Anirudh, while the global cues are something which is not under our control, and especially the crude oil prices, do you think that a large part of the negative sentiment has been baked in? And now that the market is a little tentative, so moving ahead from this, what are the internal factors that you are really weighing? How much of that is really capitalized in the market valuation, and how much remains to be baked in? Namely, the El Nino impact, the consumption theme playing out, offset by probably a better, longer festive season. And therefore, some of these factors really come together to make the momentum for the rest of this calendar year.
I think, almost every month we come up with something new, which, kind of hurts our market. And, while if you see good part of this year was spent around, getting worried about oil, Iran, etc. And in fact, beginning of the year, it was all about the US tariff and where the India-US trade deal will head. And then, from beginning of March, we are all into the war and oil prices. But I think the Iran war definitely is not going to come to a kind of, I would say, come to an end before the midterm polls in the US. And that is definitely something which is keeping the oil prices also elevated. So something which I would say the market was expecting that, whenever the Iran war gets over, you'll find the oil prices coming off very sharply. That is not happening. And I think that is also keeping the markets a bit worried that inflation is going to be there for a much longer period than what it was anticipated earlier. Apart from inflation, I think, I would say base effect will also start coming into picture because last year, October, November is again wherein, the numbers were again decently well. So I think the base effect will come into picture. Inflation is hurting. I would say with regard to the monsoons, yes, we have done it. We have done better than what was expected 6 months back, wherein the big worry was that, you will have a huge deficit in rains this year. But I think still pan India, I think the monsoons are still below what should be a good year. But yes, it is better than what was worried initially. With all these uncertainties, I think, market is worried about how the next half of the year will be. If I talk about the second half of the calendar year, because if I look at the guidance from most companies, I think, most companies are saying second half of FY27 will be good, but you could see some amount of pain in the next quarter. So I think that is where, investors are not getting a confidence.
That's right, Anirudh, well pointed out. And you added one more aspect, that is the base effect. In the last year, in Q3, that base effect will also start showing up. Another, thing that is being talked about and is expected is that inflation-led RBI measure. And people are starting to pencil in the 25 basis points increase, if at all, though economists do also argue that it is a supply-side inflation. So therefore, RBI will take a very concerted, look at this particular aspect. So looking at the earnings as well as the inflation being high, and let me add that economists had added $80 per barrel as an average for this year. Now it looks like it's flouting, and for a large part of this particular quarter also we have seen the oil prices above the average level. Looking at this, what is it that you're estimating from the earnings going forward, and how much of that do you think has been baked into the market momentum and valuations?
No, I think as you rightly mentioned, I think, most of the factors, which was bothering the earnings, I think they are all at elevated levels compared to what was expected that, you should see some amount of the rescinding in this quarter or, in the next quarter. But having said that, I would say the way I'm trying to position the portfolios, and this is something, I've been telling investors, is try to be a bit off companies and sectors where inflationary pressures could impact their earnings. Like definitely you have to be off your FMCGs, you have to be off your, all these companies. But where we are targeting is companies where it is more kind of an order execution which is continuing, whether it is the, private defense, whether it is aerospace, whether it is power ancillary, whether it is auto ancillary. So these are all sectors where I would say inflation pressure, whatever margin impact has been there, it has all been passed on. Auto OEMs is one area wherein I would say autos has been kind of, I would say, the flag bearer of our domestic upcycle for the last 1 year. There, I would say, again, you could see some amount kind of the plateauing because auto OEMs have all not been able to take a price hike to the extent that would have ensured their margins are intact. But at the same time, base effect and also delayed festive season could see some impact in their earnings also. So I would say it's a wait and watch.
Right, Anirudh, very nicely you have segregated the sectors in terms of how to assess given the current scenario, and very, very valuable takeaways from there. Always a pleasure chatting with you and taking your insights on the market expertise. Thank you so much for stopping by on NDTV Profit. All right, moving on to some stories and news developments. And sources tell NDTV Profit that EV two-wheeler maker Bagos is really exploring around 1,000 odd crore rupees of IPO, combining a fresh issue as well as offer for sale. My colleague Nimit is right here with all the exclusive details. Nimit, what are your sources telling you about this IPO?
Yeah, so Bagos is a two-wheeler company founded in 2020, and it's exploring an initial public offering at about 1,000 crores, comprising of a fresh issue and OFS. Why this is interesting is they recently also did their Series D round at 110 crores. Now the valuation is still a question mark today, but just to give you context, new age electric vehicle two-wheelers like Ather and also Ola Electric, if you want to put it in that category, trade at revenue multiples above 10x, while the earlier ones, including Hero and TVS, trade at 1 to 2x. So these new age companies are getting a larger valuation as well. But this is a new company. They're in fact going to do a product launch next month as well. And we understand that they're looking to file their DRHP in the next few months. They've already engaged ICICI Securities and Pantomath Capital on this deal. They're also talking to bankers and lawyers and have already engaged lawyers and bankers on the deal. So looks like they'll be moving forward, and they're going with the wind in terms of the IPO market in the second half of this year.
All right. Thank you so much, Nimit, for getting us those exclusive details. And I must also place right here that there are many companies like Kinetic, Ampere, which have really captured the larger volume play in the hinterland when it comes to electric two-wheelers. So that's the competition that this particular company can really face, as is the case with Ola Electric as well as Ather in the listed space. All right, moving on, let's focus on KIMS Hospital. The stock is up in a rather weakish day of trade today, up about more than 0.5%, and KIMS is really expanding its Hyderabad footprint through a 5-year management pact for a REIT hospital, and the 250-bed facility offers an asset-light growth opportunity, with KIMS really earning 9% of the net revenue and also an option to acquire the business later. In fact, Dr. Bhaskar Rao, who's the CMD of KIMS Hospital, joins in with more insights. Dr. Rao, it's always a pleasure to welcome you on NDTV Profit, and congratulations on this particular deal. But give us a sense on what is the performance-related benefit as well as the expansionary benefit that this particular transaction really brings to the fore.
So actually, this one is a running hospital, and we bought the business transaction.
Yes.
When we do this one now today in KIMS, we have a lot of capex and things are there. So we thought bringing this one into a loss-making company into our company. Some of the doctors wants to buy out, and they are asking in the next 5 years we will give an O&M contract, and with a prefixed multiples of EBITDA we are going to buy out. So that meanwhile we can able to ramp up this one and take it to a reasonable size with top line and bottom line, and where the loss funding will come down and even the capex will, so whatever is there they will be able to invest on that. At that time we can, there is a call option. It is up to us. If it is very feasible and good, we can able to take it, and or we can able to leave it also.
Right. Looking at this, Bhaskar Rao, this particular model is more in the context of an asset-light model where you're taking up the management and operations in order to revive and turn around this particular company. Give us a sense on how much of cost incurring will be done from KIMS on a regular basis. You're earning 9% of the revenue. So how are the dynamics and what is the plan at KIMS in terms of turning around the loss-making business, and what is the estimate timeline that you're really looking at?
We don't need to invest. KIMS is not going to invest any money or even in the participate in the loss making. It is entirely by that company. Whatever is the top line that is there, that we will be able to take a 9% of the top line, so that no burden on as far as the KIMS is concerned. And the recruiting of the doctors and other things we will be able to do. And whoever is the unit heads and the directors we employ, those salaries also paid by that particular unit. So net to net, for in the beginning itself, KIMS is going to get benefit out of this by getting a 9% revenue. We are looking at right now about 100 crores revenue this year, may go up even to 4 to 5x in the next 4 to 5 years. And most of the time we can also do all the capex is done by them, and then we will be able to make the profits in the beginning, and later on with a reasonable price we are going to acquire.
Right. So this is the overall roadmap. But one thing that I'll be most interested in asking you is that what is the timeline of turnaround of the loss-making business? You already stated that 100 odd crores of revenue will be added, which can be 4 or 5 times higher in the next few years going forward. But when we talk about the profit as well as profitability, give us a sense on what are you looking at in terms of turning around the company, and what could be the timelines in which some profits could also come in, and will those profits be also added as part of your balance sheet if they turn positive?
So usually it will take around 6 to 8 quarters for turning around this loss-making company into profitability. After that, once it takes about a year or so, another 4 to 6 quarters will be the time where we can able to stabilize the business. Later on, we will be able to acquire into the KIMS if there is if it goes everything as we planned.
Right. So this model is very interesting, Dr. Rao, when it comes to really taking over a company, turning it around, and then assessing the valuation. Any estimates on what is the valuation, targeted valuation, or at least desired valuation after a few years? Of course, basis the kind of turnaround as well as the performance really takes place. And how will it really help the company in terms of building a larger pan-India presence when it comes to this particular acquisition in some time?
So basically, we are in KIMS, we have got a strong brand in terms of the consultants, the manpower, and also the patients. So it is easy to acquire and attract good talent within the company. So once that good talent comes, along with them, the patients also will come, and because of the brand, so that we can able to turn around. That's what we estimated, about 6 to 8 weeks time we can able to turn around. And this will definitely create a value. We are expecting at least 5 to 6x top line we are expecting than what it is today. With that, definitely in instead of going into some other places where we have a facility within the city and where we can also have a good visibility. That is much better than with a less investment as on today. Tomorrow, when it comes up, we are also planning to prefix the valuation now itself with some multiples of EBITDA minus the debt which is there at that time.
Right. This, kind of an acquisition, is this the model that you could be looking at expanding further? And what is your, strategy going forward in terms of expanding your base in several other cities and increasing your visibility as a brand pan-India after this particular deal?
So basically what we are having, our strategy is one, initially we used to do a lot of greenfield projects.
Yes.
Now I think the greenfield projects are almost done. Now we were not able to do any greenfield except the place we are already present. If there is an expansion required, number of beds to be added, we will do that. It's not a really greenfield project, it is a brownfield project. And there are so many O&M contracts like what we were discussing about it. Nearly another 10 hospitals are there. These hospitals also we start either merging with us or maybe we keep on acquiring it. And moving forward, our strategy is mainly we take out any loss spending ones to take out the O&M contract, and once we are comfortable and understand the culture and the consultants availability, when it is turned around to be profits, then we try to acquire those things.
Right. Actually, this is a very interesting way of asset-light model of not spending too much, assessing the company, taking over, turning it around, those who are in need of your assistance and money as well, or your management skills, and then looking at acquiring them and also increase your presence. So, Dr. Rao, while private equity players have been trying to do the bolt-on platform for the hospital sector, here in KIMS Hospital, it's an asset-light model of expanding your base and your presence in high-growth market areas. That's how I will analyze this. But when we look at the targets that are there internally for the company in terms of expansion, and you mentioned what are the various ways in which you can expand through brownfield expansion, any guidance on the targets that you have in terms of increase in the beds and increase in your visibility in which geographies, if you can give us a sense on that?
So basically, as on today, we have nearly 10,000 beds are there in both our own and O&M beds. And we have pipeline in the next 2 to 3 years under construction, under the process, another 2,000 beds. So in the next couple of years, we will be reaching up to 10 to 11 to 12,000 beds. That is our target. And the second important thing is, as we planned all these things, as I keep on talking about, whatever is the growth last few years that we've been achieved, both in the top line and bottom line, we should be able to sustain that top line growth as well as the bottom line growth. We are trying to achieve the targets what we have been internally put by ourselves. I'm sure that we are achieving those targets. Like 3 years back, I said we will be able to reach the double the top line. We achieved that in 3 years' time. And over a period of time, we have been keep growing around 18% CAGR in the last decade and a half. And that we want to sustain that thing in the next decade also. That is our aim and plan.
All right.
And most of our, as you asked for, our is in mostly in South India as of now. Andhra and Telangana, Maharashtra, Kerala and Karnataka. These are the places where there is a lot of opportunities still available.
Right.
We will be able to unearth those opportunities and keep growing the way which we want to grow.
All right, Dr. Bhaskar Rao, the biggest takeaway that you will keep looking at asset-light models of expansion in southern part of India and southwest part of India as a strategy to really expand your presence. All the best for that. Thank you so much for joining us on NDTV Profit.
Thank you.
Thank you. All right, moving on to an important development. Well, fertilizer stocks are really rising after Russia assured India of uninterrupted supplies, and Russia says that it will continue increasing supplies if needed. Varsha, my colleague, is here with all the details and the stock impact because of this development. Tell us, Varsha.
Well, overall, this is a positive one, and hence, all the fertilizer stocks, if you see, are buzzing in trade. This is after Russian president says or assures uninterrupted fertilizer supplies to India. This is coming despite West Asia crisis that we are seeing, and the Russia says that it will continue increasing supplies if needed. Now, this is positive for agriculture. This supports availability of fertilizers to the company. Now, why fertilizer stocks reacted in a positive way? Because market is cheering the assurance of uninterrupted fertilizer supplies to India, and hence you're seeing all the fertilizer stocks are buzzing. Are up almost 7 to 8% in trade.
Thank you for giving all those details. And it's raining news today, from splitting a dinner bill to really paying for just about anything with a scan. UPI has truly changed the way India pays. And 10 years ago, remember, UPI began its journey with just 2 crore transactions in a year. Jumps to 2026, and that number has really exploded to over 24,000 crore transactions annually. What's the next decade looking like? We have Piyush giving us all those details. Piyush, it's one of the biggest disruptions that our times have seen. What lies ahead?
That's right. From paying your grocery bills to actually buying electronics, UPI has changed the way Indians transact. Here we have made a beautiful chart on the volume growth that we have seen. Like you rightly mentioned, it has risen from 2 crore in 2016 to 24,162 crore annually in 2026. In terms of value, just see the sheer rise from 7 crore rupees of UPI transaction in 2016 to 314 lakh crore rupees of UPI transaction in 2026. We have seen how, UPI ecosystem is now live across 11 countries, and 741 banks are actually part of the UPI guardrail. In July, if we see alone, the 2,365.8 crore volume of UPI transactions have happened, amounting to nearly 30 lakh crore rupees. So we can see the sheer scale of UPI usage in the country. UPI is now live in 11 countries and will soon go live in many other countries going ahead. UPI, it was launched, as we are aware, in April 2016, and around 2021 odd banks were the part of the pilot. In August it went live. Then in next year, 2017, the way we transact, we use the scanner and pay. That was introduced in 2017, QR code-based payments. In 2018, finally, we saw that UPI mandate was launched where you can, set transactions and approve it. Then SEBI also allowed people to invest in IPO using UPI transactions. So that was a big move. Actually, UPI has helped IPO applications as well. The BHIM app, we have seen how it launched in 2019, and that year itself, it gave a lot of cashbacks which continue till date. Further, various set of products like 123 Pay, which is smaller, feature phone based payments, UPI Lite, smaller transaction, credit line on UPI. All these products were introduced, 30% going ahead. The main challenge is for NPCI to enforce the 30% ceiling on UPI market share. As we are aware, there are 2 dominant players in this field, who PhonePe and Google Pay, who command more than 80% of market share. So the big headache now for NPCI will be whether it will extend the deadline further. Already 3 times the NPCI has extended this ceiling deadline. And finally, on MDR, if there is any sort of MDR on UPI, it will be interesting to watch whether people continue using this innovative and digital home run payments guardrail.
All right, Piyush, very well summarized, but completely out of time on this edition of Markets at 12. But keep it with NDTV Profit. Goodbye.
केसरिया से मन जोगी
सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Net. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट
Hello and welcome back to NDTV Profit. You are watching Trending Stocks from the NDTV Profit Suzlon studio with me, Puneet Zaveri, as well as Sharad Dubey, who is joining in from the NDTV Profit Markets Pit, where all the action continues to be through as well. But Sharad, before we come to you, just a quick check of what we have seen on the IPO front of things as well. So, important listing today of Sankesh Jewellers. That was a counter that continued to be in focus today, up almost 2.6%, has given off some of the gains from the day as well, but made a decent debut, seen some sell-off at this point of time. Stock was up almost 11% at the listing start as well. But to get some more perspective about the management as well and what the outlook is post-listing, we are being now joined by Mahavir Jain. He's the whole-time director at Sankesh Jewellers. Mr. Jain, good afternoon and thanks so much for joining in. The first question largely being on, now that you're a listed entity, what can be the growth aspiration that we can hold from the company for this year? How are you looking at the market scenario at this point of time?
So again, I'm talking about the revenue growth as well. We have always focused on our designing, and as we have a niche in our jewelry. So as we've grown in the earlier years, we expect similar growth going ahead as well, because this jewelry has always been in demand, and the demand for handcrafted jewelry is being growing day by day. So expecting a better future always.
Mr. Jain, I do want to talk to you about your business as well, because you are basically a third-party B2B player for the jewelry companies. You don't have your own manufacturing, so you are associated with 90+ job workers back in FY24. That number has gone to 87, and now 72 job workers or karigars, as you may know, in FY26. Have we seen more consolidation now? Is it something that we can expect going forward as well? How is this particular number that we can look at over the next couple of years or so?
Yeah, so technically that is right. So as we know that the jewelry sector is getting organized day by day with so many players coming in. So we have also been working with the same way. Our suppliers who are there, they are also getting organized. It's just the number which you see is diminished, but the people working under them have increased day by day. So we prefer more working with the organized players nowadays.
And how should we look at the margin scenario? Because since you are mainly a B2B third-party supplier, your margins in that 5 to 7% range is something that you'd want to improve. What can be the margin progression that we see in the near to medium term?
So technically talking about margins, see, as I've spoken to you earlier as well, that handcrafted jewelry has its own niche. It takes its time, its intricacies are always there. So margins are bound. We obviously can fetch a better margin. But yes, as we've grown in the past years, we definitely keep the same track going on forward as well.
The one other question that I had was basically how your business shapes up, right? Because almost 39 to 40% of your revenues come from your top 10 customers. So that number is still lower as we look at it. How are you looking at this number going forward? Because will you see a lot more consolidation as well as increase from your top 10 customers going forward?
So as you gave me that only 40% of my revenue comes from top 10, and all our retail chains, retail partners are growing day by day, and their numbers are also online where we can see that they are growing till financial year 28-29. So in the same pace, we expect Sankesh Jewellers also to be always a supplier of all the major retail brands in India, and plus always the local stores which we say all around India, they are also getting organized, they are also growing. A single store is getting into 5 stores. So we see growth coming in from all sectors and all pan-India presence as we have. So all around India, we see growth coming in the near future.
Well, Mr. Jain, we leave it at that today. Thanks so much for joining in. A lot more conversation, of course, warranted post your quarterly results that come through post listing as well. But thank you for joining in today. That was, of course, the management of Sankesh Jewellers has given up some gains as we spoke about. But when you look at the construct of the Nifty 50 today as well, today is the expiry, the monthly expiry as well. So you're seeing some of those moves also playing out on the Nifty 50, but largely a very dull kind of a screen that we are continuing to see across the last month or so. So 24,169 for the Nifty 50 at this point of time as well continues to be the trajectory. Let's also look at the advance decline ratio, because before we move on to the watch list, because what you have seen consistently is a very broad-based kind of a market scenario, and today as well you're seeing that declines have a bigger impact on the market compared to the advances as well. But there are some individual movers that you have to watch out for in trade today, buzzing on the back of big news flow as well as what you're seeing on some government corporate actions too. TCS is the first one that I have on my radar today. They have inked a deal with Porsche. A $1.46 billion deal is what it is, almost 14,000 odd crores, but stock's not doing too much today. It continues to be in the red at this point of time. So is Hindustan Copper, now down almost 7.75% stake after the OFS, and the Department Secretary, while speaking to our channel in the morning, confirmed that this will be the last of it. You won't see too much of it right now going forward in terms of selling and more offer for sales, especially for Hindustan Copper, but that counter is under pressure today. Cummins India is the other one. There is some strong commentary that's come through for the data center business, and hence that counter is in green right now. Balrampur Chini is the other counter. All sugar stocks continue to be in focus this week as well. The governing body essentially has said that they have sufficient sugar stock available at this point of time, but not seeing too much of a reaction, at least in terms of the names. Balrampur down almost 3%. EID Parry also has a similar fate today too. The other side though, there is some corporate action on Piramal Finance. They have launched a 2100 crore QIP. Stocks almost down 1.5% almost at this point of time, but there have been some good order wins as well for Pace, Digitech as well as GPT Infra. Both those counters not seeing too much of moves, but that's the state of the market that we are in at this point of time. Also is Afcon's Infra. There was a 336 crore arbitral order win that the company has gotten, and hence stocks up almost 2.8% right now. Also is up is Entero Healthcare. Now 3P India Equity Fund, which is of course led by Prashant Jain, erstwhile the big fund manager of HDFC, has actually bought some stake into the company, and hence you're seeing a runway move of almost 6 to 7% on a day. We're not seeing too much happen, and hence continue to have this counter in focus too. Also in focus is Skims. Now the hospital chain has actually expanded its Hyderabad presence more now. Stocks in the green. We spoke to the management just in the previous show as well. And the other couple of last counters are on the fertilizer side of things. Now Russia has assured fertilizer supplies continue to be strong and proper at this point of time, and hence both NFL and FACT are counters that are continuing to be in focus right now. But Sharad, very good afternoon to you as well. What are some of the counters that you are tracking today as part of your rapid fire round?
Yes, good afternoon, Puneet. We have Sundar Kevat with us. Good afternoon, Sundar. It's always a pleasure to have you with us at the NDTV Profit. Let me start rapid fire, and the stock which everybody is talking about based on the OFS is Hind Copper. A big sell-off happening in this counter. Good time to average up, or do you think there is more selling pressure ahead also going ahead, because today is the first day for the non-retail in the OFS? Sundar?
Yeah, I mean, if you look at the counter on daily chart, the stock is trading into a very broad range of 590 to 444 levels. Now, my sense technically over is that the stock could witness some more profit booking and we could see some more correction coming in. I mean, if you look at the 20-day moving average, the stock has taken out that moving average, which is placed at 533 levels. So I would not be surprised, Prashant, to see this counter trading at 469 and perhaps let's say 440 levels. So I don't think so. It's a good idea to average out the counter over here. Yes, if it takes a support at 444 level, then in that case, yes, we could add out some counters.
And Sundar, what will be the technical levels for Kim's important announcement coming in, and stock is largely flattish, not major reaction coming in? Is there a consolidation at play here, or do you think there can be a trade on the other side?
Yeah, I mean, if you look at Kim's, Prashant, I would definitely look out the broader term. Like if you see the stock has been consistently performing and doing well, the stock has witnessed a strong upward momentum from 580 levels, and the stock has witnessed a high of around 858 level. Now, recently the stock has witnessed a kind of correction, and technically it has hit a kind of lower highs and lower low structure and breaking out to important support level of 777 level. So I am technically observing that the stock would correct more till 725 level. And also, Prashant, if you look at the volumes over there, the volumes are pretty much high when the prices are falling. So yes, definitely the stock could witness some kind of profit bookings over here. So it's not a good idea to add over here.
Right, and Sundar, talking about profit booking, sugar stocks are seeing a good profit booking coming in after the commentary of ISMA, especially post-market as this was announced. But do you think the rally in the sugar stocks, the tactical bet as people call it in August, is it over? Good time to profit book entirely or stay put also a little bit and take some part out of the profits?
Well, I would say we have to wait for more technical confirmation to get into that. We witness some profit booking or not. Now, if you look at counters like let's say EID Perry, now the stock has witnessed a strong jump up from 700 levels and it has made a high of around 865 levels. Now, in recent time, the stock has witnessed strong resistance at 200-day moving average, but again, the stock has not confirmed that the stock could go down, right? Technically, so I wouldn't say the stock we should book some profit over it. Yes, if the stock price closes with the 20-day moving average, which is placed at 790, then in that case, I would recommend the audience to book your profit. Otherwise, it's a hold counter for me.
Hold counter coming in for most of the sugar stocks, but fertilizer stocks, they have started rallying, and this is first time we are seeing a great momentum in stocks such as RCF, FAC, Madras Fertilizers, and even private names. Do you think this will sustain? Especially this is the first day of the rally, and if yes, which fertilizer stock will have the best risk reward ratio right now?
Yeah, I would say the rally would sustain. Now, if you look at RCF, now the stock has taken a strong support at 120 level, and today we have seen a volume of around 14 million, right? And the stock is just taking a very strong support. So I would say the counter could reach till 134 level, and if that level is if that level is also taken out, then in that case I would not be surprised the counter to see trading at 150 level, which is the January month's high, right? And also talking about some chemical space, interestingly, I also like Deepak Fertilizers.
Okay, Deepak Fertilizers. Okay.
Yeah.
Please go ahead with the levels. Yeah.
Yeah, if you look at a counter, the stock has witnessed a kind of sideways momentum from its all-time high. Now, if you closely watch out to the volumes over there, the prices have declined, but the volumes have not declined. So I would say, the stock would witness a strong support at 1410 level, and we could see some bounce back coming into this counter, which could lead this counter to at around 680 level. So this is a counter which I wanted to pitch up.
All right, and your views on the FMCG pack also. We'll be coming up with an analysis on that. But FMCG stocks, is there any good risk reward ratio here, or do you think more fall can happen here?
See, I would first go over with the index level of FMCG. Now, FMCG, the index is currently consolidating at 47,350 level, and infinity is near to support level, right? So there is a higher probability that the index could witness some bounce back coming into it. Now, the stock which I like in FMCG is Britannia. If you look at the counter on daily charts, I mean, the stock has taken a support of around 500 and 290 levels. Now, interesting one technical parameter over is a 50-day moving average. So I would place a conditional buy over here. Like if the stock price closes above the 50-day moving average, which is placed at 5,393, then in that case, I would not be surprised to see this counter testing a 200-day moving average in short run, which is at 5,671. So yes, in FMCG, I like this counter. And the second counter which I like in FMCG is Nestle. Now, if you look at Nestle daily chart, the stock is witnessing a strong primary uptrend, right? So primary uptrend, and the stock has witnessed some kind of correction, which is very normal technically, right? And plus, technically, the stock is taking a strong support at 50-day moving average. So I think that this is a counter which you can have a look at the target of around 1550. And at higher side, if anybody wants the target, let's say 6 to 8 months, then in that case, the target will be around 635 levels.
And Afcon Infra, if you get that stock on the screen, they have won an arbitral award also. Stock is doing well, it's up 3% odd, but do you think there is a momentum in this counter?
Yeah, see, I would like to narrate the stock for that, what exactly the stock has witnessed from past couple of months. Like if you see the first April ka low, the stock has witnessed a strong rally from 685 level and made a high of around 1637 level, right? Now, interestingly, the stock has witnessed some kind of small pullbacks from the mid-July session, but again, the stock has witnessed a strong upward movement. So the primary trend of this counter remains positive, and any dip at let's say around 1530 level, or let's say a 20-day moving average which is at 1485 is a good level to accumulate, and we would expect some higher targets over here.
Sundar, Entero Healthcare is the stock, and Prashant Jain promoted 3P India Equity Fund has taken position in this counter. The stock is up 7%. More follow buying is expected. Even the volumes are strong. Any important levels to track, especially on the weekly or the monthly charts?
Yeah, I would first go out with the daily chart. Now, in daily chart, the stock has witnessed a strong upward movement. We cannot ignore that momentum, right? And if you talk about the current levels for entry, then I would say if anybody enters over here, then the risk to reward ratio will not be favored. Like let's talk pretty much sense. Like if you enter over here, the stop loss will be at around 1384, right? Which is a big stop loss compared to the current market price. So around 15% of the stop loss is not justified over here, right? So I would say any dip at let's say around 1526 or let's say 1470 level is a good level to accumulate. But what if any of your audience have had some kind of buy over here? So in that case, my view would be hold on to this counter, and we can expect a higher target of around 1763 on immediate basis. If that level is taken out, then as per the Fibonacci extension, the next target is around 2000 levels.
Right, and the last stock, of course, for last 2 days, we are seeing a good strength in the IT stocks. Let's pick up TCS for that. Any kind of a trade can be made here. It's slightly dipping right now, but the index itself was showing strength earlier at least. But Sundar, any trade to be made here for TCS?
I would like to go out with the basic of technical analysis. Like the stock is pretty much into trading into a very broad range of 2470 to 2016 level, right? And from there itself, the stock is witnessing some choppy sessions over it. So I would say, the stock could be placed on the radar, but at current levels, I'm not comfortable in recommending a buy over here. Yes, if it crosses 2470 level, that would give you a fresh breakout. In that case, we could expect some higher target of around 2762 level, which is the resistance of February month.
Right, IT coming up with larger deals also. But that's the end of the rapid fire round. Over to you, Puneet. I'm sure there is a brokerage waiting for the IT segment as well from UBS.
Well, most certainly, and Sundar, wait on, because a very interesting part of what UBS has mentioned actually on the space. They feel that part of the move that we are actually seeing on the Nifty IT is also led by the global factors as well, because we've seen a rotation out of the semiconductor stocks into these IT companies globally as well, and hence they feel that investors are beginning to reassess the bearish case on IT services as well. That's one of the important points that I'm making in this report, because while there are several structural concerns that are being challenged, there are some merits to this particular argument, is what UBS says. They've also mentioned specifically that there is evidence that is required for a broad-based bullish stance at this point of time in the IT space, and hence it's important to be selective. They are also mentioning companies that score well on execution, of course, will have a better momentum, but very interestingly, they've graded 3 stocks on their radar. One is Tech Mahindra as well.
the other one is Coforge, and the third one is Emphasis. Those are the three upgrades that they have in this particular report. They've also downgraded actually Persistent, as well as continue to being under pressure on HCL Tech. Those two counters for them, they feel could be under pressure going forward, while they are maintaining a neutral rating and a buy rating on TCS as well as Infosys, and a neutral rating yet again on Wipro. So they continue to mention that you have to be stock specific and very selective, but continue to see some good moves on Coforge compared to Persistent at this point of time, and also on Tech Mahindra, and very interestingly on Emphasis too. But I want to ask you this question as well, Sundar, that largely you mentioned about TCS as well, but between Coforge as well as Persistent, there's a clear winner here for UBS, which is on Coforge. Do you second that view? What's your view on the chart now?
See, honestly speaking, I am a trend following kind of technical analyst, and I like to follow trend a lot, right? And if you look at the daily chart of Coforge, the stock has witnessed a strong upward momentum, and the stock is, not fizzling out to its momentum. Also, if you look at the recent returns which the stock has generated from 18th March to till date, the stock has witnessed around 87% return, right? Which is not a normal return for this kind of counter. So I would say, Coforge is a clear-cut winner compared to Persistent, but I would not say that Persistent it is bearish technically, but Persistence may, we could play some kind of conditional bets over there. Like if you see Persistence ka daily chart, the stock has witnessed a resistance breakout of around 5,620 levels, but the stock is just, going sideways near to the resistance, which is a strong point over here. So I would like to place a buy recommendation over there once the stock price closes above 5,730 levels. If this price has been taken on a daily close basis, then in that case there could be a clear-cut breakout confirmation, and we could witness some upside till the resistance of around 6,414 levels.
Right. Thanks a lot for that, Sundar. But the FMCG pack, that is where the concerns are coming in. Of course, be it input pricing, or even you could say the management changes happening. A lot of moving factors are there. In fact, if you talk about the FMCG index, this is one of the worst months since the year 2004. Of course, there has been some gainers, especially in the alcobev industry, but the valuations become quite cheap. And to understand more about the FMCG pack, and is there any valuation at play, or what's stressing this entire industry, we are having Abneesh with us. So good afternoon, Abneesh. It's always a pleasure to have you with us. FMCG, lot of, you could say headwinds are coming. How do you see that?
Yeah, hi, good afternoon. So yes, we are positive on Q2 results for most of the names. So yes, you're right. Last few weeks and months, except 4-5 names in the pack which have done quite well. Most of the other names have seen quite muted stock performance. So 4-5 stocks which have done quite well, in fact, are our top buy calls also. So those are essentially Marico, Nestle, Pidilite, Radico Khaitan. These 4 stocks have done quite well and not far away from their all-time highs and trading at premium multiple. So what we have seen is 3 things. Yes, market is worried on the El Nino. So currently as we speak, El Nino, the deficit is around 11%, but clearly rains in the near term again are picking up as per the latest cloud scenario. I think overall there will be a deficit, but what we have studied in the last 10 years, the correlation between the El Nino deficit in rains and volume slowdown, demand slowdown in FMCG is not great, either this year or the next year, because there are multiple things, right? If you see any state government which has elections, they offer 2,000, 3,000 rupees stimulus programs, plus definitely a lot of crop inflation is going to help. Currently, if you see the sugar inflation and the onion inflation, that will lead to a lot of the agri income also going up. So it is never so simple that, okay, it's a El Nino, then the demand goes bad. In fact, in Q2, my sense is most of the FMCG companies will continue to see slight acceleration in terms of sales growth, because in terms of pricing growth, slightly higher pricing growth will come through in Q2 versus Q1, because Q1 it was during the quarter the price hikes happened, while in Q2 it's there from the day one. In terms of volumes, again, if you see most companies are doing multi-year high volumes, I think broadly that will continue. So I think it's a case of El Nino. Second issue, most of the large caps, if you see across any sector, you take it, banks, in terms of real estate, IT, and any industrials, Most of the large caps, in fact, have not done well. Conglomerates, most are trading at a multi-year low. I think that's true for FMCG also, because clearly what we are seeing is there is more of outperformance from the mid caps, small caps. Third will be, of course, crude oil, right? Currently, as we speak again, because of the geopolitical issue, crude oil has gone up. Plus, definitely some raw materials like sugar are going to impact some of the food companies like Britannia. So that's a genuine concern. Yes.
And Abnish, what will be the silver lining here? You're stating that the Q2 numbers would be decent enough here, but let's just break it down into urban as well as rural consumptions and how things are coming out. There's more stability coming back in urban segment.
Yes, urban consumption, we are seeing a lot of good demand across the board. If I see QSR, clearly the recovery in Q1 was there for most of the companies, and outlook is also looking like next 2-3 quarters, we should expect that recovery to continue because this was the first quarter. Paints, again, if you see, almost all companies saw strong double-digit sales growth. Alcobev, again, Radico Khaitans of the world saw very strong growth. They upgraded the guidance, and I can keep continuing. So urban is doing well. Rural currently is doing quite well. I don't think any company is saying that rural currently is a big challenge. Maybe 1 or 2 exceptions, but broader theme is rural is currently doing well. Question is in Q3, Q4, when the real impact of El Nino, because there's a lagged impact, right, always. Then what is the scenario? As I said, we have not seen last 10 years a big correlation. Currently, yes. So that's why if someone wants to bet on the El Nino impact, I think urban space will be better. So that's why we like Alcobev, we like paints also, we like QSR definitely, and restaurant brands Asia will be our top pick there. But generally QSR, we are expecting recovery.
Got it. Abnish, good afternoon. It's Puneet this side. And just a very quick question, because you mentioned some of the picks as well. You also mentioned that some counters that have done actually very well, Radico Khaitan, Nestle, Marico and United Spirits, and we showed that on screen as well. But do you feel that these winners are supposed to be ridden still from these current levels? Would you buy within these names as well? Or because we've also put together some data that the counters that are not done well, like GCPL, like Varun Beverages as well, they have the highest return potential according to Bloomberg. But you've seen some of the other key challenges for all those players, right? Either management change or competition. So how are you looking at further deployment of cash at this point of time within the space?
So 2 buckets, good question. On the 4-5 names which always do the highest growth in the respective segment, I would say that fresh allocation should not be done because those are sitting at very high multiples. So you should ride out the Q2 growth, but not put fresh allocation. In terms of fresh allocation, I think some part can be definitely put in QSR because this is the first quarter recovery, and Mrs. Bector's, which does the back-end manufacturing for many QSRs, they have really highlighted that this is a new trend, and generally in consumption, new trend continues for a year. So that's why 3 more quarters of QSR good performance should continue. Of course, we have to see what the regulator like FSCI or Tukaram, etc. are doing, because that can put some impact on the customer sentiment, right? If daily some kind of an issue is being found in restaurant or this pizza outlet, that burger outlet, I will be watching that. But currently that seems to be more of a concentrated news rather than the pan-India news. So yes, from a stocks which have not done well, QSR could be one. QSR, if you see, still 3-year, they have not given any return, right? Yes, last 6 months. Apart from that, in FMCG, I think Colgate, that management change is done, plus numbers should be good. My sense is 15% plus sales growth is possible. Secondly, HUL, right? HUL, again, if I see, my sense is Q2 should be around 11 to 12% sales growth. Varun and GCPL, valuation comfort is high, but Q2, I don't expect a big recovery. There, we still have to wait it out.
Got it. Well, Avnish, I think in your 20 years of tracking the sector, I think this is the first time where there are new challenges, as you mentioned, the Tukaram Monday effect as well as the FSCI. But thank you so much for joining in today, giving us your view across a whole bunch of stocks and spaces. Well, we appreciate your inputs and you joining in to NDTV Profit as well. But viewers, out of time on this edition of the show, from Sharan, myself, everybody who put the show together, thanks so much for watching. Stay tuned, a lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anviksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV.
Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour as well, all while you grab lunch. But before we do that, let's quickly take a look at what the markets are up to, and it's not great sentiment that you're looking at, whether you talk about Nifty 50 or Sensex. As you can see on your screens, Nifty 50 about 70 odd points down. Even when you talk about Sensex, that cut is actually much deeper there, and you're seeing some underperformance also coming in when you talk about broader market indices. Sensex about 150 odd points down. When you talk about the sectoral picture, also very sharply tilted in the favor of red, so it's actually IT, energy, metal, auto as well as oil and gas. On the back foot, what's holding resilient right now is perhaps PSU banks and pharma, and that's where you're seeing some pockets of resilience. But on the flip side, something like a Hind Copper is down about 7% and you do have quite a lot of news flow coming in as far as this particular counter is concerned on the back of the OFS, and that seems to have weighed on this particular counter. And when you talk about some of the other stocks from within the Nifty 50 as well, it's some of your IT names that are taking quite the beating right now, down anywhere between 1.5 to about 2%. Now, moving on, let's also quickly take a look at oil prices as well that are posting declines at the moment, but that's not the kind of picture that you've had. So you're looking at some of those elevated levels as far as oil is concerned. So about $92 a barrel thereabout for Brent, and WTI close to $85 a barrel as well. That said and done, let's also get you some more insights in terms of how you should be reading between the lines when it comes to the prices. And Dinesh Somani, founder of Pro IntelliTrade Services, joins us on the show right now. Mr. Somani, a very good afternoon and thank you so much for taking time. Pleasure as always having you on the show, but really wanted to try and understand what's been happening with oil prices right now, because on one hand, you do have that rhetoric really continuing when you talk about Tehran and Washington, and there's no diplomacy really inside when you talk about some of their commentary. So given all of that, prices should be, well supported at some of those levels. Is that how you're reading into it? Because the market seems to have a different opinion.
Now, more or less, what we observe is that the number of tweets, the number of messages, the number of news, there are declines with respect to crude oil prices, and the focus has been shifting to the bond market right now. So the volatility has shrunk right now. Earlier, we used to see on Monday or a weekday, there is a gap up or a gap down opening of near to 3 to 4%. Now, which has been declined to 1.5%. We have seen the Brent crude oil pricing moving beyond $94, $95, and they're back to $91. So as of now, I think the geopolitical tensions are being discounted by the crude oil prices. Despite the Strait of Hormuz, uncertainty continues, but the prices are not that at a premium rate, nor they are below the $80 mark as far as WTI crude is concerned. So overall, if I look at the prices, the broad range which I could see for the next 1 month is $77 on the downside for WTI crude and $88 upside for the WTI crude. That's the range which I like to see.
No, absolutely, and that makes a lot of sense in terms of the kind of range that you should be keeping in mind as well. But given if there is an escalation of sorts, are you then penciling in close to $120 a barrel as we've seen before, or do you think that that's off the table really?
I don't even expect to move beyond $100.
Okay.
That's what I expect. So I think news are being discounted, geopolitical tensions are being discounted, and prices are moving in line with the demand and supply, where the supply would increase further, and we may expect prices to move below $80 very soon.
No, absolutely, and that makes a lot of sense in terms of how you should be looking at prices right now. The markets do seem in alignment with everything that you've said thus far. But, in terms of the tempering of the sentiment as well when it comes to oil prices, I just wanted to know if you think that this is because of the alternate routes that have been figured out since the previous time when prices really rose above $120 or $100 for that matter. You didn't have those routes in place, right?
Yeah, absolutely. It's more than 180 days. The geopolitical tensions have risen and the Strait of Hormuz is almost closed and open now and then. So people would be, and the countries would be definitely looking for alternate routes. And I think if the transaction to the Strait of Hormuz will reduce, definitely they'll find some alternate route for the flow of crude oil to continue. So I think that could be one of the reasons and that is the major reason.
Right, so some amount of fatigue that you're really seeing when it comes to some of the news updates as well and the alternate routes, which is why you're seeing prices also be a slightly more range bound than we've seen earlier when it comes to even escalations and the reaction resultant. Let's also quickly take a look at gold as well, Mr. Somani, because it's holding above the 200-day moving average. What do you think about the momentum of prices going forward?
It's already at the 3 months high. We have seen a low of $39-30. Now there is a sharp rebound. Today we have already witnessed a $4,700 mark. So a close to 15% rally in a very quick time that indicates that strong build-up in gold. The central banks, especially the Chinese bank, they are buying ETFs are moving up again. And I think the dollar index has declined from 101.5 to 99 levels. So overall things are very much in place and very much positive for gold as far as gold is concerned. So overall, I think now 45.10 should act as a very good and a crucial support. Upside, we may expect $5,100 by Diwali this year.
Wow, that's quite the forecast coming in, Mr. Somani, but also just wanted to try and understand what you think about fresh buys as well, because this is the time for festive season buying as well. What is the kind of advice that you have in store for those investors?
Definitely. I mean, earlier also when I suggested it was consolidating between the 39.50 level and the 41.20 level. The moment the 41.20 level got crossed, they got a trigger and prices move on to $4,700. So a $200 dip is quite possible from here because since prices escalated almost 15%, 2-3% dip is almost advisable. If that comes in, that would be a very good for market and very good for the investors to invest in.
Alright then, so if you've missed the previous opportunity to hear out Mr. Somani, this is your time and take a look at those levels as well. Mr. Somani, lastly, just quickly wanted to try and highlight copper as well because you've seen quite the interesting momentum right now. The rally seems to have screeched to a little bit of a halt right now. But do you expect that momentum to also come back when it comes to copper? Because Citi sure believes that it will.
Yes, definitely. Aluminium performed earlier, then zinc moved on. Now the next one is copper in line. I mean, as far as MCX levels are concerned, 1350 is a very good and a crucial support. Prices have bounced back from these levels multiple times. They are resisting around 1400 level mark. The moment copper closes above 1400 level, we may expect 1467 very soon. So this is a trigger that is being left out to be built up. I think aluminum could be the next, copper could be the next rally in coming month.
Right, no, absolutely. And thank you so much for joining us with all of those insights when it comes to oil, gold, as well as copper. So watch out for copper as well when it comes to base metals. But with that, it's time for a very quick break. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ।
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Names change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapid
Welcome back. Thank you so much for staying tuned in. Well, from the mega LIC OFS to the latest Hindustan Copper stake sale, the government has hit the ground running on disinvestment with 52,000 crore plus already mobilized. Are more big ticket OFS deals in the pipeline? And is FY27's target headed for an overshoot? Earlier today, we spoke to Arunish Chawla, DIPAM secretary, as well. Let's go across and listen into a slice of that very important conversation.
Government has hit the ground running on disinvestment with 52,000 crore rupees already mobilized. We're talking about it now with Mr. Arunish Chawla, the DIPAM secretary, speaking exclusively with us on NDTV Profit. Mr. Chawla, thank you so much for your time. And I must say that the year has already started with a bang. Tell us a bit about Hindustan Copper, because the biggest being LIC, of course. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
Thank you very much. Team DIPAM has hit the ground running, and everyone has worked very hard to make market operations a success. And this is in line with Prime Minister's vision of sharing the national wealth with, ordinary investors, minority stakeholders, and citizens of India. And we are making sure that they get a good deal, and they also make reasonable profits. And the public enterprises stand ground as beacons of fairness in the markets, in terms of their sustained investment plans, sustained growth, and fair dividends to the investors. In light of that, government has announced an offer for sale for Hindustan Copper today. The offer will be on the markets today and tomorrow. We will be offering 5.8 crore shares under this offer. And as you can see, the market prices have held up. And the response has started. People have started coming in. Today, the institutional investors will bid. And tomorrow, we will allow the retail investors to bid. We have kept aside 10% exclusively for retail. And we would encourage small investors that this is an opportunity for you and you must make the most of it. Hindustan Copper is a prized stock. It's a valuable stock. And this may be the last OFS because we will now bring it down to 60% and then hold it there for its capital requirements.
Okay.
But this is a great opportunity for investors, and particularly the retail investors should not miss this opportunity. Sorry.
No, please complete your point, sir, and then I'll come in.
Okay. And Hindustan Copper, has good futuristic investment plans. It produces copper, which is valuable for our economy, for our supply chains. And we should not be driven by short-term quarterly profits, but we should look at what their medium-term performance is and what their long-term vision is. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards. I will leave the viewers with that information and encourage everyone to make the best of this opportunity. Over to you.
Yes, Mr. Chawla. No, I wanted to underline that you're saying this could be the last OFS for a while in Hindustan Copper. Just want to understand that bit a little more. And also, what are the kind of expectations that you have penciled in? Having said that, the pitch that you've talked about is very apt. This is a stock and this is a company that the street is very interested in.
Yes. For those who know the market and who track market history, we've already had 6 OFS in Hindustan Copper over the last 10 years since 2015. And this is the big one because we are offering 6% on block. And with this, we would have completed the journey. We listed it initially, when it was 100% government owned. And now over the last 10 years, we've now come down to 66, and with this we'll come down to 60. And we're leaving a little margin for the company to mobilize capital on the markets, to be able to invest it in mining that is modern and technology intensive, and be able to use that margin for its capital investment and its sustained growth future. And that is what I mean. And this essentially then is the 7th offer for sale as far as Hindustan Copper is concerned. But this one is for the investors. This is for the small investors. This is on the market and it is on the money, so don't miss it.
Okay, that's great. Just wanted to understand which are the other large OFS transactions that you have in the pipeline, whatever you can share, sir, with us. Is it, for example, BHEL, one of those which could come in? Because 9 have been done. How many more?
Good question. Good habits once built up last. I would never even inadvertently reveal which one next. But yes, good habits last. And investors have reposed their faith in us. You saw what LIC OFS, the response it got. It was overwhelming, unbelievable. And we will continue to be with the investors, and we will continue to keep coming with market offers, and we believe, and we have evidence to show this, that public stocks in portfolios, whether it's a mutual fund or a growth option, or you build a portfolio yourself.
Alright, then there you go. So that's the one coming in from the Deepam secretary as well. But let's also move on and talk about Sunshine Pictures that made a modest sort of market debut listing at a 10% premium. In fact, you do have Rhythm House caught up with Vipul Shah, Chairman and MD of Sunshine Pictures, to discuss the use of IPO proceeds and lots more. Let's go across and listen in.
Sir, I want to start by asking you that, the company has listed at a premium and it also had 100 times a subscription as well overall. Now, the revenue of the company has shown a degrowth from past 2 years, and even in FY26, there was a bit of degrowth of about 28%. How will you turn this around? What are the plans on this?
See, in film industry, if you're going to look at the top line, it's always going to be misguiding. You will have to look at the bottom line. In bottom line, we have grown in 26 from 25. There are exceptional years that we have, like we had in 23 Kerala Story 1, which was an exceptional year. So there was an exceptional growth in that year. So we have not degrown, but there is just that one exceptional year which has made our company that particular year way higher than the other years, and we wish to have more such projects and years, because film industry and film business is is about people's love for your work. So if they love you more, it's better.
Absolutely. Now, as you also said, that PAT has definitely grown in the past year by about 16%, and even the EBITDA margins and the EBITDA has shown a healthy growth. But the operating cash flow has been a negative of about 33 crores. How is this? How do you look at this, and why this mismatch?
It's not a mismatch. What happens is that there are certain payments that come in a due course of time, and the film, our film released on 27th of Feb, Kerala Story 2, and the telecast on satellite and OTT and all happens 8 weeks after, and satellite happens 4 months later. So some of those amounts are always pending in that particular quarter. They are recovered. None of the company doesn't have a single bad date. We have never lost any money. Whatever is outstanding, we've always recovered. But that's a cycle of our business, and we can't do anything about it. For example, we are making a film with Mr. Akshay Kumar today. We are shooting for a film called Samuk. If we sell any rights today, we will get some advances. But
Other than that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out, and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में, कमिंग सून ऑन NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done. If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anveksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the relevant small cap stocks that have been buzzing in trade, either on the back of price or volumes. But before that, let's have a look at the market. The Nifty, it's down nearly 90 odd points in trade. Not much of an movement or excitement that we are seeing in the market in trade today, given the fact that it's also an expiry day. The Nifty Bank Index, that's down around 200 odd points in trade. Tracking similarly with the Nifty Bank. And when you look at the sectoral indices, it's only Nifty Media, Nifty PSU Bank and Nifty Pharma which are managing to hold on to green, up around anywhere just 0.1 to 0.3% odd in trade. So not much of an excitement there as well. On the losing side, we have Nifty IT which is down around 0.9%, followed by Nifty Energy, Nifty Metal and Nifty PSU Index down anywhere between 0.6 to 0.7% in trade. Among small cap stocks, if you look at Genesis International, that's hit an upper sucker of 20%, followed by Federal Mogul up around 13 odd percent, Sigachi Industries up around 11% in trade, and then there is Oriental Rail, Apollo Pipes which are up close to around 8% on the gaining side. Now on the losing side, if you look at, it's Virat Industries down around 9%, Chronox Lab down around 8.5%. The stock was on an uptrend earlier after the deal that was announced, but right now it has been falling around 8.5% in trade. Nahar Industrial, Quadrant Future, All Cargo Terminal down anywhere close to 7% in trade. But a new company that will be listing on the exchanges and would fall on in the small cap category, ESDS Software. Now, the IPO will open on August 20th and the price band that the management has set or the company has set is at around 408 to 429. To give us more details on the company, we are joined by Piyush Somani, the Managing Director and Chairman of ESDS Software. So firstly, to start off with, on the usage of funds, you have mentioned in your RHP that you will utilize the funds to purchase and install cloud computing and other equipments that are relevant for data centers. But how will the same help the company, if you could take us through that?
Yeah, so out of the 720 crores IPO proceeds, we are looking to invest 576 crores into GPUs and some servers, CPU servers and data center MEP equipments. So close to some 600, 700 GPUs will be brought, and server capacity would be brought, and data centers also few megawatts of data center capacity is what we are planning to add to run this GPUs and CPU infrastructure. So we already have a pipeline, confirmed orders from the customers, so for which we are looking to deploy this capex.
But sir, what is the kind of incremental revenue that we could see post this capital expenditure has been deployed?
Yeah, so what we see from the international partners and competitors all over the world, and also a couple of others which are there in India, they generally make 85% EBITDA margin and 45% ROCE margin and 40% PAT margin on this kind of deployment. So our aspiration would be to get closer to their numbers.
But sir, how much would be the incremental revenue?
So, as I mentioned, that 85% EBITDA margin, so generally people make close to 0.8x or 0.9x of the capex that is deployed per year, and they manage to generate 85% EBITDA margin from this.
Okay, if you look at your FY26 PAT, that has more than doubled to 121 crore. PAT margins have expanded to 26%. How much of this margin expansion is structural, and what should investors consider as a sustainable PAT and EBITDA margin rate, say, over the next couple of years?
So, from the models that I am seeing of all our partners in India and outside India, and also, so people are targeting 40% PAT margins, 40. So, we should also be aspiring to reach similar numbers.
Right, and one new overseas enterprises that you customer that you onboarded contributes around 75 crore. That is nearly 16% of your FY26 revenue. Is this revenue recurring? What is the contract tenure? If you could give us more details on this front, and what kind of revenue should we expect from this customer in FY27 and FY28 as well?
So the revenues are recurring. What we are earning from our international customers will be, so the entire business model is focused on earning recurring revenues. And for some customers, we will be designing and deploying so for some customers, we will be only doing the design of the GPU infrastructure or complete clusters. And majority of the customers now from here onwards, we will be delivering the entire cluster and year on year managing it and charging monthly subscription fees to them. So GPUs are globally, if you will see, people are earning per hour per GPU revenue. Those who give pure GPU on a service model, or those who give a complete AI factory on a service model, they charge an hourly rate. Whether you use the GPU or not, you have to pay an hourly rate for all the GPUs which are provided to you. So that's what we are also aspiring to target.
Now, if you look at one of the segments of your business, that is managed service revenue, that jumped nearly 157% in FY26, while the performance of the other two segments that were quite a bit muted. But what is your expected growth trajectory for each of these three businesses in FY27 and in FY28 as well?
So last year we did not do much capex. We did not anticipate that this is the kind of growth trajectory we will come across, or the partner ecosystem that we will build, we will see this kind of. So we were very conservative until last year. So that's why we were only helping our customers to with the design part of it, solutioning part of it, and helping them to deploy it on someone else's infrastructure. But now moving forward, we are very confident that we can do it ourselves. So we can lease the GPUs from someone, we can lease a data center from someone, we can put our Swaraj cloud on top of the entire infrastructure and give everything as a service to our customers.
Right, the revenue growth CAGR was around 28%, while the EBIT and the PAT grew at a much higher rate over FY24 to FY26. But what I wanted to understand is that, is there more operating leverage left, and how should one see the earnings growth going forward?
There is quite a bigger opportunity because of, so if you look at the speed at which 147 neo cloud companies are growing all over the world. So this 147 neo cloud companies, some of them, like one of them, for an example, Nscale in UK, born last year. The first contract that they did was in September last year. And today they have contracted 3 gigawatts in entire Europe region, and which is double that of India. Now Sharon AI, the first contract they did with us was on in the April of this year, and today they have 200,000 GPUs which they have contracted to their customers. So that is the kind of scale which everyone is experiencing because of the demand and supply gap. The reason the CPU, GPU prices have gone up like 5 times, 8 times in the last 6 months is because the demand supply gap is there. Next 5 years, the demand supply gap doesn't seem to be coming anywhere closer to what exactly the demand is. So we now have that confidence looking at the limited supply of semiconductors all over the world. So we have to make the maximum out of this opportunity in the next 5 years. So we want to reach similar numbers which the competition is able to achieve, 80-85% EBITDA margin, 45% ROCE margin, 40% plus PAT margin. Can we do better than that? We will definitely aspire to do better than that.
Now, if you look at your top 50 customers, they contribute roughly around 74% of revenue. But what percentage of revenue comes from the top 5 and the top 10 customers? And how is the management looking to reduce the customer concentration here?
So until last financial year, our top 25% customers contributed 50% of our revenue, and top 100 customers contributed 85% of our revenue. So we hope to see a similar trend as things will settle down couple of years from now. The similar ratios would be achieved, but because the new customers who are coming now, the contracts are much larger from these new customers. So obviously there will be a balance gap between the top 2 customers, top 1, 2, 3 customers and the other customers. But we will, over the period of next 3, 4 years, 5 years, things will stabilize, and again we will achieve similar ratios in future.
And lastly, sir, the government business that still contributes around 27% of the top line. What proportion is recurring? How much of is tender based? What is the current government order pipeline, and how do margins and receivable days compare when we see it with the private customers here?
So, yeah, correct. 27% of our revenue comes from government. This is 100% recurring revenue. And this is majorly through our partnerships, with Software Technology Parks of India, or our partnership with SIDBI. So, we earn this revenue from them, and 100% recurring, and there is an incremental growth happening because their workloads are also increasing. We don't see any major issue with receivables over there because the switch remains in our hand. So that's why the customers have to pay. So we have managed to maintain around 78 days of receivable cycle, and hoping to be, as international pipeline grows and also domestic pipeline grows simultaneously, aspiration is to keep this under 45 days.
Thank you, sir. Thank you for joining us and giving us the way forward for ESDS software. Shifting focus to NITCO, the company that has announced a big transaction that could lead to a big cash flow coming into the company. Let's get in Vivek Talwar, the chairman and managing director of NITCO. Firstly, sir, to start off with, can you break down the transaction structure for us and explain exactly what NITCO is acquiring or transferring here, and what is the kind of consideration that NITCO will get?
So over a lifetime, we have built up a very large land bank in the MMRDA. And this is a 40-acre parcel which has a sea view. It's close to the sea, where we have done a deal with House of Abhinandan Lodha, and we get a revenue share between 30 to 35% depending on what they are building. So the top line would be around 4,000 crores, and we should be approximately 1,300 to 1,500 crores of top line, and we expect the project to get completed over a 5-year period, so our money will come in over that period.
Okay, so this land belongs to NITCO Realties, right?
It belongs to NITCO Realties, which is wholly owned by NITCO, so it will get consolidated with NITCO.
And sir, just to clarify and just to understand here, your name also appears in the MOU. Why is that so?
When we bought lands at that time, it was difficult to buy in a corporate name. So I had to buy it in my name, representing the company. But land all belongs to the company.
Okay, great. Now, just wanted to understand. So this 3,000 to 4,000 crore is an approximate number. This could go well above the estimate as well.
So, I mean, I think this is a good estimate of 4,000 crores, and we'll get about 1,500 crores. I don't know how the prices move. If it goes up, then we can go up a little bit as well. But this is, I think, a good estimate that we have.
Okay. And obviously the cash flow will not be, it could be lumps, it could be a bit lumpy as well, right? Just for our viewers, I just wanted this clarification that the cash flow could be lumpy. In 1 year, you could get more amount. In 1 year, you could, and another year, the amount received from this deal could be less also. But overall, over the 5 years, you will get around 1,400 crore. Is that correct?
Correct. So we've received the token of 9 crores, and as soon as we sign the definitive documents, we'll get a total of 45 crores. And then as they keep building and selling, we'll keep getting money. So I'm not sure whether it would be lumpy, but as money keeps on coming in, it'll go into escrow, and plus it'll get released to us. And so over a period of time, we'll get it. But you're right, maybe some part of it could come towards the end of the project.
And once the funds start coming into NITCO Limited, just wanted to understand, how are you planning to deploy this cash? Will you be giving it back to the shareholders? Will you be investing in your other businesses or in some other real estate project? Could you give us some clarity on that front?
So we still have a lot of land available, which we are cashing out. We had done a deal earlier with Total Environment, that is a Bangalore developer. We have given them, earlier we had signed a joint development agreement with them of 58 acres. That land has now gone up a little bit, and that we should be signing a revised agreement with them. So we have a lot of land, even besides these 2 parcels in Alibag. That should give us substantial amount of money. But we will take the call if we can do some buyback of shares so that money goes back to the shareholders, or of course it'll be deployed to grow the core business, which is and always remain our core business. And when we have some liquidity in excess, we will buy more land and again keep giving it to builders.
So not yet finalized.
Sorry?
So not yet finalized. How will you utilize the cash that comes in?
I mean, you get cash. We've been through such a difficult time in the past that now having a cash is a good problem to have.
Right, sir. Right. Now, talking about your core business, sir, on the tile segment, in the recent past, have you faced issues related to demand, related to gas supply, and how are things improving now?
So we run an asset-light model, and so we are doing only contract manufacturing, and we hope to continue to do that. And we did have a problem during that period of 1 or 2 months where the supplies had gone down. But at the same time, when the gas supplies had stopped completely, the factories had to stop from the ones who we were sourcing from, all our stock got sold. In fact, this was a good thing for the entire industry. All our stock nearly got cleaned out. But things have bounced back, and now it's been a couple of months when we are back to normal and back to growth.
The demand environment, sir, is it picking up?
It's great. I mean, builders building all over the country. Demand has been great. Retail sales have been good. We have a run rate of about 50 crores a month plus of sales, and our aim is to try and keep growing at about 3%, 4% month on month, because we have a low base and we have a lot of catching up to do, so which is what we are doing right now.
Lastly, sir, just wanted to understand, I believe recently you did announce an order, marble order from Prestige Estates of around 66.65. Any such similar orders that you're expecting to come in? What is the order book here? Any details on that front if you could share with us, sir?
So our large accounts, current orders in hand are between 200 to 250 crores for this year. And the retail, we are averaging about 35 crores a month run rate. And this will keep going up because all developers are doing well, and that's what's going to be happening.
So thank you for joining us and giving us more details on what this deal is and what is the way forward for NITCO. It was great speaking to you, sir. Let's also welcome in our fundamental guest, Girish Sodani, Vice President of Choice India. Girish, you heard the management. When it comes to the core business, they are seeing growth going forward, and this real estate business, more cash coming in, they might do more buybacks, as they might do buybacks going forward to reward the shareholders. How are you looking at this counter compared to other such peers?
So, if we could talk about particularly this counter itself, I don't think so that this is the right time to just discuss on that what the execution is going to be in the terms of deals, because I think this is a long-term perspective. At least we have to check it out for the next 3 to 4 quarters, how the management.
Right. We'll get back with Girish's view on NITCO, but let's slip into a short break and we'll be back with more news on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and former treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Three decades of watching the world change.
Right. Welcome back to the Small Cap Show. Firstly, we'll speak about Genesis International. That stock has hit an upper circuit of 20% in trade. Recently, the company has closed its rights issue. Let's get in Jasmeet to understand what could have been buzzing here, but the stock is up nearly 20-odd%.
Well, Samit, thank you for that. It's a very interesting company. If you look at what the company does, let's quickly start with that. The company operates as a geological data provider. Basically, it converts all the data into digital data for various structural requirements. Now, if you look at the performance of this particular counter, it's down about 28% in last 1 month, and it's similar, down about 28% over last 6 months as well. Over last 1 year, the stock has tanked nearly 65%, and today it's up nearly 20%, nearly at a day's high. If you look at the investor profile, that's what caught my attention here. We have seen that the overall promoters have reduced their stake from earlier 52% to currently 31% in last 10 years. So we see a constant selling coming in from the promoter year after year. On the other hand, we also have FIIs. Even they have reduced their stakes from 7.7% to 1.5%. So as the DIIs, even they have reduced their stake from earlier 6.8 to 1.1. While on the other hand, all of the stake has been bought by the public from earlier 33% to currently 60-odd%. Now, if you look at the Q1 performance, even that was on a slightly negative side for the company. The overall revenue did go up about 14-odd%, but the EBITDA stayed flat, and even the margins got impacted on the back of that higher cost. The company has also recently appointed the new CEO, that's Nikhil Alukar, where he remains quite bullish on the company's journey. He calls the company to be in the inflex point. From here on, they expect the foundation has been made and they expect a growth going ahead. If you look at the key management commentary about the operations and the outlook for the future, is they state that the company is currently going through a fundamental transformation mode. Further, they also said that India is building physical and digital infrastructure, and that's where they see a lot of growth in the future for the company as well. While lastly, they also comment that there's opportunity ahead, given that company has already made the foundation clear.
Your view on Genesis International?
As of now, avoid this particular counter just because they don't chasing in the circuit breakers we talk about for the retail investors. In the terms of margins as well as the revenue propositions, also the quality is not much favorable. Obviously, this particular sector is required exposures for the next 2 to 3 years down the line, but the fresh allocation is not advisable.
Right, thank you, Girish. Thank you for joining us and giving us your views on the stocks that we discussed in trade today. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into the India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our capital, our deeply rooted cultural diplomacy.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition of the show. My name is Puneet Zaveri, and over the next 30 minutes, we'll try and solve all your stock-related queries. So if you haven't already done so, do start sending them in on the numbers that are flashing on the top of your screen. Also call us on the numbers, that is the landline number, of course, to speak to us as well as our guests for the stock-related queries as well. But three key important points as you continue to see the markets. You have seen a very range-bound kind of a session yet again on the Nifty 50. Today, of course, we have the expiry for the monthly expiry for the futures and options as well for the month of August, and hence seeing a very range-bound move at that 24,150 odd mark. It's been depressing to say the least. Of course, a very sideward kind of momentum continuing over this month or so, but largely looking at a broader market action where you've seen. Let's look at the heat map very quickly for the Nifty 50 as well. Individual movers today that were in focus, TCS was one of them, but stocks not reacting too much on the back of that big acquisition. HCL Tech got downgraded today by UBS, stocks down 1.65%. Grasim and Cipla are the other two ones which are under pressure. You are seeing some good moves on Apollo Hospital as well as Adani Enterprises. That is the top gainer for the Nifty 50. But seeing a wave of red right now in terms of the Nifty 50 performance, that's also visible in the broader markets as well. So look at the advance decline ratio very quickly. Roughly 1100 to 1200 stocks that were advancing in the morning, and it's largely being in that similar range as well. Also, the mid cap and the small cap reflect that pressure too of what we have seen in the advance decline ratio as well. The mid cap 150 trying its best to come back into the green. The small cap 250 down by 1/3%. But in terms of the individual movers that you've seen on the BSE 500, pull those up too. You've seen some on Vodafone Idea up now about 7.3% up. Godrej Agro, RCF, and 197 Communication, that's PTM, is also doing well, up 4.9%. Hind Copper on the back of the OFS by the government is down roughly 7%. We had the Department Secretary. You're seeing some flashes on the right hand side of your screen as well that this will be the end of the OFS with Hindustan Copper. Today, though, under pressure, KRP and Data Patterns are some of the other ones that are down in trade today. Let me welcome in our guests now. We will be joined, of course, by a technical guest, but already here is Astha Jain, Senior Research Analyst at Hem Securities on the fundamental side of things. Astha, very good afternoon to you. Thanks so much for joining me today. Missed you in the morning, but the first question that from Yogesh, who's from Kunur, asking on Ather Energy. He's bought these shares at 1548, so he's bought it after a massive run-up that we've seen on Ather Energy, Astha. He's asking if it's still a good bet for the long term. What would be your opinion?
And good afternoon to everyone. So we all know that Ather design, develop and sell electric scooters, etc. So now what I believe that this is one of the counter where the company has a real competitive advantage because they have got a competitive advantage on the product technology wise. In fact, their brand is very good and their charging ecosystem is also developing fast. So these are some of the points about this company, but the major problem lies with the competition. The kind of competition we are seeing in this space, in the EV space, is making things tough for the Ather. But my idea here is, since the Ather is gaining its scale day by day, definitely this is a counter which is here to stay for the long term. So maybe in the short term we can see some sort of a reduction in the stock prices, but in the long term it is a hold story. So remain invested in this counter, recommending hold with a price target of around 1650 at the initial levels.
1650, got that view, Astha. But the next question is coming in from Ekambara, who's from Hyderabad, and also a regular view of the show on NCC. He's been holding these shares at 193. Astha's question being, should he exit this position and buy into something like BEL or Cochin Shipyard, or continue to hold? He can hold for another year. Stock has been down. Astha, what would be your opinion?
So opinion is positive because it is one of the largest contractor, I believe, and that builds infrastructure. And the most important thing about NCC is the kind of diversification with the kind of order book this company is having. It is having an order book of around 81,200 crores. So that makes it a real, strong counter just from the revenue visibility wise. And I believe that going ahead also, this order book helps the company in giving 8 to 10% of the growth. So definitely these kind of growth are looking good for such companies. So in case if anyone is patient enough to hold for at least 3 to 6 months, then remain invested. I think the cost price of 197 should arrive.
Right, got it. Well, let's also look at Credit Access Grameen though. Now, Shashidharan, who's from Chennai, wants to know about this counter. He's holding shares at 1365. So a little bit above is what the current market price is, though down 2.5% from the day's high. He wants to know if he should still continue to hold for the next 2 years. Astha, how do you look at Credit Access Grameen? Has been in a flattish kind of trajectory over the last few quarters. What's your opinion on the stock now?
The biggest attraction of this counter is its AUM, which is around 30,000 crore. And now the management is targeting to increase it to 50,000 crore by calendar year 2028. So I think that is one of the biggest traction of this company. And I believe the kind of financial performance it is showing, because in the past few quarters, there were some issues regarding the financial performance, which the company has recovered in the latest quarter. It is the Q1 of FY27. So I think an asset quality is also improving. So yes, it is a slow mover in the short term, but I think in the long term it can give returns. So remain invested in this counter for the long term.
I just want to quickly address the flashes on the bottom of your screen as well. An important story that we are picking up. Raksha Mantri approves the transfer of technology of DRDO missiles, and this will be a big negative for players like Bharat Dynamics, but a big positive for players like BEL as well, because you have seen a lot of new private companies, especially on the missile side, come through. And if this goes through, if this has been okayed by the Raksha Mantri and the Defense Ministry as well, this will be a big one for a lot of players. I do want to address and look at Bharat Dynamics if we can pull that chart up of what that stock is doing, but it's definitely a negative for them, as this will increase the competition, could put some pressure on margins too. But part of the larger move that we are seeing on indigenization, as well as a lot of newer private players as well, who could be this positive too? Let's look at if those stocks are reacting. Let's pull up BL. Entering this domain with the private company tie-up is something that Ingrid says could be a positive for BL. The other one's Apollo Microsystems, because they did get an approval sometime back to manufacture the 12mm caliber missiles as well as ATACMS. That's something that is very known for Bharat Forge as well. Also look at solar industries. Amongst the private ones, you're seeing some moves that come through on Adani Defense as well as Tata Advanced and Bharat Forge, because they already have these existing tie-ups. So all of those counters actually continue to be in focus on the back of this big update that could happen. And if the transfer of technology of the DRDO developed missiles, which has been one of the bigger regulatory bodies for India, developing a lot of new technologies, if they are looking to transfer the technology to a lot of these players, then it could lead to a next leg of move for a lot of these defense names as well. Astha, I just had a quick question and a follow-up to you on these names. While still we are awaiting a lot more details as well, and you know, we're marking out this is from Incred, what do you feel about these defense names? This could be a big move.
Yes, this could be a big move, and especially for the companies like BEL, that is the Bharat Electronic Limited. So here, I think they have approved or clear a missile-related proposal program, procurement or the development project, and I think this will really help the companies like BEL, and especially we are positive on another company which is solar industry in the same space. So yes, these are good long-term counters which can have a positive impact on the basis of this news.
Got it. Well, let's also welcome in Kunal Shah, Senior Technical and Derivative Analyst at Mirae Share Khan, now joining in as well. Kunal, very good afternoon. Thank you for joining in today. Anything that you like in the broader defense pack? We've seen that big update come through from Incred, but any view, anything that you like? Because we've seen a very big move on a lot of these names like Solar Industries, like Apollo Microsystems. Anything that still warrants attention to buy?
I think from the defense space, I think shipping is something where I'm having my focus on. I think the entire sector is looking good, like the names of Mazgaon, Cochin Shipyard, GRSC. I think that is where one should focus on. There is an accumulation phase which is going on, and probably we'll see the expanding move coming in the coming months. So I think that is where the focus should be. Mazgaon Dock, GRSC, and Cochin Shipyard. This would be my order of preference for shipping company.
Got it. Let's go across to Hyderabad now. Murli, who's a regular viewer of the show, now joining in for a stock-related query. Murli, very good afternoon. Welcome back to the show. What's the query?
Good afternoon. Seeing you after a long days, Puneet sir. My query is on premium energies. I have 20 shares at an average of 1118. So should I hold it on for under 1 year? Currently at a loss.
Yeah.
But I strongly believe that it should bounce back.
Well, Murli, firstly, thank you for calling in. Thank you for recognizing that I'm back as well. It's been a while. But what would you recommend here? Astha, on Premier Energies, Murli has bought it at 1,118. Should he continue to hold?
So, as it was a solar panel manufacturer, but now it is transforming itself into the vertically integrated solar energy manufacturing platform, where they are also adding transformers, battery electronic system, etc. So I think that is giving an advantage to this company. Now, my idea here is the kind of financial performance which this company has shown. It was very strong because their revenue growth was extremely good. Operating profit growth was around 27%, and in the PAT also they have shown good jump of around 50%, if I am not wrong with my numbers. So my idea here is that Premier Energy is one of the counter, which is a bet, which we can say a bet on the solar energy, and hence one should remain invested in this counter on the basis of a good performance in the Q1 of FY27 also. So remain invested. Cost price of around 1130 also will come maybe in the time frame of 3 to 4 months.
Got that view, Astha. So that hopefully, Murli, that answers your question. The next one's on Pine Labs. Kunal, our viewer wants to know, and this is Kirtana. She's bought shares at 149. What should she do with her 2,000 shares in the short term?
And continue to hold. Already there was a breakout that had come into the stock on 10th of August, and now we have retested the breakout in today's trading session. So hold with a stop loss of 155 on the downside. I'm expecting the stock to fill up the gap area on the upside, which is close to around 184, 185 on the upside.
Got that view. The next question coming through, and this one's on Sirma SGS. Our viewer is holding shares at 1,500 rupees. And this is Ms. Sabarwal who's asking us this question. Kunal, we've seen a massive run up on the stock already, but would you recommend her to continue holding?
See, yeah, I think yes, definitely continue to hold the stock over here. I think still the last leg of the momentum is left into the stock. So till the time on the lower end, the stock is trading above the level of 1400. The view remains bullish. The immediate hurdle for the stock on the technical perspective is somewhere around the 1525 mark. Once that is taken out, you can expect the stock to go towards 1700 on the upside.
The next question, and this is an interesting one. Our viewer is holding shares of Sign DLM, and this is Birandeep. He's holding shares at 468. He can also buy more at the current price, is what he's mentioning. But Astha, he's also holding on to Keynes Technologies at roughly 3068. So he's actually gotten on both those counters at very interesting price points. Should he continue to hold, ride that positive wave on both those counters, Astha?
So I believe that Sign DLM is also one of the EMS company which are basically into the designing of the electronic system for aircraft. So this company is again an EMS company which is basically focused on mission critical electronics because the kind of product it is into. And my idea here is that it has biggest advantage of this company comes from the volume which it has got, and in this kind of a product the customer stickiness is very important, which the Sign DLM is right now having. So on the basis of these parameters, I find Sign DLM and Keynes Technology, although we know that Keynes is also into the EMS, it is also a EMS company. Both these counters seems to be good at this point of a time. So idea here is remain invested in both the counters.
Got it. Well, he's sitting on good gains also for both of them. So good on you, Birandeep. The next question, and we were just talking about the defense pack data patterns, is the next one. Now, viewer Ram from Hyderabad holding shares at 4,900. He's currently sitting on a loss here, Kunal. What can he expect? What's the stop loss and a target?
Yeah, I think for data patterns, what you should look at the weekly chart is that whenever it touches the 20 EMA, from there we have seen a sharp bounce into the stock. The current 20 weekly EMA is placed at 4196, so precisely 4,200. So that should be his stop loss on the downside. If that is triggered on a closing basis, then exit your long. Till that time, the structure still remains bullish. The immediate hurdle on the upside is 4,800. Once that is taken out, expect 5,200 on the upside.
Correct. Another one between Indigo and City Union Bank, Kunal. Tanvi, who's from Uttarakhand, is asking what's a better pick for the short term. So Indigo or City Union Bank, what's looking better now?
I think Indigo clearly depends on the crude oil. If there's a cool off in the crude oil, then probably you will see Indigo running up and giving the performance. But I think overall CUB looks much more stable at the current levels. One can be on the long side at the current levels. 220 is where it is currently trading. Keeping a stop loss of 210, I'm expecting the stock to go towards at least 230, 235 on the upside.
Also, Kunal, on Dixon Technologies, because Suman, who's from Kolkata, holding shares at 14,565, so close to the current market price. Today we are seeing a 1.2% up move. Her question being that if she should still continue to hold for the next 6 months. We've seen, of course, on the fundamental side of things, the mobile scheme come through, but any view on the charts?
I think on the charts also, last week only we had got a weekly breakout into the stock, so I'm expecting the momentum to continue on the upside. We have seen a good rally from the base of 10,000 on the downside, and 14,000 is where it is currently trading. So already a 4,000, 4,500 kind of a rally what we have seen on the upside. So there could be some mild swings that could come in, but overall the setup is looking good. I'm expecting the stock to at least go towards 15,500.
Let's now start the rapid fire round in this edition of the show. Astha as well as Kunal, you both know the drill. Keep your answers as short as possible. The first one coming through from Aditya on Acme Solar. He's holding shares at 380. He's asking Astha if he should buy more at the current price.
No, I believe that let the price fall more and then make any sort of entry. So buy at the 370 or 375 level is recommended.
Varun from Hyderabad, he's holding on to HDFC AMC at 2320. What's her view for the next 2 to 3 years, Astha? Can he continue to hold?
Sure. From next 2 to 3 years, we are quite positive on this counter. Although initial price target which we are setting for this counter is at around 2,900 to 3,000.
On car trade, Kunal, our viewer Sanjay, he actually wants to know if it's a good time to buy into this counter. Now it has seen a massive run up, back again above that 3,100 levels. Is it advisable?
I think dips would be a better opportunity. We have already seen a sharp run up.
Next one's on RVNL. Our viewer holding shares is Siva Kumar at 249 rupees. He's holding 2,000 shares. Astha, should he still continue to hold?
Yes, I think exiting at this point of a time may incur some loss to him. Wait for some more time.
G Shipping, and this is a counter we get a lot of questions on, Kunal. Our viewer Sobha holding shares at 1550. What's the next 3 to 6 month view? Can the stock come back to that price?
Yeah, I think definitely it could come back to that price as well. Overall, the larger term setup is very positive. Also, the company is likely to give a buyback, so that could also have a positive trigger on the stock.
Ashwini from Chennai wants to enter into Shriram Finance. Kunal, is that a better one, or can she pick any other NBFC?
I think Shriram looks good from the technical perspective. So she can enter at the current levels. Could go towards 1160, 1170 on the upside. Even from the NBFC space, I think AB Capital also looks good. One can enter at the current levels.
Astha, Satyan wants to know if he can buy into Parity Phosphates for a fresh long-term view. Would that be advisable?
Buying Parity Phosphate from a long-term view is advisable, but today it is already showing 7% rise, so maybe at the level of 150 is recommended.
The next one's on HDFC Bank, and we have to take one from Manohar, who's holding shares at 778. Astha, should he continue to hold his 200 shares?
Yes, HDFC Bank is hold from my side with a price target of 800 and more.
On Tata Capital, a similar space, Shankar, who's from Bengaluru, wants to buy 500 shares. Kunal, is this a good price to do so?
Yeah, I think yes, definitely one can enter at the current levels, can go towards 380 on the upside.
The next one's Anthem Biosciences. Chaudhary from Andhra Pradesh holding shares at 871. He has a massive investment actually of almost 3,000 shares into this counter. What's the view like, Astha? Should he still continue to hold this counter?
Yes, Anthem Biosciences hold from our side with a price target of around 950.
Got it. Well, that was the last question. Hopefully, Chaudhary there answers your questions as well. But Astha as well as Kunal, thank you so much for joining in, giving us your views across a whole bunch of stocks and spaces. But viewers, out of time on this edition of Ask Profit. Thanks so much for watching. As always, stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and former treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into the India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and...
Hi, good afternoon. Thanks so much for tuning in. You're watching India Market Close. We're coming to you live from the NDTV Profit Suzlon studio. My name is Alex Matthew and with me is Sharad Dubey. Sharad, it is not the most exciting close.
And this is actually the first Nifty monthly expiry under the cash effect. Yeah. So we actually don't know where we are going to stand, and the markets also, it's not favoring in the overall broader indices. Look at the declines around 1722 as compared to the advances, but very flattish kind of views coming in. It's a very narrow range.
But hasn't this been the case for the last 10-12 sessions?
Exactly. 3 weeks we can actually say that. And largely let's just pull out the Nifty gainers also if there is any, but a very narrow range of trend is happening. If you could just pull out the Nifty gainers and the losers as well, how things pan out. Of course, Adani Group stock, Adani Enterprises, the top gainer here. Max Health, Apollo Hospitals, the healthcare segment is doing well, but what's not working, Alex, is a little bit of concern coming on the IT names. We also have Grasim and Cipla also making it to the list.
And metal counters also losing a little bit of ground. Of course, SAIL or Steel Authority of India from that metal pack is the one exception to the rule. We'll talk about that in just a bit. But Coal India, HCL Tech, as Sharad has pointed out, ONGC losing about 1.3%. But no big losers, at least for the benchmark indices, and no big gainers apart from Adani Enterprises in trade today. The broader markets, let's talk about that. Pull up the mid-cap index, the intraday chart, and here too it's
good recovery.
It's good recovery, but barely any movement.
Exactly,
it's actually flat and a very narrow band here as well. Small cap index, pull that up, and let's see where that is here too. Just about 1/3%. We've come off from the high point of the day, which was pretty much at yesterday's close.
Exactly.
And yesterday we had gains of just about 0.2% for.
It's not convincing actually. You could say that. Let's just pull out the advanced decline ratio chart also, and that is where we saw the sell-off actually intensifying. And you will look at that difference which is coming in. So sell-off is slightly going up as well. And largely for the sectoral indices also, let's just get you the entire picture of what's happening here. Remember, monthly expiry is at play as well. Healthcare, consumer durables doing well, but in a very narrow range. A little bit of concern or a profit booking coming in the metal pack as well.
Yeah, because think about it, right? And we were talking about this yesterday, Sharad. In fact, if we still have that graphic for the gold price increase over the course of the last 1 month, it's not really changed very dramatically overnight. So this is prices as of yesterday, and we spoke about that yesterday. But the fact is that, Sharad, gold prices were at about $3,900 per troy ounce in the international market at the low point, which was about a month back.
Right.
And it's gone up to 4,600, 4,700.
It's almost at a 3-month high level. We saw the rally, we discussed the gold financing stocks as well.
So which is why it's had a bearing on metal prices as well, because commodities in general and metal prices have gone up, aluminium prices have gone up, and that had a bearing on metal stocks. But money being taken off the table and maybe some technical elements coming through here
exactly,
as well.
A little bit of inflation hedge, dollar index also coming down as well. So
okay.
That will be something to watch out.
Let's very quickly, just to close things out, pull up the sectoral heat map, or rather, this is sectoral heat map. Pull up the broader market stocks from the BSE 500 just to see the big movers. You have Vodafone Idea, which we'll talk about.
Very special research will be coming on that.
Yeah, we'll talk about that in some more detail. It's the biggest gainer in the broader markets. You have Godrej Agrovet, you have RCF, and you have a few of these fertilizer companies which we'll focus in on and tell you about why they're doing so well in trade today. On the other end, you have Hind Copper, of course, reacting to the offer for sale by the government, and I believe that that has been fully subscribed on day one itself. And this is, of course, the institutional component of the offer for sale. It opens
Alex,
for retail
lastly,
tomorrow.
there's a little bit of profit booking in the rice and the sugar stocks, which are overheated already from last week onwards.
Yeah, yesterday, KRBL, for example, gaining about 7.5–8%, and so money being taken off the table. We've got Akshay Bhagwat joining us this afternoon of JM Financial. Akshay, thanks so much for taking the time, and good afternoon to you. What is your sense of expiry days so far? It's been a pretty narrow range. It's been listless like it's been over the last 3 weeks. But what are the key trends that you're looking at?
Good afternoon to all. So, it is, I believe, the closing auction system effect, and this is the very first month of the FNO expiry that we will see how the FNO stocks react on the expiry day. My sense is, as we started the day, we are likely to close the day on a range-bound note. Important levels to note if you are a trader in Nifty is the support of 24,100. The belief is the support should be held by the end of the day. And on the upside, 24,200 is where the expiry may be likely. So that is the range, and this is the expected range, which we may continue to trade in the next 1 hour of trade.
And Akshay, what will be your technical picks for today?
Yeah, so I have two technical picks on the buy side. One is HDFC Life, which is showing support formation around the levels of 520 and seeing slight recovery. Although today it's a bit off, I think overall the technical setup hints for upside target of 577 to 605. This is a short-term positional target, and stop loss will be 532. The other trade recommendation is L&T Finance, where you can buy it at the current rate for potential targets of 340 to 350, and your stop loss will be 302 on this buying position.
Okay, all right. So those are the stocks that Akshay likes, and we'll talk about a few more buzzing stocks beyond what has already been spoken about. But let's talk about a pack as a whole that is reacting in trade today, and it is the first fertilizer stocks. The trigger is believed to be a statement that was made by Russian President Vladimir Putin, and he's talking about uninterrupted supply of certain materials that are important for the sector. But let's listen into what he told External Affairs Minister Jaishankar, who is visiting Moscow for trade talks. Listen in.
I'm not speaking only about energy. One of such matters is fertilizer supply. We are doing everything to ensure that this matter is resolved for the Indian farmers, for the Indian agriculture. We are expanding the supplies, and we are ready to continue to expand this.
Okay, so that's the word coming in from Vladimir Putin, and that's perhaps the reason why the stocks are reacting. But let's delve a little deeper into this, because there are multiple factors that are at play here. One factor, of course, has to do with the progress of the southwest monsoon and the implications that has on sowing and ultimately on demand for fertilizers. But Varsha joining in to put a spotlight on the sector of the day. Varsha?
Well, we all know that India is dependent
heavily dependent on fertilizers when it comes to importing of fertilizers, and hence Russia assuring India for supply of fertilizer without any interruption is a key focus here, and hence you're seeing all the fertilizer stock are buzzing. Now, if you see, Russia has assured uninterrupted fertilizer supplies to India, and this assurance comes despite disruption which is being caused by West Asia crisis. Now, let's see what Putin message is to India. Well, he says that Russia will do everything possible to meet India's fertilizer needs, and this is ready to continue increasing fertilizer supplies if required. So this statement has created buzz when it comes to all the fertilizer stocks. Now, when it comes to support for Indian farmers, Russia says that supplies will be maintained for Indian farmers, and the focus is on supporting India's agriculture sector. Now, what triggered the rally? Of course, the market reacted positively to supply assurance from Russia, and this ease concerns over fertilizer availability amid global tensions. Now, onto the India-Russia ties. If you see, fertilizer remains a key pillar for India-Russia economic ties, and hence both countries have discussed expanding economic cooperation. So this is the reason why you're seeing all fertilizer stock which are trading and up today, almost up 7 to 8%. You take Chambal fertilizer, RCF, or Paradeep phosphates. All fertilizer companies are in focus as of today.
Thanks a lot, Varsha, for that. I will just do this discussion of this fertilizers more, but just let's mark what's happening here. Nifty's market is off lows here, a significant recovery coming in. Let's show both Nifty and Nifty Bank from the lows. Remember, today is the monthly expiry, and this is the first time happening since CAS implementation is also there. Nifty Bank also showing a recovery, but not as much as how much we are seeing in Nifty. And let's just pull up Sensex also. We're seeing a good momentum happening here as well. Akshay, a quick technical check. Right now there's a good up move happening. Any reasons for this?
So not much reasons actually. Now the FNO stocks will actually start moving with 1 hour to go for the CAS, the closing auction system. The option premiums have not depreciated much throughout the day, and there will be some bit of volatility as new positions, older positions for the month of August will be closed and will be rolled over to the September month. Hence, you are noting some bit of volatility in the market now.
Understood. Okay. All right. So that's the reason why you're seeing that spike in the benchmark Nifty 50 currently very close to yesterday's close. We've got Sunny Agarwal joining us, head funder at SBI Cap Securities. Sunny, I wonder if you heard the conversation that we just had on fertilizer stocks, the fact that the entire raft of those stocks is up. The trigger is believed to be the statement that Vladimir Putin made about uninterrupted supplies to India, and that's being seen as positive. But how would you view the pack as a whole? And thanks so much for taking the time and speaking to us today.
Yeah. Good afternoon, Alex. Good afternoon, everyone, and thanks for having me on the show. I think, yes, definitely. I think in case there is an uninterrupted supply from Russia, I think at least what I understand is that urea, which is a basic fertilizer, that is something which India is heavily dependent on, and that is one of the largest consuming fertilizer products. So, persistent supply at least augurs well from an agriculture point of view. But when it comes to equity investment, what I believe is that rather than focusing on India player, what I feel is that guys who are dependent on non-subsidized kind of products, so companies like Coromandel International, in case the overall environment is positive, and in case the input material softens going ahead, so companies like Coromandel, Deepak Fertilizer again is another stock which we feel can deliver a consistent earning growth. And another stock which we like from this pack is on herbicide, fungicide is Dhanuka Agritech, where we have seen the challenges during the last fiscal year. Although challenges are not going away soon, but what I feel is that in terms of valuation, at least risk reward is favorable. So rather than participating on in the subsidy-based fertilizer pack, I think non-subsidy pack is relatively well off from an investment perspective.
All right, that's the view coming in, especially on the fertilizer pack as well. But Akshay, anything in the chemical segment also? Because especially on the positional front, we have seen a lot of stocks moving. The numbers in the first quarter and Q4 are also good. So positionally, anything which is looking good for the chemicals, especially on the charts on the weekly or the monthly basis?
So right now, in the cash segment, RCF, which is Rashtriya Chemicals and Fertilizers, has seen a bounce back from its trading support of 120 in the last couple of days. Today, the momentum is good, led by the volume support, and this technical support, which bounce back has seen, is pointing towards potential trading upsides till 135. So you can cash in on this trading moves till 135 on RCF with stop loss below 116.
I'm just wondering, Akshay, how you would trade, if at all, any of the heavyweights on the benchmark. Because if you look at your HDFC Bank or you look at a Reliance Industries, then they've been actually pretty subdued. Even in market today, you have HDFC Bank that's down about 0.8%. Reliance Industries, of course, part of the reason why you've had a recovery in the benchmark towards the end, it's up from the low point of the day. Still trading with cuts of about 0.33%. But would you stay away from the heavyweights at this moment and go hunting in the broader markets?
Absolutely, Alex. I agree to what you say. The current market conditions are such that the price momentum and the volumes are very low in heavyweights, especially if you look at the names which you mentioned, HDFC, Reliance. These are all been price laggards. They have been sideways, and quick money and fast money is what the markets are looking for. If you look at some of the recent IPO listings, there was fabulous listing gains in many of them. Also, the small and the mid-cap space, the selective stock names have been performing excellent short-term trading parameters. So the money flow is being diverted to these names, and heavyweights have taken a backseat. So I believe that is the flavor of the market right now, and it makes sense to be with what the market is saying. So right now, I think we should give heavyweights a miss. When the momentum returns back, we will be back in the heavyweight game.
All right, our discussion moves to defense space also. Raksha Mantri has approved transfer of technology of DRDO developed missile systems to Indian defense industry to bolster indigenous manufacturing. Now, this impact is negative for Bharat Dynamics, as this will increase the competition and would pressure on the margins as well. But on the other hand, it is positive for BEL as they enter this domain with private companies tie-up. Apollo Microsystems already has approval some time back to manufacture caliber missiles as well as important torpedoes and rockets. Solar Industries, Adani Defense, Tata Advanced and Bharat Forge, existing tie-up they already have with Israel's Rafale for subsystems of missile, and even L&T has an existing tie-up with European company MBDA, and small cap NIB also is having a manufacturing rocket and missile launcher system as per Incred's report. Akshay, any good momentum can be played in the defense stocks, because we see chart wise there is a good volume build up happening. It's a little bit of consolidation at play as of now, but any candidates which we discussed right now where we think there can be a good risk reward bet?
I think HAL can be one good candidate from the technical perspective for a good risk reward bet. The stock did see a strong breakout few trading sessions back at the levels of 4,800. After that, you have had a sideways move where momentum was lost. But today, again, the support or the breakout levels are being revisited. We are seeing bounce back intent on intraday price charts, and 4,800 is a good short-term trading bet from a risk reward perspective. So Hindustan Aeronautics can be one trading bet which you can consider buying at CMP. Stop loss should be at 4,700, and recoveries from the current level can see revisit of levels of 5,200.
You know, one of the stocks that is very avidly tracked and so
most retail owned as well.
Most retail owned. It brings back memories of, if you've tracked it for some time, then there's a very popular jingle.
You need to sing that.
Do I need to sing it?
Yes.
You and I
in the beautiful world.
Not bad. So,
okay.
Sharad has a brilliant singing voice. I wonder what Samit thinks about it, because he's joining in to talk about why Vodafone Idea shares are at a 2-year high, 15 rupees. Samit, if Sharad singing didn't bring a smile to your face, then I guess the price of Vodafone Idea would.
Well, yes, a lot of retail investors would be smiling who have been invested in Vodafone Idea for quite a long time. And that is clearly reflected. The stock is up around 7.5%, trading at its 2-year high. The stock is literally up 77% so far in this financial year. Now, what could be the key reasons behind this rally that we are seeing when it comes to Vodafone Idea? Firstly is the fact that they have been able to secure some of that debt raise from SBI, and given the commentary that has come in from management on the conference call, they are progressing well on this debt raise that they are looking to do from SBI and a consortium of banks. So that is one positive news. Apart from that, the capital expenditure when it comes to Vodafone Idea has been on an increasing trend. Now, why is this important? Because more capital expenditure will be able to improve the network for Vodafone Idea, and thereby they can get in more subscribers going forward. Promoters have infused funds. That's another positive news. And then there is the news of Jio IPO coming up. So some valuation catch-up is also something that could be playing on cards for Vodafone Idea at this point of time. And then it has been over 3 years that the industry has not yet taken a tariff hike, and Street is expecting that there could be soon a tariff hike announcement that could come in the telecom sector. So that is another positive news which has been leading the rally for Vodafone Idea of late. Now, if you look at the stock price move, it has been quite strong. In August 2025, the stock was trading at around 6 rupees. Since then, it has moved to 15 rupees so far. So in the last couple of years, it has literally, in the last 1 year, in fact, the stock price has more than doubled for investors. So anyone who has been able to catch the shares at lows has been smiling in trade today. But do remember that there are risks that are still pertinent for Vodafone Idea. Firstly, because the losses that still continue for Vodafone Idea at a higher rate. The free cash flow is still lower for the company, and despite the couple of fundraisers that we have seen in the past and 3 tariff hikes and multiple debt conversion into equity, Vodafone Idea's financial continues to struggle. So there is no clear history of a turnaround that we have seen for Vodafone Idea after a fundraise. So that could still be a risk for the company. They also have a spectrum repayment that is due over FY27 to FY29, and the amount is nearly 46,000 crore rupees. And so far the company is yet to see any meaningful customer additions. So again, this could be a risk for the company because they are doing this capital expenditure, but meaningful customer addition is still not happening for the company. And lastly, they had mentioned earlier that they will not take the first move when it comes to tariff hike, and they'll wait for their peers to do it. So the timing related to tariff hike is still not known, but the street is expecting that there could be a tariff hike coming in. But as of now, it is not known. So that could again be a risk for Vodafone Idea.
That's a good point. Samit, thanks so much for highlighting all of those points to us. I guess to a certain extent, the one thing that is moving in favor of Vodafone Idea in the wait for a tariff hike is that they've stopped hemorrhaging and losing customers as quickly as they were before.
But remember, the customers which are coming in, they are not from the mobile segment, they are from the point of devices segment, which Samit actually taught me. So there's a slight misconception, but nevertheless, 6, 9, 12 and now 15.
15 rupees.
Interesting.
The question is, should you go out and buy it? If you're holding it, should you continue to do so? Sunny, the question to you. Samit has highlighted the risks and the potential reasons why the stock is moving up. What is your perspective?
Yeah, Alex, as you rightly pointed out, 3 challenges which we have seen. Taken care of. ARPU has started moving up. So even in this quarter, we have seen that ARPU jump was significantly ahead of its peers, wherein peers have reported kind of 1 or 2% kind of quarter-on-quarter growth in ARPU. Again, that Vodafone has reported close to 8 to 10% growth in ARPU. And third, there has been some room which has been created so as to mobilize the fund. Vodafone can mobilize the fund and deploy across its network to boost its capacity, and that can lead to better services. So I think more of a turnaround play. If somebody wants to bet on a high risk, high return kind of bet, definitely Vodafone can be some portion of the portfolio can be allocated to Vodafone. Just a caveat, even if the stock price is 15 rupees, one has to keep in mind that the market cap is closer to 1.7 trillion rupees. So it's a large cap company. And in case the company is able to deliver a 3x kind of cash flow guidance, which over the period of next 3 years, I'm definitely sure that the rating is on the cards for Vodafone.
I was going to offer to get you to sing if you were interested, Sunny, but I think the network is a little patchy, so we're gonna have to maybe put a pin in that. But let me go across to Akshay. Akshay, what's the view on Vodafone Idea on the charts?
Yeah, so on the charts, we are testing a resistance level because if you recollect in June, mid-June, somewhere 15.25 was the point from where we corrected all the way till 12.7. So this is an intraday or a resistance which is valid till tomorrow. It's only a question whether you buy fresh or not. If you are a BTST trader and we are at resistance, that is the answer. But if you're a positional trader with a 1 month plus holding perspective, then you continue to hold. Overall targets are working till 18 to 19 on the upside from a positional perspective. So hold is the call from a positional perspective. 18 to 19 will be the target area you can look forward to.
Price of Vodafone Idea 18 to 19, hold is the call if you're holding, have this stock. But moving on, we are joined again by Somit from the chatter from the dealing room. And Somit, a lot of buzz coming on flows and news. What have you got?
Well, a host of stocks that remain in focus. Firstly, there are three of them: Bharat Electronics, PB Fintech and Shriram Finance. Now, dealers are indicating that there are buy flows on DI desk in all the three counters and delivery volumes are expected to be on the higher side. On the flip side, there is Reliance Industries and Tata Steel. There are some sell flows coming in on the institutional desk. Both foreign and domestic institutions have been selling this counter at higher levels in trade. For Mankind Pharma and Shadowfax, dealers indicate that the last leg of selling is happening right now, and the selling is expected to get over soon, and the stocks could bounce from the current level. So keep an eye out for Mankind Pharma and Shadowfax. For Imami and Ikra, there's a buzz of a potential buyback announcement that could come in both the counters. And when it comes to Gujarat Themis, there's a buzz of a potential fundraise via QIP that the company could announce very soon. And lastly, when it comes to Northern Arc, there's a buzz of a potential block deal that is expected to happen very soon. So keep an eye out for Northern Arc as well in trade.
Got it. Okay. All right. So, by the way, markets have come back from the low point and they're holding at this moment the benchmark Nifty 50 very close to the flat line. In fact, it is at the flat line, completely unchanged at this moment from yesterday's close, 24,223. It did make a bit of a comeback in trade yesterday as well in the last part of the session, and it remains to be seen how exciting the cash session is. Akshay, any guesses as to what the action in the last 15 minutes of trade for F&O will yield, or actually 25 minutes?
My guess is that it should be more flat. Yes, there may be action in terms of price move in stock specific names, but index per se, I think the move should be limited. 40 to 50 point upside is what I'm looking in the cash around 330 on the upside from the current levels.
All right, so we are seeing a good recovery happening as well, and largely it is flat right now for Nifty and Nifty Bank, but nevertheless a very strong recovery in the last 30 to 45 minutes.
We should talk about crude as well.
Exactly, and the number is 90, right?
It's less than 90.
It's less than 90,
it's
right?
fallen below 90 at this moment. So let's pull up crude. Brent crude, remember, has been a bit of a fulcrum on which the Indian equity markets has shifted. And so therefore, on account of the dissipation somewhat of the geopolitical tensions, of the latest that we told you about this morning is that the US has talked about using
and Alex, the thing is OMCs and all also, we can just get those also. ONGC, Oil India, is there any reversal at play? We can have a look at these stocks as well. And crude sensitives, Alex,
sure,
you would say that.
But the point that I was making is that the US is now talking about financial sanctions against Iran as opposed to using kinetic warfare. And while Pete Hegseth, who is the Secretary of War, has made certain statements about using kinetic warfare if required, if you have Scott Bessent, who's the
literally declared a
Treasury
war.
Secretary, who's talked about the use of financial sanctions, then it means that perhaps you have a situation where you might not go back to kinetic warfare, which is positive for Brent crude.
And maybe that's why it's falling as
So
well.
Brent
It's
crude
below that 90 mark, Alex. That's a very important mark to actually track as well. Sunny, I just wanted to get your views also in it. Crude sensitive still very elevated for the second quarter. How do you see this playing out? Where the impact more happening?
Yeah, coming to sensitive, I think one thing is very pretty clear that crude is likely to hover in the range of $70 to $90. So the moment we see the crude breaching $90, there is an immediate impact on bond yields across the globe, and there is a clamor to ensure that crude goes back to below the $90. So I think in terms of earnings, I think most of the companies have ensured that either in the form of price hike or cost optimization, any pressure on account of higher crude and crude derivatives taken care of. So what we believe is that predominantly one segment where we feel the impact was prominent was building material. So that segment has stood out very well even during the Q1, and as the construction activity pick up in the second half of the year. So building material is the one fact where we feel it's a good opportunity in case there is a volatility over there. Companies like Kajaria or Greenply or Style and such kind of companies. And at the same time, paints, we feel that the most of the negative impact on heightened competitive intensity, and at the same time higher crude oil prices and crude derivative prices have been taken care of. So within paints, what we believe is that a smaller player like Indigo Paints or Birla Opus through grassing can be participated from a mid short to medium term perspective.
Fair enough, and there's a minor, or you could say a better recovery coming in, especially in the mid-cap and small-cap indices. Let's just get you the Nifty mid-cap indices and the Nifty small-cap indices to see where the recovery is there. And yes, the recovery is much sharper as compared to Nifty, Nifty mid-cap 150 and even Nifty small-cap 250 index, both of them doing well in the trade as well.
I'd also like to take a look at the advanced decline ratio to see if it's shifted from the start at 230 or so. It's narrowed.
It's narrowed, yes. Last 20 minutes, it has improved. And of course, we will see a little bit of volatility as there's a Nifty monthly expiry as well. But let's pull out the chart of Hindustan Copper also. The stock is under pressure amidst the offer for sale in the company by the government. Jasmeet is here with the latest subscription numbers. And remember, today is only for non-retail. Jasmeet.
Well, sure. Thank you for that. As rightly said, the overall subscription part of the business is seeing a good traction. We do see the stock lagging in trade, but the subscription data as of the current time, as of 2:30 p.m. today, the overall subscription of 3% has been oversubscribed by roughly 1.38 times. Further, to open up the green shoe option, the decision will be taken today post 5 p.m. and then we'll have a better clarity if they're going ahead with the additional 3% of offshoring. Now, if you look at the other key highlights, the overall OFS has come in at 514 odd rupees, which is a discount of 10 odd %, which was a right price given the overall subscription has reached that mark by before the day closes. Now, if you look at the stock performance, the stock has rallied quite a bit in the recent times. It's up nearly 120% in last 1 year, and after that we are seeing this OFS coming in by the government. But over last 6 months, that's something concerning for the stock, given it has underperformed and has been flattish. So far, the latest update shows the subscription has been at 1.8 times, but we'll get more details later once the market closes post 5 p.m. if they'll be going ahead with the green shoe option.
Jasmeet for that, and yes, institutional participation seems strong for this OFS. But Sunny, tomorrow is the day for the retail. Should one participate in this OFS?
Copper prices are
completely lost your audio, Sunny. I'm going to try one more time. Can you repeat what you were saying? No, I don't think that we have that. So we're going to try and get back to what Sunny was trying to point out. By the way, this morning, NDTV Profit's managing editor Tamanna Inamdar had a chat with the secretary of the Department of Disinvestment, in fact, DIPAM secretary, Arunish Chawla. Listen into what he had to say.
Government has hit the ground running on disinvestment with 52,000 crore rupees already mobilized. We're talking about it now with Mr. Arunish Chawla, the DIPAM secretary, speaking exclusively with us on NDTV Profit. Mr. Chawla, thank you so much for your time. And I must say that the year has already started with a bang. Tell us a bit about Hindustan Copper, because the biggest being LIC, of course. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
Thank you very much. Team DIPAM has hit the ground running, and everyone has worked very hard to make market operations a success. And this is in line with Prime Minister's vision of sharing the national wealth with, ordinary investors, minority stakeholders, and citizens of India. And we are making sure that they get a good deal, and they also make reasonable profits. And the public enterprises stand ground as beacons of fairness in the markets, in terms of their sustained investment plans, sustained growth, and fair dividends to the investors. In light of that, government has announced an offer for sale for Hindustan Copper today. The offer will be on the markets today and tomorrow. We will be offering 5.8 crore shares under this offer. And as you can see, the market prices have held up. And the response has started. People have started coming in. Today, the institutional investors will bid. And tomorrow, we will allow the retail investors to bid. We have kept aside 10% exclusively for retail. And we would encourage small investors that this is an opportunity for you and you must make the most of it. Hindustan Copper is a prized stock. It's a valuable stock. And this may be the last OFS because we will now bring it down to 60% and then hold it there for its capital requirements.
Okay.
But this is a great opportunity for investors, and particularly the retail investors should not miss this opportunity. Sorry.
No, please complete your point, sir, and then I'll come in.
Okay. And Hindustan Copper, has a good futuristic investment plans. It produces copper, which is valuable for our economy, for our supply chains. And we should not be driven by short-term quarterly profits, but we should look at what their medium-term performance is and what their long-term vision is. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards. I will leave the viewers with that information and encourage everyone to make the best of this opportunity. Over to you.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज हमेशा आपके साथ.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना.
स्पंदन एक पोर्टेबल ईसीजी मशीन है.
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है.
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
3 decades of watching the world change. Of asking the questions that couldn't wait.
Hello and welcome back to India Market Close, and Stock in Focus is signed. Important movement coming in the stock itself. We can pull out the intraday chart for signed, especially after the impact coming in from its analyst call or the investor day. Joining in, we have Jasmeet with us. Jasmeet, what are the key takeaways from this?
Well, sure, thank you for that. You can see Sign currently trading at the day's high level. This comes after the investor day takeaways. What the management gives out is a strong outlook for the future, while the management also states that they are currently moving from the project-based work to more of delivery kind of work from here on. That's why the coming years will be key crucial for the management. They also mark out that they're using AI increasingly across the engineering segment, which is seeing good traction and also helping management to work around the margins. If you look at the third aspect, they say that the semiconductor is something, a new theme for the company, which is gauging a lot of traction at this point in time, while the company also on the other hand is planning for the smart meter chips, and this comes to reduce the dependence on the China plus one strategy, which will be a key positive for the company, which will be focused going ahead. Further, if you look at the focus area, the management also states that there will be a high focus area across the data centers, the AI and the defense and the high-tech sectors from here on. And lastly, they also state that the overall deal wins remain strong for the management, while they also improve the growth visibility from here on. But if following up with that, they have also given the growth plan, what they expect going ahead. While they state that the FY26 was more of a stabilization year for the management, which they've achieved in the current year. Further, they also state the FY27 is something the focus will be on the bigger deal wins and also on the newer markets where they would want to expand. Further, they also state for the FY28 that the overall AI could further improve the management's growth strategy going ahead. If you look at the margin target which they have given, they want to stay in that 16% EBIT margin range and further grow from there. They also expect the overall TAO, which can be closed in the Q2 of this current year. So all in all, we are gathering quite positive outflows for the management in terms of the product launches and also the market they're targeting going ahead.
Okay. All right. Thanks so much for getting us those details. We're joined on this side of the program by Rahul Sharma of Equity 99, as well as Vineet Polinchkar, Head of Research at Ventura Securities. Thanks so much for taking the time. Vineet, I'll come to you first. On this update on Cyient, what do you make of it? Because it's not a stock that has done very well, particularly on the earnings front, right? So what would you say about the con call highlights?
So I think they're making all the right margins, which should energize the street. And guidance at 16% EBIT with new geographies and new verticals that they are stacking up and where things are moving quite nicely. I think we could expect substantial upside coming from there.
Okay, I just want to mark out, and this is data that came through just a few minutes back. The OFS, the offer for sale of Hincopper, is actually fully subscribed. On day one and before the closure of the session, it is actually over 1 time, and that includes the green shoe option as well. The question that a lot of people watching this are going to have is, Vineet, the retail segment opens tomorrow. Should you subscribe to the retail segment of Hincopper?
Yes, definitely. I think copper is a very strong play on the hard currency pack, and a lot of their projects are going on stream, and we will see very strong earnings growth and revenue growth play out from here. So if you're getting and with the the street having been oversubscribed for the institutional side, I think the retail will also join in on the bandwagon. So definitely this stock will see a pop, and we will see some kind of upside stream through again.
Rahul, just stay with us. Interesting development has come in TCS. They have bagged a 1.25 billion euro AI deal from Porsche and will also acquire Porsche's MHP consulting unit. So how is the street looking at this deal? Jasmeet is joining us to tell us an interesting bulls versus bears case on the stock.
Well, sure. Thank you for that. The company has done one major transaction. Alongside the transaction, they have to do two major things. That's one is to acquire the MHP arm, and the second one is to also make the center of excellence. But now we have the entire bull and bear case. The stock did start on the positive front in the morning, about 1.5% not gain, while currently the stock is down about 1%. Let's quickly understand the bull and the bear case of this particular transaction the company has done. The bull case, this does expand the overall clientele, gives the access to the European geography, helps the company also win more large deal wins. That's the bull case. But on the other hand, the bear case, well, the overall deal comes and the street's concerned that this acquisition is basically masking the organic growth story of the company, which is slowing down. And currently, they're just buying out more growth so that they can increase the top line. That's what the one side of the street's telling about the entire acquisition. But as per the management, this is quite positive. If we look at the next bull case, the overall acquisition remains quite reasonable in terms of the price they have paid for is roughly 0.43 times the CY25 sales. But on the other hand, the bear case is the revenue of the acquired entity, that's the MHP, has been reducing year after year, and it's down about 11% in the calendar year of 2025. If we look at the next bull case, the overall MHP transaction will contribute roughly 1.25 billion. That forms about 2.5% of the FY28 revenue for the management going ahead, which is a good jump in terms of the revenue that they can see, the good improves the visibility. But on the other hand, the bear case, the acquisition of this entity comes on a lower margin. The margins of MHP is lower, and that can be concerning for the company, given it might impact that high margin business of TCS at 25%, and there can be some sort of margin dilution. If we look at the next bull case, this does strengthen TCS European hand and also the German market of automotive consulting. But on the other hand, we have all known that the European as a market has struggled over last few quarters. Companies like KPIT and Tata Elxsi have also come out and given their views that the European market is still recovering. So the growth story from here on becomes a key concern, and that's the bear case. We have also pulled out the overall buy calls for TCS and other companies, and we would like to compare of how it has moved from here on since the Q1. If you look at the buy calls, TCS at the highest with 60%, followed by Tech Mahindra at 63% in terms of the expected return from here on for TCS at 6%, while for Tech Mahindra it's 2.4%, and something like for HCL Tech and Wipro, it's negative 3% of growth for next year. That's what brokers is penciling in. If you look at the forward P for all the companies, it's between that 15 to 19% range, which remains quite below the 5-year and 10-year average.
Thanks a lot, Jasmeet, for that. Valuations seem on the cheaper side on the long-term averages. But getting in Rahul also in this space, IT stocks, is there any kind of a risk-reward ratio angle here? And if yes, positionally, any call here, Rahul?
Thank you for having me, Sharad, here. See, as far as IT as a pack is concerned, I am seeing the month till data for now. Few stocks have done really good, telling it the names like Coforge or OFSS or LTM. These stocks has done really good. Out of this pack, I think OFSS is somewhere I can see the charts on the positive side. It has a resistance of 11,830. As soon as it crosses these levels, I think 12,500 or 13,000 mark can be reached in OFSS.
Rahul, what will be your technical picks for the day?
Yes, so technical, as far as the technical analysis is concerned about all the market scenarios I'm witnessing right now, few stocks are doing really good. First will be the Laurus Labs. Excellent chart structure. The target levels coming here is 1950 to 2000, and stop loss should be kept at 1800. Second selection is Shriram Finance, which is again a beautiful chart structure. 1155 and 1170 is the levels I'm watching for, keeping a stop loss at 1111. Third is SAIL, which pack is already doing good. 192, 194 are the levels for the target, and 180 will be the stop loss.
3 minutes away or less than that 2 minutes away from the close of the cash market for F&O, and we've come back quite significantly from the low point of the day. How sustainable is this, and what does this indicate for the next series? Let me ask you that very quickly. You've already given us your view, Rahul, on the charts perhaps, but what's the index strategy for the next series?
See, first of all, Alex, I think a move in heavyweight bank stock during the auction can really influence the final index closing value. So that means the bank nifty that looks stable around 3 or 315 can potentially experience a different final settlement environment. And I would reduce my position size substantially on the day like this. Being right about direction but entering at wrong time can still produce a poor trade because option premiums can move violently. So I think wait and watch strategy would be rather good than rather going for play and then regretting about it.
Got it. All right. So wait and watch is the view. FMCG stocks have been under pressure, and this is understandable considering that there's an expectation that the consumption trends might take a bit of a backseat in the near term, at least because of expected cost pressures. Who knows what the implications of crude oil prices at $90 or thereabouts will be on
and Alex,
pricing.
there is also concern on management churn which is happening.
Yeah,
A little bit of concern is coming in, and maybe the valuations also, if you have a look at it, they are below that 5-year average level marks as
but
well.
the index has come back pretty strongly in line with what you've seen with the benchmark.
Exactly, and that is where the bullishness is also coming in. Earlier today, we spoke with Abnish Roy. He was the executive director at Nuvama Institutional Equities about his top picks in the FMCG space as well. Let's listen into what he had to say.
So two buckets, good question. On the 4-5 names which always do the highest growth in the respective segment, I would say that fresh allocations should not be done because those are sitting at very high multiples. So you should ride out the Q2 growth, but not put fresh allocation. In terms of fresh allocation, I think some part can be definitely put in QSR because this is the first quarter recovery, and Mrs. Bector's, which does the back-end manufacturing for many QSRs, they have really highlighted that this is a new trend, and generally in consumption, new trend continues for a year. So that's why 3 more quarters of QSR good performance should continue. Of course, we have to see what the regulator like FSAI or Tukaram, etc. are doing, because that can put some impact on the customer sentiment, right? If daily some kind of an issue is being found in restaurant or this pizza outlet, that burger outlet, I will be watching that. But currently that seems to be more of a concentrated news rather than the pan-India news.
Okay, the F&O segment is shut now in the cash market, and we've ended up at 315 at the high point of the day for the Nifty 50. Pull that up on the screen, and it's 24,260 on the chart. So a pretty sizable comeback from the low point of the day. As much as 0.6% gained for the benchmark Nifty 50 in just a 1 hour time frame or less. And that's what we've seen on the screen. Pull up the Nifty Bank as well, because while it's clawed back ground, it's not gained back as much as the Nifty 50 has. It still trades with cuts of about 0.1% or thereabouts. And so therefore, let's see how the cash session treats it, which will start at about 320, at 320 exactly. Meanwhile, you have the broader markets that are now the mid-cap index trading with gains of about 0.2%, and small-cap index trading with cuts of about 0.2%. Bulk of these stocks, though, continue to trade in the cash market.
But Alex, you see most of the large caps also, they are moving pretty strong. Earlier, Rahul was mentioning about Shriram Finance and Laurus Labs as well. But looking at the banking names, if you could just pull out the Nifty Bank Index constituents also to see whether the momentum is there, which stocks are actually making it lift from the lows itself. If you could show the constituents, we get a clear picture also. And today itself, there was a little bit of sectoral churn also, Alex, in the PSU banking names. Vineet, do you think there is positionally a good setup coming in for the banking names? You know, because a lot of positive things are happening and in increasing interest rate scenario, do you think the private banks will have much more up move from here?
Yeah, so I think HDFC Bank is pretty cheaply poised, and it could do well. But I expect this move to play out over a couple of quarters. Apart from this, we like Jana Bank, which has seen very good growth in the previous quarter, and we expect the same to play out. RBL Bank should also do well going.
Okay. Buzz though in the market of a potential acquisition, are you taking that into account, Vineet, when you speak about Jana Small Finance Bank?
So, I think that, at the right price, I'm sure that, the management would flip the trade. Because we've seen the way how, international players, heavy-weighted muscle players are getting into the markets. And we've seen how Yes Bank, RBL, and other banks have also been, taken over. So with Jana, any kind of play happening out there, I would not be surprised.
Right, that's the view. But very interesting, recently listed company, everybody who's talking about it, Rashi Peripherals is in focus. So let's get that stock on the screen as well. Independent director Anil Khandelwal has resigned from this post, and of course some issues are there, concerns regarding the process integrity in the nomination and the remuneration committee, as well as the due diligence issues to a proposed acquisition undertaken by firms where two independent directors have held senior partner positions. Now, there are some concerns on the process integrity and board functioning, and the governance culture is not aligned with the standards expected from a listed company. This is coming in from the letter itself. The stock has cracked almost down 9%. A slight recovery is being made here. I just wanted to get in Rahul on this. Do you think there is a technical strength in this stock for a recovery here?
Well, Sharad, keeping aside today's trade, stock was doing really good because it was trading above all the important moving averages, and it was consolidating between 900 and 830 levels. Today, it has breached those levels, although recovery has been played out from the lows of 700. But I think we need to watch in coming days. If the stock goes above 900 levels, then only I think it will be a good trade as the technical charts are suggesting me. Below 830 levels, it will be facing more selling pressure.
By the way, we were just speaking about Jana Small Finance Bank, and this is a stock that Vineet likes, but they've just clarified on reports of stake sale by, or rather stake buy by Federal Bank, and they're saying that there is no material event that requires disclosure. They say that they evaluate various opportunities for growth. So essentially, it's not a negative, but it's certainly, they're saying that there is nothing to disclose at this moment. So they've essentially denied it at this moment. Let's find out about cement now. And this is something that has been a bit of a buzzing space because there is pricing action that has taken place in the month of August in certain geographies. Now remember, when you look at cement pricing and you look at cement volumes, you look at it in terms of geographical distribution, south, west, north, east and central. But there are updates in the south market, and we've got Ridhima joining in. She's done dealer checks. She's found out that there has been a price increase. Ridhima, what have you found out?
So cement prices have increased in the south zone for the states Tamil Nadu, Karnataka and Kerala. Now they've increased by rupees 10 per 50 kg bag, and Tamil Nadu cement prices have risen by 10 rupees in the wholesale space for their per bag, which is 50 kgs, and Tamil Nadu also is now priced between 310 to 315 after the price hike for their per 50 kg bag. Kerala similarly seen a 10 rupee increase in their wholesale price, and it's priced at around 320 rupees per 50 kgs bag. Karnataka also has seen a price increase of 10, and now it stands at rupees 320 to 330 for their 50 kgs bag. Andhra Pradesh and Telangana in the south zone haven't seen any price increase, and they're currently priced at 250 rupees per 50 kg bag. Now west, north and east as well haven't seen any price increase, so it's a select states in the South India which have seen the price increase, though East India has seen an invoice increase, but they've not really seen a wholesale price increase so far. Now Central Zone has rather seen a drop of 3 to 4 rupees. This is different from all the other states, and now it stands at around 310 rupees per 50 kg bag. The last price, if you remember, was increased in the month of April in Q1 on an average of 15 rupees per 50 kg bag. The most amount of increase came from the East India, around 27 rupees per bag. West, North, South saw 13 to 15 rupee increase. The prices are mainly increasing because of the input prices, which has gone up since April due to the Middle East and other global volatility factors, packaging costs as well. So the analysts on this have commented that they had expected an increase of 35 rupees to 40 rupees, and 15 rupees had already increased in Q1. So this is a welcome move as far as the price increases.
Got it. All right. Thanks so much for that. Vineet, let me ask you about cement and cement prices specifically. There's also the angle of the Mines and Minerals Act, which has certain benefits for a few companies with regard to limestone mining, right? And the cost that is paid in Tamil Nadu. I believe it was Ramco Cement. So what is your view on the space as a whole on cement?
I think, that we are underweight, mostly cement stocks. And we believe that there is going to be a lot of pressure in terms of margins. And there are all the issues of, mining licenses coming up for review. So we would tend to be very, very selective in this space. And I think the growth will also be a concern going.
All right. Speaking of that, fintechs are also doing well. Let's just pull out the stock of Paytm, PB Fintech as well. Paytm, you could say, are almost at its 4-year high levels, and stock is up 5% right now at the day's high level. Also, you can say, Rahul, your views on this? Little bit of profit booking is good here, or the technicals are suggesting further up move from these levels as well for Paytm?
Well, it's a beautiful scenario to see Paytm at like 1700 plus levels. Yes, definitely at these levels, it is looking little overbought, but still the room is still available. So the risky players can get in, or if at all you want to do a strategic move, then wait for some sell-off, then you can enter into this stock. I think on the upside, this stock has good potential to reach 1850 levels in short term. But one has to be very strict with the stop losses if at all trading, entering on the current levels.
Just flashes on your screen. This is coming from Bloomberg, where the US may return its diplomats to the Middle East region. And this is only positive from the perspective of the expectation that kinetic warfare in that region might well be behind us. And so from that perspective, if you have an easing of the traffic through the Strait of Hormuz, which is something that will be watched very closely from the perspective of India, then you could have downward pressure on crude prices as well, based on demand and supply trends that are currently prevailing in the market. So keep an eye on crude oil prices and the implications that would have on the Indian equity markets as well. The latest development is on your screen. US may return diplomats to the Middle East by this week.
Oh, that's pretty interesting, and we are coming towards the end of the trading session also. And for the F&O monthly rollovers, I would just like to point out 3 stocks which are having one of the highest rollovers going into the new series. If you could just flash those on the screen as well. Of course, Nifty and Nifty Bank, these numbers are expected to go up 73 or 75% respectively coming in. But these 3 stocks are where we are seeing the highest rollovers happening. Vari Energies at 96%, and Indus Stars and Nippon India AMC also, where high rollovers are coming. But this is the month where the volumes were slightly on the lower side, especially because of the cash effect which is undergoing right now as well. Rahul, any stock to, a quick stock pick for the next series going ahead?
I was just checking out the charts for Vari and Indus Tower as it is moving alongside the Idea stock is doing. So I think Indus Tower is quite interesting one, because the risk reward ratio is good. Currently on the charts, we are seeing 365 levels as a good support line. It has taken multiple times support on these levels. So the risk on the downside is very much limited, and I think if the stock crosses 400 plus level, it can create a massive upside mark till 440 or 450 levels.
Interesting. Okay. In the telecom space, we actually had a conversation about Vodafone Idea, but really the buzz seems to be about the potential for a tariff increase in that stock. Let's see where it closed 315 at. It must be up over 8%. Vineet, if you were to play the telecom space, would it be in the way of Indus Tower as the supportive infrastructure, or would it be with a telecom player, and if so, which one? You might just be on mute.
So I would clearly go with the telecom player, and my bet is with Vodafone. So I think Vodafone is my
Because the
player
stock
right
is
now.
up as much as 8%, Vineet.
Yes.
So therefore the question is why, one, and two, would it be something that you would suggest getting in at these levels, at 15?
See, so they just got a clearance on expansion, right? For the capex, getting the loan through with SBI and guarantees being given by the promoter group. So two things are there. Promoters invested a little while ago, and they're giving guarantees on their capex expansion plans. So that shows positivity and commitment to the growth from the promoter group. Third thing is, that if you look at the differential between all the three players, there is very little. There is nothing specific that they're offering. And between the three players, Vodafone is going to build out its, 5G volume growth play. And so I think that and, expansion and the operating leverage that plays out will be very, very positive for the company.
We're back to seeing a pretty sharp increase in the cash window. And based on the way that the benchmark has performed through the session today, a 70-point or 75-point nearly up move in that cash session is quite remarkable to talk about. It'll be interesting to find out which components of the benchmark Nifty 50 have caused this, because pull up that screen, you will see that the gap between the 315 close and the 330 close for the Nifty Bank is not as substantial. It's just about 70 points. So it's outside of the banking stocks where the impact is seen. The Sensex closing at 77,000, I believe, or it might just change from this point, but from what I can see on my screen, at 77,000 or thereabouts. I think you're yet to see the final figure for the Sensex. But let's talk about the Nifty 50. Let me go across to Sharad to find out what he's spotting in terms of what has changed the needle for the benchmark.
Well, this has been, Alex, a very important day, and this is the first Nifty monthly expiry. So the rollover impact is also there, and the adjustments, we are seeing a sharp spike coming in. This is the difference of almost 75 points. So Nifty Bank, not so much. Means like it might be a non-banking stock which has moved the indices and the needle as well. How things are panning out, of course, the change happening in Adani group of stocks as well. Adani Total Gas, we have mentioned about Premier Energies where the rollovers are on the higher side. And just looking at the setup, how things are moving, there are a lot of cash counters also giving us strong momentum. But Concor here and Hyundai Motors, that is where we are seeing a little bit of drag coming in. But if you look at the total setup, how things are looking at the cash effect, especially if you're getting the Nifty gainers, this is where the action is coming. Apollo Hospitals, Asian Paints, more buying coming in here. So Spike definitely coming in. These names. What's not working? Not so much of consideration right now because we are focusing on the up move as well. You should be looking at the 24,200 and even the 24,300 call and put options. That is where the action is happening. Open interest change is here. Put segment, these are the contracts. Also, let's pull out the 24,300 where the action is, and yes, this is where 1.32 crore contracts are there. On the other hand, call segment also reversals are sharp, but nevertheless we'll take it at the important 24,200 levels. We are closing much above that, and this recovery was not only in the cash session but also for the last 1 hour itself. Of course, the global sentiments also have improved. I have just checked the European markets, they are going up. Brent crude is coming down. Means like there is a geopolitical push as well, but remember the expiry impact is also there, and these are the rollover data as well going ahead into the next September series as well.
Important. So do we still have Rahul Sharma with us? Rahul, what do you make of the up move that you've seen in the cash window? And while you're speaking, perhaps we can bring back that data point on the key Nifty 50 stocks and the way that they've moved during that cash window. So there are a couple of pretty sharp moves. A 75-point up move to end at the high point of the day for the Nifty 50. 0.5% up move at the close. What do you make of it?
Yes, definitely, Alexi. As I said earlier, move in heavyweights stocks during the auction can really influence the final index closing value. So, rather like going for them between 3 and 315, it is very much difficult now. Potentially experiencing a different final settlement environment for the next series gets very difficult. About this Nifty 50 particularly, I can see like consolidation or compression, or rather I can say we are not trending, we are like into a coiling phase. Then till the time we are below 24,400 levels, I think upside 24,350, as we can see the closing near to it, 24,400 is the real test. So on the upside, 24,400 is currently the most important resistance.
Rahul, just a point on HDFC Bank, because this may well be the reason why you saw a bulk of that spike. A 0.5% change in the cash window for HDFC Bank and resulting in it closing down 0.2%, as opposed to the fact that it was significantly lower than that and proving to be a drag for the benchmark Nifty 50. What do you make of it?
Yeah, so again, it's a heavyweight, and I can see like lot of stocks during this session violently moving because the option premiums are also very much violent for today. So I think on a day like this, being right about direction is not the key, but entering at the wrong time can still produce a poor trade for the traders. Bank Nifty, it is at a crucial level, trading just above 50 DEMA today, and it can be breached anytime if at all this support has been respected from a long time. I think if it gets breached, then it will be a weak signal for coming days. So if this long respected 50 DEMA on Bank Nifty support is genuinely lost on closing basis, it would give a weak signal for the coming session, rather just an intraday sell signal.
Right. On that note, Rahul, Vineet, thanks so much for taking the time speaking to us today. Pleasure speaking with you, and speak to you soon. All right. That's the end of a pretty interesting trading session.
There was a lot of drama in the last 1 hour.
Yeah, it was. And Vodafone Idea, one of the big talking points today, is back at 15.
Yes, and of course, advanced decline ratio, look at it, there's a good recovery happening in the mid cap and the small cap indices as well. And that important level of 24,200 is defended. And not only that, it has gone up by that 24,300 levels as well.
Yeah, 115 points at the end of trade today for the benchmark Nifty 50, and quite a bulk of that coming through during the cash session. So that's going to be a talking point at the start of trade tomorrow as well. But do stay tuned. We're ending India market close on a bit of a positive note. Let's see what the rest of the day brings. From Sharad and myself and the team that put this show together, thank you so much for watching. Stay tuned. This is NDTV Profit.
Presented by Canara Bank. Together we can.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. और trust पूरी दुनिया का.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin hits $80,000 mark for the first time since May. Banks, regulators join quantum crypto transfer pilot. Bitmain buys $81 million in Ethereum, reports almost $15 billion in crypto and cash holdings. US Treasury proposes stablecoin licensing rules under the Genius Act. Well, if you are an Indian investor, you may already have familiar with buying shares, but how different is investing in crypto? Let's break it down. Crypto versus equity trading in simple terms. First, what are you actually buying? Now, when you buy a stock, you're buying a small ownership stake in a company, and if you buy shares of a company, you participate in its growth and can potentially benefit through price appreciation as well as dividends. With crypto, you are generally buying a digital asset such as a Bitcoin or an Ethereum, and you don't actually own a piece of a company. The value of the asset depends largely on demand, supply, and the market sentiment. Second, when can you trade? There is a very big difference. Indian stock markets operate in defined market hours broadly between 9:15 to 3:30 p.m. On trading days, it's largely weekdays, but crypto markets, they operate 24 hours a day, 7 days a week. That means prices can move even when traditional markets are closed. Third, volatility. Equity markets can certainly be volatile, particularly individual stocks, but crypto can experience much sharper price movements in a very shorter period of time. So a crypto investor needs to be prepared for bigger swings, both upward and downward. And finally, regulation and taxation. Indian equities operate within an established securities market framework with SEBI as the regulator. Crypto operates under a different regulatory and a tax framework in India. Remember, the virtual digital assets are subject to specific tax provisions. Now, this includes a 30% tax on applicable VDA gains and 1% TDS on qualifying transfers. Now, of course, this is subject to the applicable rules. So the question is, which one is better? There isn't a universal answer. Equities may be more familiar for investors looking for exposure to businesses and more established market structure, but crypto offers exposure to a different emerging asset class, but with higher volatility and different risks. So it's good to see crypto as an alpha to the portfolio, and always remember to diversify rather than keeping all the eggs in just one basket. So the key takeaway is, don't treat crypto like any other stock. Understand what you're buying, understand the risks, and invest only what you can afford to lose. As we remember, you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into the India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. it doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में, कमिंग सून ऑन NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and former treaties lies the true heart of our captainship, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World Aviksha.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Aviksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that gets you a snapshot in terms of everything that has happened, be it the trading day or news and updates from within the country and across the globe. But first things first, let's talk about the markets first up, because the benchmark indices, in fact, staged a very smart recovery with the Nifty ending above 24,300, Sensex also gaining over 200 odd points, and buying in select heavyweights is what you had coming in that helped markets really bounce back despite some of that volatility throughout the course of the session. And most sectoral indices, in fact, ended in the green. So when you're talking about pharma and PSU banks, those are the ones that were actually leading gains on the flip side. When you talk about energy and metals, meanwhile, they were slightly on the back foot. Moving on, let's also talk about fertilizer stocks that are in focus after Russia assured India of uninterrupted fertilizer and energy supplies as well. So the assurance is really coming in as the West Asia conflict disrupts regional supply chains and raises concerns over availability. The sector's rallied very sharply. When you talk about the early trade as well, and even when you talk about the end of the trade, about 11.4% gain coming in for something like a fact. And when you talk about Paradeep Phosphates or RCF for that matter, healthy set of gains coming in for some of those counters as well, even as the broader market or the rest of the market in fact remains subdued, minus that last leg recovery. Now the development is really following External Affairs Minister S. Jaishankar's meeting with Russian President and his key interlocutors as well, and the Russia assurance could really help ease some of those supply concerns. That's something that had all of your fertilizer stocks really buzzing, and that's the update that you're looking at when it comes to the fertilizer pack. Let's also move on and talk about Hindustan Copper that is under pressure, and that's after the government opened in OFS to sell a 3% stake in the state-run copper producer. The government has also kept an additional 3% green shoe option, taking the total potential stake sale to about 6%. Now the floor price, that's been set at 514 rupees per share at a discount to the previous session's high. Let's move on and talk about GE Shipping or Great Eastern Shipping as well. So not much of a gain coming in when you talk about this counter, but it was in focus after the company said that its board is going to be considering a share buyback proposal on August 27. So mark that date on your calendars to zoom in on this particular counter. The move could be really signaling the management's confidence when you talk about the business and even provide support to shareholders. However, some of the details such as the size, price, and even the structure of the buyback, that's something that will only be known after the board meeting. So investors, of course, watching very closely for the board's decision in the terms of any potential repurchase. Let's move on and talk about Reflex Industries that has bagged orders worth 33 odd crores from a Telangana-based entity. The contract covers loading and transportation of fly ash along with fly ash excavation. The orders are to be executed over a 120-day period. So this stock was in focus on the back of that. The win has strengthened this particular company's order pipeline and its presence, especially when you talk about the fly ash management business, where the demand is linked to industrial and power sector activity. Moving on then, let's talk about Sigma Advanced Systems that has extended its long-term partnership with Rolls-Royce through its UK arm in a deal worth about 1,600 odd crore rupees. 5% uptick is what you had coming in for this particular counter. And when you talk about this particular contract, it builds on a recently secured 3,800 crore Rolls-Royce order. The expanded partnership could really broaden some of the opportunities, and that is across aerospace and advanced manufacturing, while also providing greater long-term order visibility. Let's move on and talk about Aegis Vopak Terminals that has acquired an ammonia terminal at one of its ports as well, adding somewhere close to 36,000 metric tons of storage capacity. The new capacity became effective from August 24th, and the acquisition is really strengthening the company's liquid bulk storage footprint, expanding its capability to handle ammonia at a key port location as well. Let's move on and talk about Vodafone Idea that's in focus after the stock hits its highest level, in fact, coming in since September 2024. As you can see on your screen, 7.9% uptick and well below that 13 rupee level as well. When you talk about this particular counter, is really extending its strong FY27 rally at this point. The stock has gained around 77% so far this financial year, by the way. And the investor sentiment, when you just talk about that as well, that's largely improving on the back of expectations of a debt funding deal from an SBI-led consortium. Let's also move on and talk about Rashi Peripherals that's in focus after independent director resigned, raising concerns around some of those governance and board process issues. In fact, Khandelwal flagged issues with the nomination and remuneration as well. So that's something that you have to keep in mind, along with due diligence undertaken for a proposed acquisition, and that's also something that's been highlighted when you talk about this particular account. Or the concerns also involve two independent directors who hold senior partner positions at firms involved in the due diligence process. In fact, Khandelwal has raised some of those questions when you talk about transparency, process integrity independence and board functioning. So that's something that you're looking at, and the governance culture, in fact, has fallen short of expectations, is something that has been talked about as well. Let's move on and talk about Nomura retaining its buy call on Indian hotels with a target price of close to 830 rupees, seeing further upside from the proposed Oriental Hotels acquisition. You're talking about not much of a move coming in, at least as far as the stock is concerned, but the brokerages do remain quite bullish, expecting the deal to be EPS accretive, while additional cost synergies and asset optimization is something that are also talking about. And they're talking about how this could really provide another boost actually to the EBITDA. Nomura, in fact, has also seen the merger simplifying the group's holding structure, so potentially making the business more efficient and easier for investors to really access. Let's move on and talk about Jefferies, that remains positive on the NBFC space, saying that year-to-date stock performance has been driven more by earnings than valuation expansion. NBFCs have outperformed banks, with EPS and book value estimates seeing upgrades to about 1% thereabout uptick coming in. When you talk about this particular counter, and the brokerage is noting that price-to-book multiples have actually declined for several major players despite strong growth. Jefferies is expecting earnings growth and further EPS upgrades to support outperformance, even if fresh valuation re-rating remains quite modest. Its top picks include something like a Bajaj Finance, Chola Finance, AB Capital, or for that matter, Shriram Finance. Let's also move on and talk about Bernstein, that has retained its outperform call on something like a PB Fintech as well, with a target price of close to 2,310 odd rupees, so which is much higher than the current price that it was trading at throughout the course of the session. So highlighting its strong sales engine and somewhere close to 30 to 35% plus top line growth. So that's something